All right, ladies and gentlemen, I hope you're having a wonderful day. It is December 10th, 2025. We have the FOMC and the Fed, and it's actually kind of important. Not only are we going to get the dot plot, not only are we going to get a lot of updates on what is going to be happening with rate cuts in the plan forward, but it's going to be one of Powell's final events. What's going to be happening on that? But yeah, either way, what's going to happen here today with Powell, there's going to be a couple of different things, but realistically, the dot plot and everything that we're pricing in for next year, there's going to be some importance there because now all of the other Fed members, we're going to talk about this, their value goes up. And now with this being one of Powell's final events, there is the possibility that you are going to be getting a lame duck Fed. I mean, people are debating that right now. There's only a few other meetings, but remember, we talked about this last time, and I think Powell got a little bit mad because he came in and surprised a lot of people. But other than that, this time around, the market is really ready for it. They are prepared, and we're going to see where it all takes us. There was a couple of events here in the morning, talks about Baba and the NVIDIA chips in China. We even had Meta. They're about to get rid of their open source AI stuff, which is kind of sad. And then there was a few things with gold and silver, and we're going to talk about volatility, and there might be a potential for a front run here before everything begins. But Chatadonia, game time. And here at the Stock Market Live, before we do anything, before we chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people, one that has made a sacrifice that most of us never have and ever will, and I am talking about the veterans of the United States of America. So on behalf of the cult, the people here, the people not here, I want to give a huge special shout out, all the active servicemen, past servicemen, anybody who has served our country and done it, man, with honor and true, like, giving back, bro. You have no idea. We wouldn't be here without the freedom. Freedom is very important, not only for our country, not only for how we make money, but also freedom of thought. Freedom in your mind, my brother. So God bless every single one of you, and I do want to give you a thank you, but also too, I hope that you could get a long term. I hope you could save the 10%. I hope you could really go and apply all this, make your money off the buy, baby. One of the best lessons, but for real, you have learned a lot. You have the discipline. You have gone through your training, and it really does apply very well here to the financial market. So at the very least, I do want to give you a thank you and a big shout out. I hope it comes to real life and it shows up and manifests in so many ways, and that's up to you, my brother. And two, I hope all of y'all who haven't served, I really hope you can make some noise and show that love, man. We need to go get the homeless veterans. We could fix that problem for the price of one submarine, but don't get me started here. Maybe Powell, maybe somebody should ask Powell at the press conference today. No, I'm not that. But other than that, we love all of you, and God bless your families as well. They made that sacrifice too, and big shout out to everybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men. Everybody's making their community run, baby. God bless you and thank you. But ladies and gentlemen, please rise up. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Set the judge! Oh, it's game time, baby. Or no. Oh, good morning. God bless you. Happy Fed Day. Are you kidding me? It's beginning to look a lot like Fed moss. Oh, yeah, we have a good preview, too. So don't worry, I have that for all of you. We have I give like 30 minutes. We might need 45, a little longer. But I got a couple of statements to go over. We could go over a couple of projections for the SEP, and then we're going to go over the real breakdown because, again, Powell might really become the lame duck here, but that doesn't mean you're not going to get something. And like I said, the market is a lot more prepared compared to what we went through last time. And I don't know if you noticed, last time though too, the market was doing amazing up until Powell kind of came in and messed everything up. So we will see, but other than that, I'm going to be watching a couple of plays: ABVX, Oracle, Melly, Pepsi, Gold, Silver, Palantir, AHT, Pfizer, Merck. There's a couple of biotech. Some of them had some headlines there. Again, a couple of upgrades too, but watch the earnings after the bell. And then really gold and silver. We had those nice talks yesterday, and even then gold is starting to pop up here as well in terms of some of the catalysts, but I do think that silver one is the main focus. But right now it's really whether or not we get a front run into Powell, aka bond volatility is high or other volatility is lower. We're gonna pretty much see how that all plays out, my friends. So get ready and good luck. Please follow the rules. Don't post any plays, just information. That's how we're going to do some good work here. And other than that, if you have any questions, you let me know. And let's make the most of it. Let's make the most of it. There was, again, Baba, there was a lot of China news in terms of like their chips. And what, like they said there was an emergency meeting. Round one. Fight. Yeah, there is some NVIDIA news right now. Intel AMD accused of failing to block chips in Russian missiles. Oh, shit. And then AXP, they're going to be at the Goldman conference. Remember, we saw JP Morgan yesterday, but those are starting to react. But yeah, there was, what's it called? There was the Baba, they said China secret meeting or emergency meeting, and that's kind of what had it go crazy here a little bit. Wow. Oh, the wire is not up? Well, forgive me, brother. Forgive me. There is your wire. Thank you for shopping at the Stock Market Live. All right, Meta too. I can't believe Meta is going to get rid of fucking open source. That was the other piece of news today. Kind of sad because Llama is dope. They're going to call it avocado, and then they're going to charge for it. What a fucking... Did they hire the Chipotle guy or something, bro? It's a bullshit. Of course. Why does everybody charge for avocado? This is bullshit. All right. Let's put up AXP. But yeah, watch Baba. That was up by 4 or not. Those are either going to fade after the move or that might continue if we get a follow-up. I thought Meta would do a little bit better on that, but Meta does get a lot of activity from Llama. Merry Christmas. Good morning, baby. Happy Fed Day. Happy one of the final Feds, bro. So some of y'all, man, we've got to watch every single Jerome Powell. I don't know if you realize how insane that is. So that, man, he only has a couple more meetings, and every single one after this, it gets a little weird. Intel, dude, I don't know that Intel news. They're saying I guess Intel was up a little bit more. AMD not as much, but they literally, I just read it. They said they're accusing Intel and AMD of selling it, and then NVIDIA says they're unaware of phantom data centers. So I don't know if that's similar or not. All right, where are those other ones? And then Pfizer had some update on a breast cancer drug. It was in combination with a Merck drug. It was actually pretty good. And then I think Kasia, people confuse that. There's something mentioned there, but it's Merck, not Kasia. So watch out for that. Path is on the low. Guac is always extra. Pepsi, AHT, small cap or hospitality. They got like strategic alternative shit. Damn, that actually went up another 6%. And then Palantir, NVIDIA, or not NVIDIA, Navy contract for submarines. McDonald's. All right, who else? Bank of America, did that one come out yet? So they're also going to be at the conference too. Oh, and then where's our boy? Gold and silver. So they're both down here a little bit. But again, silver was up not too long ago. I mean, again, the guys we called yesterday. One guy said it was going to go down by the end of the day. Who's the other one? Bank of America. And then AXP. Put your mother hands up and follow me. Oh! Turned 31 today? Oh, Zero. It does go by fast, my brother, but are you kidding me? Zero. That's amazing. Dude, 31. Oh, no. My brother, your wisdom surpasses you, my friend. You know that? That discipline. Well, I think a lot of Chads remember your call too, man. Are you kidding me? 31? 31? You probably like in the 50s, 60s in terms of wisdom, brother. So enjoy that, man, because you're still young. Your body has not turned against you yet. You still have you got another 30 in the tank easily, brother. Oh my goodness. Happy birthday, dog. Yeah, it's Ciro's birthday. On the Fed day. Oh man. My brother. He went Powell better put some respect on it. He better put some respect on the 10th. Yeah, the AXP, I don't think it came out yet. Happy birthday. Yeah, neither did Bank of America. All right, so that could be your little opportunity. Silver saw 61 this morning? No way. Welcome to life after 30. I feel like that's a reality show. But I don't know, man. Zero. I would have thought you were older with all that wisdom. You have no idea. Because you haven't seen that wave of like, I've seen people turn 30 something and then they start dressing like a baby. Like, no, exactly. I'm not even kidding. Like, that's a real thing. Tesla going up. iRobot. Yeah, that iRobot, man. I haven't looked at those premiums yet since we made them free, but we still got a couple. Where is it? That's that. One God, one king, one way. One thing before you long term. Please just save. FOMC, fear of missing Chad. I think that's what it is. Sounds about right. Alrighty. I want that fucking load. Legend. No. I'm gonna wait for a little bit and hit one of these. Just give it a set. You already started off pretty bad. I mean, down 0.48 on the NASDAQ, SPY and Dow. Just about a quarter. Amazon's on the high, and then Russell down 0.2. There was just a bunch of these fucking NVIDIA headlines. But yeah, they are coming down here a little bit. Again, watch BABA BHP. That's related to the minerals one. And Greer did hint at another set of mineral deals coming up. Yeah, bro, it's cold outside. Bro, y'all need to wear shit, even if you're inside. Okay? Circulation. That's why, bro, I've been getting like cold without realizing it. But yeah, get circulation, Habibi. It's good for you. You know? You get the circulation. It is very good. Very, very good. How many days is that? That's more than a month. And then keep that in mind. We talked about some, I'll go over it here a little bit today. It's kind of related to what I've been telling you guys with some of this like BS gambling shit, because you have an opportunity if you didn't know that, but there's certain options that are not very active. So not only is it like an opportunity in some senses of finding a good play, but more so just keep in mind, you know, after this week, depending on what we get with Powell, you might just want to, you know, set and forget here into the end of the year. I think you might get some better opportunities. So yes, let's see. Can we hit that? Oh, Habibi, this is expensive, Habibi. These are guys are to make a scam. You know they make a scamming. Palantir going up again. They had the Navy news in the morning. All right, and then I'm going for one of the financial plays. I'm going to go for one of the financial plays, and then we'll wait for another. Unless I could get one now. Where is it? It's good, Habibi. Merry Chrism. Merry Chrism. I want to set these and then we'll go over it. Okay, there's none that exist. Welcome, Tony. Are you guys ready, man? Believe me, you're going to start getting hyped up here in a second. Oh, you just wait. You just wait, my friends. So yeah, the opportunity for the front. I'm sorry, I'm still shopping. I am still shopping, Habibi. All right, so I'm making a commodity play and then I'm done. Not a recommendation. You will lose money. Get a long term. I think all of you could hear me, so don't get mad. And then we're going to talk about everything. China to accelerate approval of overseas drugs urgently needed. Remember, they had the Pfizer update yesterday. Or again, Pfizer said they're working on a Chinese obesity drugs. And then Boeing and UAL test advanced airline communications for future. Did you see the Boeing laser? You know, remember we showed it in the Big Beautiful Bill? How they literally had all that money for like direct energy weapons? There was a video that came out of the Bobo. And the Bobo they literally had a damn laser weapon that would like fry shit. It was actually insane. All right, financials and commodities, and call it a day. I know his other one. AXP, Bank of America, USB, and State Street. Those are the ones at the events. And the peach. Oh, what a perfect timing. Oh, we were just talking about Boeing, too. Oh, no. Peach Nation. Happy Fed Day. Happy Fed Day. Are you ready? God bless you, brother. No, Bradley, bro. Are you kidding me? So do you realize what's going to happen now? I mean, Bradley, you still got like a couple more meetings to go. But Bradley Frizzle has outlasted Jerome Powell. I don't think people realize that at this point. You know that? Man, Bradley, you probably watched just as many Powell. You may have watched some of the most amount of Powells here. It's like I was just saying, we watched Powell for at least 8 years, or at least 5 or 6 on stream, but I literally can tell you I have watched every single Jerome Powell press conference from day one till even right now, which is kind of nuts to think about. And that's why some of you, you got to watch it, before Jerome Powell. Before watching the Fed became a gambling addiction with prediction markets, before they made it cool, we were watching the Fed before when my mom thought Jerome Powell was a furniture salesman. So it's amazing, baby. I can't believe it. I can't believe it. No such thing as a lame duck speech. Speech peach. Amen, dude. Amen. So you guys get that. We're going to talk about it a lot today. I would love to talk about it right now too, but long story short, man, Powell, GPCR, the fact that he's, this is like, one of his last meetings here, and then, think about the power, the influence. He might still stay on the Fed, believe it or not. He just won't be the chairman. That's up to him. They usually resign, but if Powell wants to be an asshole, he could pretty much stay. But yeah, people are pretty much saying that he, the efficacy, the power is going to go down. What's this? Macklem, Bank of Canada? You say he stepped down? Oh, no. Wait, what? I think there's a rate cut. Unchanged. So yeah, Bank of Canada just came out. They expect weak fourth quarter. Officials agreed to rate policy. Revisions explain. Labor market showing signs of improvement. Impact from government spending plans to slow. Filter through the economy. I don't know why it said, I swear one of those headlines said step down. It might have mixed in with another one. At least early 2019. And we'll talk about it. So, I mean, this is what I went over yesterday. I might as well share it with all of you. Because I was telling you guys a lot lately about the data. And I was sharing some of the data that I had and what I've noticed with it. And, some of the gambling trends and how people are treating things. But we were live in like 2018, and then our stream got a little bit more popular in 2019, and then really crazy in 2020. But yeah, here's the data from the options exchanges. 2019 was the peak of people buying options with more than a month of time. So right now, 10% of options are traded with, or only 10% of options have more than a month of time. That's insanity. So again, it goes to, you could literally visually see the change in the options and behavioral habits. But long story short, you have a tiny amount of people buying real options. These are real Vega options. These are the options that affect the VIX. So you ever wonder why the VIX resets so fast? Because think about it. I mean, people are not purchasing 1 month. It's one thing to already gamble on options, right? But now, again, most people, 9 out of 10 people are getting short-term options, or at least in terms of the volume. And then I guess that doesn't count the look-back activity, but that's another topic. So bonds are going up. Again, you just had a rate action there in Canada. I think they kept rates the same. NXPR, there is a silver, there is a gold, where is a dollar, and the oil. And then Netflix, it might go down because they're saying they might have to engage in this little bidding war. Okay. Walmart, J&J. Well, yeah, we went over it yesterday too, because you could even see the bursts with, people do buy it. It seems like when there's a good opportunity and there's a great buying opportunity, there's an uptick in those 1 month options. But then right when the market kind of gets ahead of people, then they kind of lose hope again, and then they start chasing with the one-hit wonders. So yeah, maybe we might have destroyed it. I don't know. I didn't invent dailies though. We had to. Yeah, my day we had to wait. You had to wait a week to get a daily. You had to wait till the weekly contract was on the day. Yeah, we call it Ocean's 11, like George Clooney. Yeah, you had to work for your fucking daily. Now they pump you up full of dailies.
We had to work. We had to wait. Patience to get it fucking to gamble. And what you fucking know about a daily option, huh? You don't know shit about a daily. I'll show you fucking target. We had to wait till we hit the target. Oh, Baba, too. Baba John, my Ali Baba, Prince Ali. Ali Ababa. Wow, China.
So yeah, China's going up again, and Baba, and K-Web, and Baidu. I don't think the daily's ruined everything, because again, on like some of these news plays where like we're really early, they're a great opportunity. But then again, I mean, that changes in a couple of seconds. But yeah, at the same time, you know, the beauty of the market as motherfuckers move around and shit, it opens up pockets for you. So with what I showed you, there's a different opportunity. And then like I'm even telling you though, like I've been telling you how the long term is becoming a dying breed. And then it works so amazing. Get ready for the transfer. But at the same time, fucking options are becoming a dying breed. Like options with more than 1 month of time. So please don't get it twisted though, because someone will be like, does that mean a leap is a long term, Josh? No, it is not. No, it is not. I would keep them all separated. Thank you for shopping at the stock market life. All right, a couple value plays are going up here right now. High ticker's kind of active, still negative on the Nasdaq. SPY or SPY just went green, and then Russell and then Dow. Disney on the low, kind of taking some candles again. Target got that little bit of a boost. Tap tap tap. Bank of America flipped. AXP. Everybody in the AXP, put your mother hands up and follow me. Nobody stand tough. Notice that the long term still stands up. These dailies got you gassed up. Now who's afraid of the big bad Fed? 1, 2, 3 into the 4. 1 cut, 2 cut, 3 cuts, 4 cuts, 3 cuts, 2 cuts, none. This guy ain't no mother in Fed chair. I know every single inflation scare. It is low. They are fucking dumb. They did say transitory when it was none. Oh, I'm sorry. I'm so sorry. Twilio. Yeah, staples are gone. Who else was it? China. So yeah, China, bro. China, it was up a little bit more. But it's all this little emergency meeting they were talking about. Because remember, we had the H200 news, and then it popped up NVIDIA, and then it came back down. And then they were saying how China, the Beijing even banned them, but now they might consider it now that they have a shot. I don't think ON has news, but that thing's been running up. I mean, holidays. Again, last week, it was slow a little bit this week. MasterCard on the high. Actually, and a couple of others. And Whirlpool. The high ticker just like gassed up right there. There's a bunch of different names. Whirlpool, UNH, Coca-Cola. But yeah, a lot of those retail names were going up, but I don't think there is anything. There was the Cyber Monday shit from a couple days ago. Guggenheim initiates buy on ON with 59 target. That was this morning. So they did have a upgrade. Eli Lilly's waking up too. Yeah, Netflix earnings is next week, and you have CPI and non-farms next week. So December 14th and then December 16th. It's going to be the delayed data. I think it's data from November, or yeah, I think so. So we're getting there, but other than that, it is getting to. We are getting that finally. You're going to get 2 more sets of data, which is the irony. Is that, you know, even coming into today's Fed meeting, we're going to talk about it. Just remember, you know, we were under the shutdown. That's where Powell got a lot of cover to kind of increase that hawkishness. So we'll see. Yeah, bro, silver premiums are still high. They're not moving though. They gassed more yesterday. And then Qualcomm on the way up. Again, Dow's the only one green and barely. I know you see the long term because saving 10% is what we on. Oh, I'm sorry, you guys. It's Powell Day. Usually I get excited a little later. So let me make sure we pace ourselves. But yeah, I am, and I'm already excited, man. I have a great preview for all of you. I have a couple of samples to show you, a couple of projections, but yeah, remember last time we didn't think it was going to be that important, and really it was just Powell's attitude at the press conference. But yeah, man, coming into the end of Powell here, it brings up a lot of unique opportunities. It's going to be very unique and different how we go about this and analyze it, and that's why too is there's a couple of opportunities. I have it broken down very simple too, bullish surprise, bearish surprise, and the stage is set. Now, all that matters right now for the next couple of hours is the front run or not. Whether or not you get like volatility picking up. I mean, the VIX isn't barely in the green, but do we watch the volatility pick up ahead, or does it chill? And why we're saying that, because if you haven't noticed, the last couple weeks, especially even when we got your boy, what's his name, Kevin Hassett being announced, you know, the bonds got really, really volatile. I'm still standing here screaming, save the 10. Don't ever try to judge me, dude. You don't know what I've held through. But I know something about you. Nail and home builders, they started off this week pretty weak. Illumina, biotechs are doing it again, low key. XBI, Mary Chrism. SWK now, Gap, a couple. You're going in burst again. The high ticker's not even fully gassing. You're getting some names that they're making several highs all at the same time, or it's going in burst. These aren't like gradual. You're getting like random poppers here and then. The call. Oh, dude, you're a blessing, bro. You have no idea. I really appreciated that. You know that? It was very. No one's ever really prayed for me on the phone. So that was very nice. At least I've called a lot of people, but it's not only just the prayer. You sounded like a wise man, brother. You sounded like you actually got to learn from here, and that it showed, and you were approaching business and everything you're doing, bro. And it was great information too. I'm sure you're going to hear me talk about it again today. Well, yeah, bro. God bless you, man. You have no idea. That was very inspiring. That's why I told the guys even last night, I said, man, y'all want to get me a Christmas gift? Just pray for me. You know that? The righteous man's prayer? Oh, a fool is despised. You know, a fool is like dripping. It's annoying. But, oh, man, you get IHG, Intercontinental. I don't know if that's really the AHT. But, yeah, bro, that was the one this morning that had the strategic thing. That's still up 20-something, and Target's still ripping. But, yeah, like I said, bro. Just a prayer from a righteous man, and to hear the wisdom and to hear what the real impact, and not some foo-foo shit, man. I loved it, man. So thank you. And then if y'all want to get me a Christmas gift, I got you a nice XBI this year amongst some other ones. But yeah, that's you give me a good prayer, a solid prayer. But that means I want you to pursue righteousness, pursue wisdom, and then pray. Take care of yourself, and then take care of me, brother. You take care of you for you, and take care of you for me, and I'll do the same. That's word to Jim Rohn. Adobe going up. They have earnings too. Speaking of which, Broadcom and Oracle. I liked it. Let's get through the morning, and we could call a couple more people if you guys want. That's kind of the beauty here, with how we've done the Chad. I think most of you, if you've survived the Yash awakening of 2025, the Chad's pretty clean. I would love to talk to some of y'all on the phone. You have any questions, it'll be your chance. And then, yeah, but I want wisdom. I want wisdom. I should smell it on you. I should see it from afar. They don't feel me. All right. Is Intel still staying down? If Intel never cut the divvy. I mean, I just wish Intel never lied. Did you guys hear about that? They were literally saying that Pat the Rat pretty much fabricated a bunch of shit remember when it popped up and it went from 18 to 50 or whatever, like in 2022, 2023. and all the guidance, and it woke up, and that's what led to them having to change their strategy, cut the dividend. They were literally saying how like people were pretty much accusing Pat the Rat of lying, and they say it was all fabricated, and it led to that because there's a nice little lawsuit on there. So like honestly, I mean, you would have had your dividend if it wasn't for that 2022 to 2024. If you didn't have any of that, I think you would have been golden. But I think we got it at a good price. I think we got it at a good time as well. It was able to work, and even if you missed the re-pickup of it, you know, all the other old intel was able to get put to work as well. I actually look forward to the future. You know, that's the crazy part. Like last time when we looked back on it, like Intel was fire, but dude, it's only been like 3 months, 4 months now tops since we bought it. So that was crazy. That we haven't even got, again, I don't know if you heard, they stole some dude from TSM too. So we haven't even entered the part where some of that long-term stuff really starts to hit. So I do look forward to that. That one could be good. Tell me why. BDX. Yeah, you see what I'm saying though with these like pops? Warby again. So like you're not getting like a weird, like you're getting a different melt up, but it's like going in bursts. These names aren't just like ticking up one at a time. They're literally going in bursts. And they're making like 5-10 highs all at once, and then it'll chill and then keep going. So yeah, bro, it's kind of crazy. Oh, Kanan, God bless you, baby. Thank you, man. And for real, bro, everybody, like I said, I want love to watch everybody live wise, and I say that because we have a lot of opportunity next year. Powell ain't gonna be here, but you will be. So I really want y'all to live in it, man, and let it show. Damn, Warby's killing it. Again, remember, they had the Google news the other day, so they're still running off of that. But yeah, man, I want it to show, and I don't know, man. Nothing is better. Oh, the prayer from a wise man. I love righteous man. It's worth more than you think. So I'm telling you, that's the best gift you could give back to the Chad. You yourself being wise, and then spreading that wisdom and praying. Oh, so thank you, man, for all of y'all. Merry Chrism. It's been a good Christmas. It hasn't even started yet. I feel like I'm early on the Christmas hype. Rocket Lab. ENVB. Jeez, bro. Yeah, ENVB. It's already up 100. I think we went over that one in the morning. And then Elevance Healthcare is starting to go up too. Is that Advanced Auto Parts? They're flushing. I don't know. You guys know there's still drama with the first brand ship. So ENVB, this one was already gapped up here in the morning. And then AAP is here on the low. I don't know what's up with that. First thing I think about is Advanced Auto Parts. You put up the Christmas tree November 1st? Oh, damn. Well, yeah, I've had mine up. I had it right after Thanksgiving. Yeah, amen, bro. I like it. I like it. Trump approved SNAP exclusions for 6 more states. BAE Systems awarded $7 billion Navy contract. I never wanna hear you say I saw my nocturne today. A lot. AAP is a JCAP short report. There you go. Another earthquake in Japan? Jeez. Habibi. Baba. We'll talk about Baba too. Again, yesterday they had that update with everybody kind of getting disappointed with how China closed the year. Because remember, China was really strong. Their recovery, they've been doing bad for several years with their little deflation. But yeah, again, another burst of value names, even some growth names too. But Hershey's, That was a great one too. Is it back at that price? No, dude, it was like 140 or something. Yeah, 140 at the beginning of the year. That was one too, if that one ever moves. Yeah, so First Brands, bro, it's ridiculous. So like it was already going bankrupt, and then these people stepped in to help and add like kind of distressed funding, and it was supposed to be like backed by, half of it was like the guys who weren't getting paid. They rolled over that debt to this new credit facility, and then it was set of new people, and it was supposed to be backed by like revenues, because they own a lot of brands. They own like the windshield wiper brands, they own a couple of brake brands, a lot of auto parts that are sold at like Walmart are as First Brands, and they own a fuck ton of them. But then yeah, literally those are getting clobbered now. So like even the people coming in, like the distressed buyers who were there to like, you know, pretty much carve up the company, get what they can, get some of the easy money, they just got wrecked. Again, it's actually very weird. You don't really watch that happen too much. So yeah, that's still developing. The Saunders one's still clapped, and then Renovo, they're in the process of pretty much going BK, and they've stopped most of their services. BMNR on the high, and then again Rocket Lab again. Hershey's kind of went straight up. Still small though, all within 1%. Again, keep in mind potential front run. SPY is actually at break even right now, and then the Nasdaq's down a quarter. Russell is up by 0.1, and then the Dow 0.17. Is it 7? Let's get you a checkup. L3 Harris to produce additional solid rocket motors. We just saw BAE too. Seems like a couple contracts are coming in, or like these defense ones. So Dow Jones, you got 19 in the green, 11 in the red. Not bad. Nasdaq is 50-50. Woo! And then SPY 322 in the green, 180-ish in the red. Yeah, that 6.5 earthquake hits Hokkaido, Japan. Pepsi was a sweet one. I would argue that Hershey's is sweeter. Yeah, I feel they were all good. I love it. Good value, good quality. David, Ishkorak, Habibi. Ishkorak, in the Bahibak. Do you know what that means? This is code. Yeah, Google's waking up here too. Let's see, Amazon was up all day, really. 1.4. Nivda, let's see, Meta. I can't believe it, dude. Meta, because remember, Meta killed it with their little llama in the open sourcing of it, but I can't believe they said they're going to get rid of that. Celsius, that's 20 highs, so that's fresh, even though it's up 1% already. MBX. Fly, pelican, fly. And then equal weight's up by 0.3, so SPY's barely above break even. Equal weight's killing it. Equal weight's doing better than the Dow. So again, SPY has more names. Now Dow has more names, and then the Nasdaq is just chilling. Can you believe it? Yeah, GEV, they had I think earnings and guidance. But yeah, fucking massive considering how big the stock is. Yeah, it was up like 8 to 10. And then it went up. And then Bahibak. That means I love you in Arabic. Warby's still going, so they're on fire. There's even an update from Essor Luxottica, the Ray-Bans maker as well. Rito, resume trading. Where's the other ones? AXP went. Bank of America chilling. Papel. Yeah, Papel, whatever this is. Pineapple Financial. STX now, that's 30 high. So some of these, bro, that's like the second name I pulled up. It's like 20 or less highs, and it's already up. Still like 1.5 or something like that. And then the Robin Hood. And then the Palantir Hood. And then the SPY. Seems like everything's going up. Microsoft, I think there was something. What was it with my Microsoft down too? I think it was saying it's following their $23 billion AI investment plan yesterday. So it could have been the spending. Capper, that's the biotech. Biotechs are doing good, but it's, again, everything in bursts today. Doesn't seem like that crazy when you look at them. Or most of them had just a bigger gap up that they're holding. But SPY is near the high end again. Bonds are going up too, so in an odd way, that bond volatility is climbing. I don't think SPY volatility, market volatility is going up. Sipping on some Fizzerve. Who else was up still? Yeah, UPS killing it. UPS about to go back to 100. Target was on fire earlier. Where's PG? Back from the 130s. Fly, that one's starting to go up too. Up 5. Again, high ticker is just, it's making, you'll see the same name a few times here. That's what's sticking out. Whatever Argon is, and then ASTS. Who was it? Oh, gold. Gold and silver. So much more quiet. Yesterday it stayed quiet till what? Like the first hour? We have been here for about 40 minutes. So good morning. Again, it's about 50-50 on the NASDAQ. The Dow and the SPY are a little bit tilting in favor of advancing. Equal weight's doing a lot better. So on an equal weight basis, you just got more names climbing. There's a large short floating around on bonds. There is. I mean, we'll talk about it here today because it kind of makes sense with the Fed and what to look ahead for. But the bond market is operating very weird. Not only have we gone through the 40-year bull market ending and a lot of things, and it insinuates it, but I think that there's a lot of boomers in the bonds, and I think the boomers they're kind of cuckoo. I mean, long story short, you guys don't want me to get started on this conversation. That's why let's wait a little bit, but I don't think the bonds are highlighting the deflationary risks, hence why the curve is steepening. But it's fascinating. It's something I never thought I'd really see. But yeah, once we get around the Fed preview and all of that, we'll begin to talk about it. But yeah, the bonds there's something going on, or it's operating very different than the past. And just look at too, ever since we found out about Kevin Hassett and he kind of became the front runner, the bonds went up a quarter on the long end, which is kind of nuts. Is oil hitting a low? No way. That's close, dude. Yeah, you're within what? $1 or $2? Oh, BB. And then J&J on the high. There's Topperuni. Intel room. Coal's starting to run up. Again, high ticker, this time, ironically, this is a little bit more active. Every other time, it wasn't really going past like 50% of the RPM bar. It's starting to go. Praise the Lord, baby. Finger to the sky. Amen, baby. Amen. And then top. And now Adobe as well. It's another pre-earnings run up. Adobe's been nice the last couple days. Oracle, Broadcom, they're chilling. They're still in the red. And then Meta's starting to tick up, if that could go. But again, the whole getting rid of the open model kind of sucks. KKR, I saw that one earlier than Baidu. Not at a high. I think I misread that. Like nothing like a badge change. Welcome to the dojo. Did you ever play Pokemon? You remember when you would get the little dojo badges? Those were big days, bro. I used a lot of AA batteries to get to that. And then Abbott now. And then NBO. So more biotechs or more medical companies. And then the Mobileye. Oh no, Uber's down 3. Again, I don't know if they gave it. Oh, they said it's gonna take like 5 to 10 years for robo taxis to make up like 10% of the volume or something. I don't know if that's the reason they're down. Lyft's down 4.5 too. And then whatever CDT is, I don't know if this is one of those Bitcoin ones. But yeah, Nasdaq's the only one in the red now. Again, SPY is barely green, but EcoWeight, I want to argue that's still climbing. Yeah, a little bit. EcoWeight's up by 0.3, 0.35. SPY is barely moving. Dow is the leader. Russell doing good. Still a little bit more of a mixed bag. And then Nasdaq down by a quarter. And you've been here for 45 minutes. The most wonderful time of the year. Wiki long term. I don't know if it was for the industry. I think Uber was just saying that for themselves, but I wouldn't be surprised if everybody kind of priced that in general. And then Uber driver carjacked in Harrison. That's just a random headline. Yeah, let me see. So yeah, here it is. Uber, this is from late last night. It was an interview with the Nikkei, the CEO Dara. They said they expect between 5 and 10 years before self-driving vehicles is greater than 10% of global volume on Uber's, of 10% of global volume on trips on Uber's network. The length of time to cut costs for the vehicles and to comply with regulations will be contributing factors. Greer, wider trade deficit tied to front-running tariffs. Uber. HRI. Dude, stay warm, bro. Someone told me that, and then they were like, that's why you're waking up like tighter than not. That's why you're gonna get more sore. So like I wore, because I don't like wearing clothes when I sleep. Like I wear a minimal clothing, and I like kind of being cold when I wake up. And then I bundled up, and then I woke up like really warm. Dude, felt so good. Oh man, it did. I didn't get as sore. So yeah, man, the weather's cold outside. Stay warm, bro. Get circulation. It's good blood circulation. They're having a council event. That Powell that got halted. BV. GPCR. That one's still up. They don't even move. Cold on the high. Encino. Alright, man. I think at this point you're going to get these smaller melt-ups. So JP Morgan, I don't know if that's going to do the recovery. Like we said, State Street, AXP, Bank of America, and then Bank of America. There's one more, I think. UBS or USB. They're going to be at those events, so you might get a random mover on there. Otherwise, baby melt-ups here. I don't know even then. You're going to have to kind of... It's not like they're doing them fast. A lot of these plays kind of remind me of Path last week, where they're going to kind of keep climbing up, going a little slow, but none of these are like, you know, face rippers. They're not really jacking up the premiums too much. So again, I still think it's somewhat positioning ahead of Powell. Posture, very good, Habibi, very good. Circulation, posturation, inflation. Figma, that's a little bit more active. I think that Goldman put out a note. They were saying how Figma could be one of the companies that reached 10 billion in revenue. So I don't know. I mean, again, Adobe's, Adobe is one of the few like hyperscalers, or maybe that's not the word, but they're like one of the big mega cap. They've scaled their revenue very, very good, and it's large. It's not too easy to do. Adobe, damn, it's 10% from the bottom. You pulled something. You stay warm, brother. Stay warm. I know that's not gonna help fully, but more circulation is gonna help you. And bar hangs too. That's what I've been doing. That helps a lot. You hang from a bar and then just like twist around too. Get some good grip strength. All right, SPY's going up. We've been here just under an hour. And then I need to go potty. So follow me on Instagram at the Trading Fraternity. Real Cult News on Twitter. USAR squeeze. That's what what's it called, says? Zero hedge. Well, watch all of the mineral plays again. I don't know if it'll happen today, but Greer was hinting at another set of these deals. So get ready for it. Get ready. But I'm going to be right back. Follow me on the Instagram, Twitter, whatever. Follow the long term. Get a long term. It's yours, not mine.
Looked at the
your future.
Private credit space.
Amen.
And saw record low non-accruals from the large managers. Bank earnings where you saw charge-offs at 60 basis points, flat to down year over year. Credit card delinquencies, moderating. I think everybody understood that this was a isolated incident. But look, it's the credit business, so it's a good reminder to people that underwriting matters, manager selection matters, and there's going to be losses. That's part of business.
And speaking of that, the Bank of England is launching stress tests for both private equity and private credit, of which you will be a participant. Ares will be a participant. How do you see that playing out? And do you think regulators in the U.S. ultimately engage and embark on their own stress tests for private markets?
I don't know if it's going to be a formal stress test in the U.S., but we spend a lot of time talking to regulators and legislators about the role that private markets play in the broader ecosystem. If I go back in time to the GFC, and I think about all of the conversations that we were having with the Fed and the SEC and Congress, there was just not as deep of an understanding of the symbiosis between private markets and public markets. Mm-hmm. I think we've all made a lot of progress just through constant dialogue and education over the last 17 years, where there's a real understanding and transparency. I think this B of E process is going to be fantastic for the industry. I think what it's going to show, private markets are a critical component of the modern capital markets. They are driving growth in the middle market economy. They are smoothing volatility in the liquid markets, and it's doing something structurally to better distribute the risk out of levered financial structures into unlevered institutional funds. So we're actually participating with great enthusiasm because we think increased transparency and understanding is good for everybody.
I want to ask you about data centers, because you and I sat down in September, and at that time you said one of the biggest challenges as it pertains to data centers and the AI infrastructure build out is that there's actually not enough dollars to fund the pipeline of deals that need to be done. How would you characterize the supply and demand dynamic as it stands now, especially as bubble fears have become an even bigger part of the conversation?
Yeah, back to your private credit, the question, there's a similar type of anxiety about the data center build and CapEx, and I don't really see it. So if you zoom out and you look at the demand for data and the demand for data centers, it makes perfect sense just given the digitization of everything. And we are years away from the demand overwhelming supply. When we think about this business, you can just look at the large hyperscalers alone, and you have $300 billion of CapEx demand this year to help support the growth in digital infrastructure and data consumption. That's a lot of capital in a market that's also seeing growth in the real world economy. And so my comment that I made to you the last time we were together stands, which is we're not in a bubble. We're actually in an undercapitalized market that is scrambling to keep up with the demand.
It's been a while since I've asked you about private equity, but it is a formidable part of your business as well. It's been more of a dormant part of the broader private market ecosystem these days, but it seems to be that the engines are turning back on. We've heard a lot of comments about the private equity deal machine, kind of reigniting in recent months. What are you seeing in terms of your own portfolio for the potential for realizations, for exits, and then future deal activity?
Deal activity's absolutely up. On our last earnings call, we talked about our pipeline in October being at near record levels across the firm. That's an indication of our own PE business, but also all of the financing business that we do for other institutional equity managers. Deployment in November, strong, early part of December. So it feels much better than it did. I think you're seeing a reawakening in PE. Rates coming down will help. Going into 2026,
Damn, Warby's still going?
Backdrop is also.
Wait, what do you
gonna
mean
help the
Goolsby
M&A
was one of the
machine
managers
open back up. It's interesting
of
though,
Adobe
because
data
while PE was
for Black Friday? I have no idea what that is.
The rate environment and the valuation
Explain.
environment, it led to a fair amount of innovation in
Oh,
the private markets.
Conagra.
In places like secondary.
That is on the high. All right, man, you're still kind of doing this. I think I don't know if the
while it was a
amount of plays
transition period
has
for
really
private equity
changed in
class
terms of
itself,
laggers and
for
leaders.
Private markets on the other side of that.
They had
I actually
323
think
in
that
the
market's in a much
green.
healthier place because we now have a lot of tools.
A couple names
that
actually.
are
You had about
well
10
adopted
names
and
go green on the
understood to help
NASDAQ that were
manage the
red.
pockets of illiquidity.
Yeah, and you've,
Dow
of course, been a
Jones
big
now, you got a
beneficiary of
couple
that.
more, 21
Michael,
in the
thank you
green.
so
Thanks,
much.
Leslie. So
So yeah, you're
Really
slowly
appreciate you
advancing.
joining us today.
Slowly,
Michael
same
Eric, CEO of
330 on the
Aries.
SPY. That was
Guys, I'll send
leading
it
the
back to
way.
you.
Okay,
And then you're
Leslie,
going
thank
in
you
bursts.
for bringing us the conversation
Oh,
on all
thank
the
you.
hot
I
topics
forgot
around.
to turn that off. Yeah, wait, what's the Goolsby thing? No bubble. Well, man, I don't know. Maybe it's kind of early, but I'm really down to talk about it because we had a nice discussion about what to look for next year. And it sucks because after this, today's a big day when we get Powell, and then you're going to get the non-farms and CPI next week. But then, yeah, it's just like you guys realize the year is over. So it's like you're going to have a little bit of patience as we get into next year. But the real focus is next year. And there's a lot of different things that could happen. And it's funny because how many of you think there's going to be a recession next year? Do any of you believe in a recession next year? I think that's how we could start this conversation. A recession for 2026. I guess it depends on what you believe, how you've been politicized, or then again, maybe your economic knowledge. But how do you feel about a recession in 2026? You believe it? Yes? Do we consider black swans? I don't think there will be. Midterm, there will definitely be shenanigans. No. How do you define it? Oh, that's true, huh? Right, I forgot.
Well, you change the definition. Come on.
You don't think Trump will allow a recession? No, the golden path, baby. Ooh. Probability. You think more towards the end of the year? Stryker and EW. EW. Yeah, Edwards, little pop there. Wow. Here's the deal. Where is it? So if you ask the fund managers and you survey, this is from the Fed, I believe, but ironically enough, people do not believe, or at least these financial people, the odds of a recession or like growth going below zero, if you want to use that definition, is about 1%. Got very low. Very, very low. So that's where, in a weird way, if you think there's going to be a recession, that you're a contrarian. So why is this weird? Because at the same time, where like you could ask the same people, they also believe unemployment is going to be up. So this is the weird part about next year. This is, and I don't know if you guys are picking up on this, like you'll see it more and more. That's why I'm glad to tell you and talk about it now, but go look around. You're going to start noticing people they're bringing up this idea that unemployment's going to be like high, but they still believe in like a an economy that does good. So this time around, like most of the times, you said unemployment's going to be near 5%. You would think the economy would be slowing down, growth would be low. But the irony is that they believe that unemployment will be high, but then growth isn't going to be necessarily low, or let alone to have a recession. So the idea of a recession next year is actually very low. Now, I don't necessarily believe that, or really, as Wall Street, and again, last year has shown you, mother effers will flip on a dime. They have zero shame in terms of, forecasting all of this stuff. But the way I'm looking at next year, it's either boom or bust once again. We came into this year, and we were looking at this year in terms of 20%, just because of the 20% plus years. Remember, I was telling you guys that's only happened like 4 or 5 times in history where you have had back-to-back 20% plus years on the index. So usually the next year after is also massive up or down. This time we actually went up. I think we even had down there for a little bit too. But the whole idea is that we've now done about 3. I'm pretty sure we're like right under the cusp, but we're about to have 3 years in a row of, I don't know if anybody would like to look this up and maybe ask ChatGPT. I forgot, we could just fucking AI everything nowadays.
I don't trust these little freaking AI. What's his name? Al? Who's Al?
No, AI. Hey, Al? Okay, I guess Al. Let me see. But yeah, I don't know how many times we've had 3 20 plus years. Let's see. How many times in history has the stock market went up 20% 3 years in a row? I don't know if it's ever happened. I'm sure it has. It had to have happened once. Everything happens once. But either way, next year's going to have a lot. But now this is the part, and it relates to today, that that's why today's going to be partially important. I mean, nothing's going to immediately happen. You will get your rate cut. But what we've really got to look for is just quite simply, I think next year is going to be either boom or bust, because there's either deflation that nobody wants to talk about. And deflation, I think, is a very real risk, especially when we look at China. That's why, Donald Trump even bringing it up a couple of times in the last couple of weeks, I think is very fascinating. I think very realistic. But at the same time, if it's not deflation, just remember, the start of the calendar, next 2 weeks, fucking the cars, you name it, all of these new programs, money, tax bills, write-offs, all of it. That all comes into play. There's going to be a crap ton of money everywhere. So that's kind of where we're at right now. I think, and now mix that in with, again, 2, 3 back-to-backs. Let's see. Yeah, based on historical data of the S&P, the stock market has gone up 20% or more 3 consecutive years, only 1 time in history. This occurred during the dot-com boom in the late 90s. Depending on whether you look at total return or price return, the length of the unique streak varies slightly. The only instance was 1995 to 1999. The single instance of 3 consecutive years of gains happened between 1995 and 1999. So 1995, you went up 37%. 1996, you went up 23%. Oil numbers are coming out. Crude minus 1.8 million. Estimate was minus 1.3. So 1996 was 23%, 1997 was 33%, 1998 was 28%, and then 1999 was 21%. So you actually, when you did 3, you went 4. If measuring price return only, the market rose 20% or more 4 consecutive years, 1995 to 1999. Notable near misses. There are other 2 periods in history where the market came very close to achieving this 3-year streak. World War II, 1942, you went up 20.3. 1943, you went up 25.9. And then 1944, you went up 19.8, missed by just 0.2. And then 1945, you went 36%. Current streak, 2023, we are currently on a streak of 2 years. 2023 was 26, 24 was 25, and then 2025, to establish it, the market must finish up 2025 by 20% or more. Holy shit. So yeah, It doesn't. So yeah, I guess just tech bubble or World War II. But really, tech bubble was the only one, 1995 to 1999. So it went up 4 years. But anyways, back to what I was saying. The whole key with all of this is that all this money is going to be fucking dumped on the system. Once again, that's partly why I didn't like the big beautiful bill when it came out. But now there is real deflation. I don't think anybody is talking about. This is what I was saying, where the bond market's kind of weird right now. And I think it's the boomers, the vigilantes, and again, Powell, you name it. And then also too, like, you know, let me see. I'll ask Gemini again. What percentage of U.S. Treasuries does Warren Buffett and or his companies hold? So yeah, think about it. One person. I'm pretty sure Buffett is between 5 to 10% of all U.S. Treasuries. So one person, again, that's not counting the PIMCOs, the Bill Grosses, you name it. But the whole point is I don't think the bond market is reflecting the deflation. And think about it. If the Fed holds for too long, they hold too high for too long. I mean, we just saw little baby liquidity issues. And then again, tariffs. I believe what I was telling you, like think about it this year when I'm telling you guys about tariffs and we didn't really freak out the same way a lot of people did. It wasn't just because we're like, yeah, Donald Trump, fuck yeah, Donald, thank you, Donald. It was like, think about it. We kept telling you it was deflationary. That's what history has shown. So all these tariffs, it brings in a lot of money, slows things down. And like, we're not in the point where this isn't 2020, where you're having, supply shortages that are driving certain things. You have a bunch of goods or a bunch of dollars chasing a bunch of goods. It's actually the opposite of that now. It's like there's a fees on that. Things are amply supplied. And that's where it's like that it's very deflationary in the sense of the longer we hold these tariffs, and then if we pour all this money on the system and it doesn't lead to growth and it gets you, this high unemployment, but then it doesn't lead to growth, and then the Fed has just kept high rates for a very long time, they usually go until they break something. Like, think about it. The deflation that is on the table, and then the tariffs. I mean, tariffs are, again, especially at this rate, they have historically been deflationary. So, yeah, that's why I think next year is going to be fascinating. Does that make sense? That's kind of the way to paint the picture. It's just, again, multiple years in a row of craziness. It puts you in a category of your own historically. There is real deflationary factors that the bonds aren't going to show that, because again, think about it. This is what we talked about yesterday. The bonds are showing you inflation. The bonds are worried. That's why the short ends. That's why we're getting a curve steepener. They keep cutting rates. The short end's going down. What's up with NVIDIA? Yeah, NVIDIA coin. I don't know if crypto's on the low. It is starting to drop. But then gold and silver kind of holding here. Well, SPY back to the earlier low. SPY actually went red again. Dow is the only one in the green. Russell gave up the baby gain as well. Equal weight. Still up by 0.2 though. So again, you still have more names. But yeah, those chips are starting to give up a little bit. Banda. And then J&J. But yeah, like I'm saying here, you're kind of in your own little category all these years in a row. And then you mix these in, and then, I was saying the curve steepener. Because think about it. They're cutting rates. The short end is going down. But every time they cut rates, the long end is staying up or going up. Again, even Kevin Hassett coming in, long end is going up by a 1/4 point. Think about it. The bond market, they're doing that because of uncertainty. But not only that, it's uncertainty in terms of inflation. They think a Fed who's going to keep cutting. They think all of these problems, and again, playing into that whole affordability crisis, essentially it's going to, they're worried about inflation. That's what the bond market's saying. That's why they're giving me higher rates. I said this last night because it's like, bro, if you thought there was going to be deflation And again, if there really was going to be, you would buy all of these bonds. But then at the same time, they sold massive amounts of bonds in supply. And then that brings up a whole nother conversation. But the whole point is that the bond market right now, it is not reacting to anything deflationary. It's only reacting to inflationary. So in a weird way, I would look at the bond market. I wouldn't rely on it. But yeah, I think when we finally get, because you don't have deflation too often, but once we actually kind of start to get to that point next year where we're going to find out which way it's going to go, I think the bond market might change heavily. But for now, I just don't think it's correct. And then for next year, it's either all that money we throw at the system. If it doesn't work, we turn into what happened to China. And then if it does work, I mean, I'm sure there's going to be a lot of good things. This is not a one-way road. Talked about this last night. It could go both ways. It's either golden era or a road paved with shit. I don't know if that's not too much of a... Anyways. Yes, the 5-figure is correct. It requires important qualifications. Warren Buffett owns roughly 5 to 6% of all U.S. Treasury bills, not the entire U.S. debt. BB. So total T-bill market is 6.15 trillion. Berkshire owns 360 to 38 billion. So yeah, 5.8%. If you look at the total national debt, which includes long-term 10 and 30 year, they own about 1%. So yeah, that's kind of crazy. Well, the Fed could pivot to QE, but if we enter deflation, like a real deflation, it wouldn't really matter because it would be too late. And that's kind of what I'm saying here now is like the Fed, people were trying to argue that at the last Fed meeting when Powell came in and, how the market reacted. They were saying it's kind of a response to a policy error, but yeah, I mean, they've kept it high for a really long time. But then it's not only just the Fed, it's, again, policies like tariffs. It's stuff now being supplied amply. If we don't have the same productivity and growth, you could stimulate all you want, but if we start getting that ball rolling down the deflation hill, it doesn't. Ask China. You're gonna need to throw away more than the kitchen sink. And then that's why I always said deflation's scary, because at those moments, even if you threw the kitchen sink, perception gets washed and people, it may not still have that effect. They're not going to feel the same way, and then they might start hoarding, and then before you know it, we all become Japanese. Again, if everything works out very well, though, I mean, it's going to be awesome as well. You'll get a lot of upside. So, I had this conversation last night. I think it was a very good one, but now here's the problem. We start talking inflation, deflation, start to talk up deflation, especially because it can be scary. Marvel's going up, and then J&J too. J&J, BMY, Marvel, and a few others, while GE on the low, Nvidia. So we just had that little pullback again. Kind of feels like a normal Fed move. If the range could widen up, that'd be a little bit more exciting. And then that ON's still going. Would deflation show up? China was a closed market? It would. It just essentially it wouldn't last as long. That was a question. We had a similar question on it yesterday. It was more so, if we get deflation, will you? How long would it last? And that's why I'm thinking usually with history it's like 12 to 18 months. But then you go look at how China played out. China's borderline almost been 3 years in deflation. So I think the timing would be different. But if the right situation appears again, we do something like tariffs, which you could argue kind of closes your market, especially if you do it in mass. But I do think it just wouldn't last as long. That would be kind of the answer to your question. We're chilling there. But yeah, the thing I was saying is that people hear this type of stuff, and I think we're going to find, that's why next year is going to be excited. We're going to see exactly which way. You have to be ready for all of it. And this is why I was telling you guys, from like 2022 to 2023, that's where I started implementing a lot of kind of new rules for the long term, or really kind of hammering home the strategy. It's all about balance. It doesn't matter if we get hyperinflation. It doesn't matter if we get stagflation. It doesn't matter if we get deflation. Your long-term strategy will win. And that's if you play it how we've been doing with the balance. Remember, I've been saying you got to diversify your stocks, diversify your asset classes. Do not buy things when they're on the high, because again, you don't know what stage. Because think about it, that's after 22, 23, we started to pick up on this and the inflation, and then it looked like the 70s, and then it would play this game back and forth. And that's really going to be the answer. Not too much, not too little. A really nice full balance. And that's why it just sucks, because you'll hear these conversations and you'll be like, short everything, or you'll hear like, it's only gonna go up, inflation. But remember, if you buy too high in inflation, you might just overpay and still not be able to perform. Again, vice versa, even on the downside, if you buy too high, you're gonna hate it there if things start to deflate. But if you're buying them when they're low, you have a balance. You have, some industries are gonna do good. We just got to wait it out and making sure we're very productive while we wait. Take advantage of the cheap names. Get your diversification. Throw in some dividends there, because if it takes a couple of years, you'll increase your total return as well. Nvidia's coming down. It's crazy. The high ticker's still going. Warby, bro, I've been on 12% now. But yeah, other than that, you got a couple of values running up. I see a lot of food and some medical. Yeah, Pfizer and Myrna. Remember yesterday they got some of that bad news. Pfizer had the good breast cancer drug today. But yeah, that started to move up. But yeah, like straight up, your strategy you have here is you're gonna love it either way. You just have to, honestly, it's just gonna be hard to be patient, stick with it, and not get caught up in the extremes as they start to happen. So it's gonna be fun. But I do think diversification is the true answer, no matter what happens. Because again, that same thing, think about real estate. You want stocks, you want real estate, you want different industries, you want them at good values, the dividends, the growth, not too much cash, not too little. Because again, if things hyperinflate, if all that money gets thrown on and the bond market gets what they think, it's going to be massive inflation. Some of you, if you've already held and did well through the long term, you're going to come into this next cycle with the most money you've ever had. That's going to be great. If it hyperinflates, it'll be negative in some other instances. But as far as your assets, you're already an asset owner. That's going to benefit you. Vice versa, if you come into the deflation, you're going to have the money. It'll go down. But now if you're already buying value in some names that were already deflated, it's not going to hit you the same. You're going to have cash to take advantage of the deflation. Not too much. That's why I'm saying your 10, 20% will turn into 30, 40, 50% in terms of real value. And then you're going to be able to go through and play that game. If it only lasts for a couple of years there or less, then you're also acquiring the dividend as that all has to play around and go back up. But balance. The balance and diversification, either way, we're already prepared for it. And I'm talking in the long term. There will be opportunities to speculate in between and trading, but yeah, I'm talking midterm, long term here, and then especially long-term strategy. But dude, next year is gonna be one for the books. So I hope too, after this week, I hope you get some good rest and you're ready to go. Anything with the M2 rate of change? No, I'm not really. I mean, I brought that up the other day because the M2 is starting to finally break out a little bit, but it's kind of just leading to this conversation where I'm saying where you're either going to get inflation and the market and everybody's fears are right about inflation. Now, depending on if we get inflation with growth or if we just get inflation without growth, but that's kind of where that points to, or the reverse, where I'm saying if none of this stuff works, if we actually get a slowdown, one thing leads to another, the Fed kept it up too much, tightens too hard, the tariffs start to clap on things, and then who knows what other stuff we can't predict. and then the money supply is already that high and money is circulating like that, it's not going to be good. That's going to be, again, deflationary. That's where you lose the efficacy. Again, China is the modern example for right now with that. So it's going to be a good one. That's why I get ready, be wise, and yeah, next year, man. And it's a midterm year. But we are thinking a lot on that. A lot. Ba-da-ba-ba-ba. Yeah, Greer. Is that old? No, he says it right now. He'll have a discussion with Indonesian counterpart on trade deals. Macklem says federal budget is not adding a lot of additional inflationary pressures. My email is tradingfraternity@gmail.com. But are you going to send me your long term? Why? That's the thing. What we're talking about now, you're going to have to, this is going to be a 5-year, 10-year plan. Because that's what I'm saying. It's like some of you guys got to watch it in real time, depending on how long you've been here. But, it was after some of the peak inflation and all that volatility we had under Biden. We kind of started picking up on this, and that's why, we already had the idea of the 70s, but diversification really was the answer. Home prices, again, if there's inflationary, especially like big inflationary stuff, they're obviously going to go up. But also, too, if it's deflationary, they will come down, but then it's going to track. Essentially, so that's the thing. It's like if we had a deflationary type of crisis, the thing that really matters is that you're going to still be doing certain behaviors still. So housing is still going to be everybody's biggest living cost, essentially. Doesn't matter if you're inflation or deflation. Doesn't matter if there's stagflation. Housing is for more people than not. 9 out of 10 people, you're going to have housing be your major cost, unless you're a senior citizen and your house is either paid off or you're living off of somebody else or whatever it may be. But housing cost is still going to be your biggest consumption, and then everybody still needs food, right? So everyone's always going to spend a portion of their income on food, and then housing is going to usually be the biggest. So prices will still come down in deflation, but you're going to have to balance it out with just essentially it'll track living costs. So it'll still be the highest cost for people. It'll just be lower. But prices, and if you own a house and you're able to hold through it, again, you diversify well, you don't get over levered. It'll be rough, but you'll still be better than not, and it'll still track and hold your value. Again, China is a great example. The people who over levered, and again, this should sound familiar. We talked the same thing in 2022, 2023. We were talking about it, how just remember I was saying, if you're over levered, that's where I started delevering a lot of things. Over leverage is what's going to kill people in either environment, right? You over lever on the top of inflation, you don't get the right prices there, even if it's inflationary. Then the assets, you top tick them. That's going to hurt. Again, deflation. If there's a big pullback, if prices do start to change, then yeah, your deflation with leverage is going to fucking kill you. So that's why ideally, that's why you don't want to be on margin. You want to have just balance, diversification, not over levered. If you could survive through that, that's what I'm saying. The next 5 years now, especially if you've already been building up here and you got a good foundation, it's gonna be awesome. It could be we follow China, but we're different. China just freaks me out in the sense of everything I'm talking about with deflation. Up until China just went through it, we never really saw anybody in the modern times really have deflation that wasn't like a third world country or something where there's a less developed economy. Are you allowed to say third world anymore? Isn't that offensive?
Yeah, you can say whatever you want. Yeah.
The farm is good. We're working on we might be getting what's it called? I think Ryan found a skid steer for $400. We're gonna rent it. We're doing some work, and then we're looking into planting some things. So it might be plants ahead of animals, because I still haven't hired somebody to live on the property and be an animal caretaker. Robot. Ooh, ooh. Where is that one? Those are back to 700. I found a misprice. I'm already in the money, so I don't know if I'm gonna roll to it, but I'll give it to you guys. See if it'll actually fill it. It's not filling on that. Am I playing options for the Fed meeting? I mean, if I was, I wouldn't tell you. So, you're in the long-term chat, brother. The long-term chat. Trump, Homeland Security inks contract for own fleet of Boeings for deportations. Well. I don't know. Maybe we'll do a survey. Cause you guys, maybe I could go through and call you guys, like the Michigan Consumer Sentiment, and we could give you a phone survey. Do you want to bring the gambling back next year? So we'll have 2 weeks to decide. I'll think about it over the break. Do you guys want to bring the gambling back? Do you want options? Do you want plays? Do you want everybody chased? Do you want influence? You want to unban all the pumpers? And is that what you want? Or do you guys, because again, I mean, I think a lot of people did a lot better this year. But then again, you did have different constraints and a different standard. Baba is starting to flush now. So I don't know. Maybe it's sprinkling. I mean, do you want the locked in or not? Because again, the locked in, you guys do get an advantage if you're on the trading side. But at the same time, you're not taking advantage of people who don't know what's going on, which that's what people would do. So yeah, but it's there for those who are in there. You tell me. But I think a lot better results. I think no matter what, you're always gonna get like the weird emotions. Like I'm saying, bro, no matter what, it was definitely a lot less people that blew their shit up. But I am still somewhat shocked by like the amount of people that like it's temptation. I get it. Just like straight up randomly like, fuck this, I'm selling the long term. We gotta go game on it, bro. Yeah, it is. I mean, it's definitely very emotional, and I think some people are always gonna fall for it and fall for the temptation, but I do think that a lot of people, when it's tighter, you kind of got forced to really choose sides, and that's what I'm saying too. I saw a lot of people lie about it too. You had to align where your interest was at, and align with what you were really trying to get out of it, not this, long term, and then just like secretly gambling all your money. That's what I learned, a lot of that with some of the changes. So, yeah, but then again, I'm thinking of the next generation, brothers. I really want to see the future ones, man. That was golden. That was golden, bro. But then too, you guys have a way cleaner chat. I mean, I banned a fuck ton of people. So again, we held a very strict standard. If you didn't meet it, don't take it personally. Again, I think boredom is the doorway to mastery. So that was very, very good. 3 streams? What's FFA? Just unfiltered, never muted, free for all. Oh, I said what? I think it is. I think it's it's a lot more focused, way easier. You guys aren't competing to that's what I'm saying. It changes the competition dynamic, changes the flow. I've noticed too, even how the everything is like the like how the news even gets circulated. That was fascinating, that there was actually an impact. But it is a lot less competition in terms of a real good discussion. The watch list. But again, like I said it the other day, I mean, most of this stuff, like everything that was on the watch list, I just talked about it. So, and like that's what was happening. Some people would just wait till the morning. So I think and then again, for the locked in, the watch list is mainly for the day-to-day trading. What the fuck happened here? Again, a couple of things are going down. NVIDIA, BABA, Surmel, the metals, couple biotechs, Quantum, and China, all coming down. Swiss government reduction of additional tariffs apply retroactively for November, seeking further exemptions on tariffs on pharma, chemical, and coffee remain in place. Swiss 15% will apply to imports from Switzerland, replacing previously additional rate of 39%. I don't know if that's old or not. But I won't lie, dog. I only need a few. Well, that's what I'm saying. I think some of y'all really did rise to the occasion. And that's why, too, I mean it, though. Like, look at the opportunity this year. We were correct on it. You know what I'm saying? There was a lot of things going on. We knew this was going to be a 20% year or 15, and it surely did provide. But that's why I'm saying, just please don't give it up. And I don't know. I hope a certain level of strictness will get you to make sure you put the same emphasis on your future, because that's what it's about. Because again, what's the good of it? What's the good of working 5 years, 6 years, and then giving it up in a month, man? Giving it up in a day and falling for it. So that's why I think some of y'all really did rise to the occasion, and I think you understand what I mean by securing the future and securing and doing good with what you got. Ally. Oh yeah, man. A couple of these names still dumping. Additional U.S. It's the same one. But yeah, some update on Swiss tariffs. All right. what time is this? 8 o'clock? Woo! We're getting closer. That's it. I'm only gonna get more excited as we arrive. SQQ on the high. I guess SPY's about to go low. So this is what I was saying though here too with the volatility. So again, bond volatility, it's been one way today, but still a big move. But one or the other is going to catch up. Oil dumping too. So again, oil is just right around the lows, or it's about. They might hit a low until the end of the year. And they said Apple Tim Cook at the White House, or seen there. Well, we could see. I mean, the emotions of it. That's all. I think the culture of the gambling and the plays, I just don't think everyone's cut out for it, man. It wrecks people, dude. That's what I'm saying. It's there's a lot of emotions behind it, but all I'm saying is that we have a couple more weeks, and then we're gonna enter a new year. As we enter a new year, we either do things exactly the same or we change it. That's all. So we'll have 2 weeks for some ideas and deciding, but that's exactly what I did this year. I did tell you guys. I warn you. You don't remember me telling you? And I was saying how your boy Yash is coming back. And I gave you guys an advance notice on Yash returning. And then we said some things are going to change. So now, I think it worked out very well. I think it was very, very effective. That's the word. Very effective. We had good, again, I think some of the best trading, some of the best long-term. And now, granted, it was a wild year, so like the changes aligned with the opportunity perfectly. But, yeah. And then, too, I think it really did highlight, pockets of both opportunity and where people could work on things. So, yeah, 2 more weeks. It's either we continue along the path or we make some adjustments. Is Netflix a good long term? It is, but depending on where you got it. So I don't think I'd buy it at the high. It's kind of crazy. I forgot they split. Because technically we bought Netflix at $100 or like $120, but we bought it before the split. So like theoretically, what's our price on it? Isn't it? Our price is like, is it $10? $20? Yeah, we bought in around like $20, essentially post-split. Google introducing comments on eligible YouTube short ads. Dude, that's what Hegseth. I didn't know what it is. I didn't really look into it, but yeah, that's what he announced yesterday. How do you use it? Are you allowed to talk about it? I don't want if you talk about it, don't go on a boat afterwards, because I know Pete. Oh, okay, my bad. AXP. If that starts getting crazy, that's from the Goldman thing. Marquetta. High ticker. Look at the high ticker, though. Short term is actually kind of running. You did get that bounce back to VWAP. JagX. Isn't that RuneScape? Or am I tripping? Oh, Jaguar Health. Different JagX. And then Disney on the high. They dumped earlier. Young Gemini. I still love Gemini, bro. That's cool. Even asking him some of the stock stats. You used to have to use the stock trading almanac, but I don't know. Gemini seems pretty on it. Yeah, let me see. I want to see the sources on that. How come it no give? Oh, it uses the AAI. So yeah, it does. And then slick charts again? Wait, Gemini goes to slick charts? That's funny. With all the ads? Come on, Gemini. No, I haven't used Opus. I'm just, the sad part of today, I can't believe Zuckerberg is going to eliminate the open source, the llama. That's crazy. I think llama is very, very powerful, and it's sad. But then again, I don't know what that implies or where we're at with the next stage. I guess they're just going to monetize. If they monetize llama, that's insanity. But yeah, Gemini has been the nice middle ground. There's been a lot of good things with Gemini. You built a brand new PC to play, like right now? Or is this back in the day? They should come out with the remake. I don't know. Would that be a good console game or no? I don't think it'd work. But good times, good times. Wait, did it sell that shit? Oh, I didn't. Bruh. They sold that fucking. Hold on. I was looking at that mispriced one. I haven't put it out yet. I was gonna roll it. I was hesitating on the rollover, but then it fucking sold it for me. Alright. You built it for now? Oh, dog, what? So RuneScape's still popping? Bing! So yeah, I'll give you one. Not a recommendation. You will lose money. God bless America. Alright, and I'm gonna go get me a carbo. And then Little by little, brother. We are inching towards the Fed. We'll have a preview in like 2 hours. So about 45 minutes ahead of the meeting. Remember, you are going to get be getting a SCP today. So right at 2, we're going to get action. Keep that in mind.
Mom and pop pet stores, is it, or just macro stuff, household formation, things like that?
Well, there's going to be a couple of things. They're focusing on verticals besides merchandise, which is, they're doing a lot of vet care. They're expanding into that. They are currently have 14 buildings on that. They're expanding into 18 by the end of the year. So, you have healthcare, you have sponsored ads in the website, you have, the membership program, you have Chewy Plus. So all of those things were probably going to be tailwinds for the company going forward. They're focusing on like gaining mid to high single digit sales growth over the next few years, which is, I think it's a normal forecast. But right now they're growing 2 times the size of the industry. So yeah. It's interesting.
Is this a trend that you're seeing moving forward for a lot of these kind of consumer-based companies, shifting back a little bit to that in-store sort of experience? Because that seems to be a strategy that's worked for other retailers outside of its space as well.
Yes. So, the pet industry, it's very sticky in terms of demand. So once these companies get the pet parent at the start of the pet ownership, they are going to have them for the rest of the life of the pet. So that is obviously a very interesting dynamic compared to other retailers. But in terms of the in-store experience, this is something that Petco is also doing. They're leveraging their 1,400 stores to also increase that traffic and penetration. So definitely interesting times.
So Walmart, Amazon, how does Chewy compete against those players that have big e-commerce platforms?
So based off of them, they compete on price. A couple of years ago, we did a pricing study with Amazon, but Walmart and Chewy and other retailers, and Chewy and Amazon were pretty close in terms of pricing. Where Chewy beats Walmart and Amazon is that their customer service. If you call them and you have any questions about the food that you're going to feed your dog, they're very knowledgeable compared to, Amazon customer service. So that is like the edge that they have.
Oh, very interesting. Now, another bright spot, of course, is auto ship, right? Which is basically, if you're a pet owner, this is the thing that you sign up for, like my cat's food each month, and then it just keeps charging me every month. And then I get a surprise delivery of cat food that I was not maybe expecting. But so obviously that's a bright spot for Chewy. What's the outlook for that part of the business? Is that something that could be sustainable?
Yes, absolutely. So right now, 84% of their revenue comes from auto ship, which allows them to have a lot of scale and allows them to be very profitable. So that is obviously, they have been growing since I started covering this company. It was like in the 70s and now it's 84. So it's probably going to get to the 90s soon.
It's very convenient because you sign up for it and then you forget about it.
Yeah.
Right. And
it
then
just shows up.
And it's probably
like a book of the month club.
Yes, book of the month club. It's cat food in the mail. So there you go.
Cat food of the month.
Who doesn't need that? Diana Rossetto Pena, thank you so much. We appreciate that. Diana covers the consumer staple stocks out there, including Chewy.com.
Chewy.
She does that for Bloom.
My girl used to like Chewy until she started feeding her fucking dog. Like her dog, she feeds it like fucking real food. I think it's just food for dogs. She'd be feeding it fucking venison and like this. I'm like, why does this dog eat like this, bro?
Yeah, back in my day, you gave him kibble. Some good old kibble.
He fucking dog. He has a fucking fridge of food. I'm like, this is insane. Terrible. And then liquidity. Well, don't be deceived by liquidity. I honestly, I think a lot of people. I've come to realize that like liquidity isn't talked about enough. Like a lot of times we think liquidity is just about like money moving around, and it makes sense because like money moving around is part of it, but just don't forget liquidity is going from one asset to another and then switching back, and then how much you are losing on it, that spread. And that's where I've seen a lot of things. And we talked about it yesterday because it sucks because, like, right now with what's going on with, like, silver and gold, there is such a big disconnect between real life and then paper. And that's why it's like if gold and silver, like, you know, if you bought gold and silver physically back in the day, I mean, you're killing it. But in an odd way, I think, like, if we're going to watch, like, a crazy squeeze in silver or gold, I don't think it's going to, I think it's really going to boil down to like, paper gains. And I think you're going to have a better opportunity on paper for a little while, unless gold and silver holds this as the new floor. Somebody brought it up. I don't know if that'll be the case, but, you know, if silver really does, then yeah, we're gonna see what happens. So that's but just, yeah, keep in mind liquidity. And that's why too, on some of these things, like, bro, things getting hyped on the internet, and, like, again, people are like, we showed it yesterday, people are talking about, like, mining in silver, but then it's like, it doesn't even matter the silver mining when it's just like, yeah, paper prices are moving, but if you don't get that same real life effect, dude, it's very, and there's a difference between industrial silver and then, like, investment silver and bullion. So yeah, man, it's crazy. But yeah, understand liquidity. Same thing, real estate. Real estate is very illiquid. Even though there's a lot of money in real estate, you know, and think about it, one purchase in real estate affects the comps, but real estate is still illiquid. All right, SPY's going up. Kibble is cancer for dogs. I know, she's my girl. I think my girl said that too.
Yeah, but back in my day, you're tough. You built tough like a Ford. Yeah.
Swiss, we will talk to U.S. about medicinal products, robotics, and other items to prevent tariffs. Oh, was it Lace? Or is that just drones? Wasn't Lace one of those Swiss ones? Or am I tripping? Ba-da-ba-ba-ba. You want to go back to the gambling? Keep the current filtration? You're not being punished? Well, that's the thing. I mean, we talked about it yesterday. I don't think discipline is being punished. So I hope none of you feel that way, but I can't control how you feel. But at the end of the day, you know, we just had to tighten it up, man. Because there was some good things, and there's, you know, the plays and stuff could be good, but without discipline, it'll hurt you. But do you have a good long term? Send me your long term and let's see, because you're one of few who has said it. So, let's compare it. Email me your long term and put Omar, and we'll take a look. I won't share it. I just want to look and see, because that's the thing too. Like, priority. I just think a lot of people have. I think I've seen. I could probably put a number on it, but I've seen a lot of people. Pretty much the idea is that it's kind of like stripping and becoming a stripper, but they're like, I'm gonna not do the long term now, and I'll do the long term. Let me go and make a lot of money trading, and then I'm gonna go and gamble and do some quick stuff now, and then I'll make a long term. And then what happens is that it sets them back, and then maybe it sets them forward for a little bit. They'll get what they wanted, but then they won't put it towards the long term. And then eventually, before you know it, just like I showed you with that options chart, you could even see it in the global market and volume. When there's a good opportunity to buy and hold with time, they go crazy. But then once that opportunity kind of dissipates, you'll just start noticing short-term options start going crazy. People fall behind, and they got to catch up. Fall behind, they got to catch up. And then they start using this, and then it's a never-ending cycle. Until now, literally 10% of options are traded with more than 1 month of time. We didn't talk about oil. I mean, you did have oil numbers came in. I think there was a slightly more of a draw. And just in general, I mean, it kind of relates to the silver and stuff like that, where, you know, certain metal commodities are up and show inflation, but otherwise, you know, the number one commodity in the world this whole year, it's shown the exact opposite of that. But as far as this year, just the drill, baby drill, getting rid of the regulations, and then we are getting closer to the end of the Russia stuff, but I don't think there's anything beyond just the factors we've seen this year. And then today it moved a little bit off of the what's it called, off of those oil numbers. But we are, I don't know, it might even flush into the low. CRM still running. That one, just I pulled that one up. And then healthcare and biotech's on the high. I see yours is kind of hard to read, but it seems like your long term is just like a couple of tech stocks. Oh no. And then Rigetti. Oh no. And then GameStop. And then BYD. So yeah, it doesn't seem like you followed all of what we're saying here too. So that's what I'm saying. Like, I think you want to kind of pick and choose, unfortunately. But you could send me a cleaner one. That was from July. But yeah, it's, again, that's kind of been some of the problem there. You are more prone to fucking shit up, if that's the case. But you have good tech stocks at a good time and you're holding. But yeah, that's where it's saying, like, that's the confusion. And I don't want to cause confusion. Where I think some people, before you know it, plays long-term, people start thinking that these short-term plays, they start thinking it's long-term quality, and it's not. So, but other than that, I mean, yours is pretty good, though. And besides that, there is some, you do got a couple of red flags in there. Will it make the price of gold and silver go down? Really, supply going up, I'd like to say, or demand changing from where it's at now. But like, there's only one real risk of gold and silver. Does anybody know what that is? It's not really supply and demand, but that's what will play out. But there's one big risk of gold and silver, especially silver. We kind of talked about it yesterday. Our boy got to bring it up. Well, I couldn't tell. He sent me like 3 or 4 accounts. One of them had like good Nvidia, good Amazon, but it seemed like it was only chip stocks. And then there's one with a little bit more, but then that one also had stuff that I wouldn't know how that got in there. And that's what I'm saying too. You might as well, you got to kind of just align with it. And if you really want the trading and you think that's like a big driver, I mean, you do have an avenue. You're just not willing to take it, called the locked in. See, because that way everybody in the locked in, I'm assuming they know exactly what it is. And we've had a couple people, I've reminded them, if you're not on the path to a home, you don't know what you're getting into, don't fuck with it. But yeah, but that's why for like speaking, for talking to the broad masses, I don't want areas for people to get confused. Not manipulation, not a squeeze. So again, because he's saying I'm young, I don't want to top tick. Right now, you're going to have half of the people talking about silver is not going to do shit, or it's going to come down, or the other half is saying this is the new floor, right? And everyone's like, this is going to, that's it. You're still early. It's going to 100. Gold is going to 10,000. It's getting revalued, all of that. But what's the risk, again, with how it's played out? You remember the other time? He's like, Josh, you told me not to buy gold. I made 50,000, Josh. My mom's a hater. My dad's a hater. You're a hater, Josh. We did it. I went all in on gold. Fuck you, Josh. You ain't want me to succeed, Josh. You remember that one? Was that, so what would be the, and what, remember we had a chart the other, do you remember that, right? Josh, I told you, Josh. You know, Josh, I've never spoken to you ever, and you told me this, so I made sure, Josh. I've never spoken to you in my life, Josh, but you not speaking to me had a profound effect to justify an extreme risk on something. And now that I've had some short-term success, fuck you, dog. What? How did what? We really out here. All right, man. So you remember this chart? This was the chart. But more so, here's the problem. So this is where I'm at right now. Because like I keep telling you, everybody, the real issue is that gold and silver is supposed to be stable. Maybe silver not so much, but gold is not supposed to be crazy. No, they did that with Dogecoin too. Not that happened with gold and Doge. A lot of everything, every asset that's been extremely risky, or again, in this case, gold is, I mean, a lot safer than a Dogecoin, but no, that dynamic plays out at least once a year. Somebody will come back after 3 years. You told me not to do it. And I also told you to buy real estate at the very bottom. How come we don't? Why are we ignoring that one? And Abivi, and IRM, and Uber, and JP Morgan, and Meta, and Netflix. But no. Anyways. So this is my worry for all of you guys. That's what I'm saying. Do whatever you want. Be wise with it. Remember, you could balance anything out. I mean, if you're going to diversify, you could always just don't go all in on anything and diversify appropriately. But the risk with gold and silver, especially silver, you just don't want this. And what I'm talking about is 10 fucking years of not moving. That's it. That's the scariest part about it. Because like if you get it and this is the floor, God bless. That'll be great for you. You know, I don't know. Maybe you could argue $20. I would say $20 might have been the new floor. Maybe $30 is the new floor. But that's like the scary part is that, and you just got to plan accordingly. You scale in, you be wise, you diversify. If you really insist on buying it, that's how you're going to have to balance it. But yeah, that's the risk of it. It's not really about, I'm not even worried about top ticking. I'm worried about top ticking it, and then it goes back into another 10, 20 year cycle of not really doing anything. Because again, 2008, you didn't break out till 2008 prices till recently. You guys realize that? That's like, what, 15 years? So you were still down 50% by like 10 years almost. So that's the worry. Gold is a safe haven. I mean, gold is always going to be a safe haven. But like I'm saying, it's starting to change a little bit because it just, it's not stable. Like you used to buy, just like I would tell you guys with real estate. You guys remember real estate, like a normal year in real estate would be like 3 to 5%. That was good. You know, when I was getting excited about real estate, it was 3 to 5%. That's why people thought it was weird, but it's big money, right? It's supposed to be stable. Real assets should offer stability. You get what I'm saying? You're buying a real physical asset. It's supposed to, your money should remain. You should always have value. You shouldn't be like confused on that. But that's kind of where it sucks, because if you buy it high enough and then if it goes non-stable and then back to stable, that's where it usually backfires. See, so again, gold, 1980s, it hit just under 1,000, and then what? It didn't break out of 1,000 for 30 years, 27 years. So yeah, you cut out for a second. Don't worry about it, man. It's all good. You might have to go back. For some reason, it always cuts out. You guys notice that, right? It always cuts out on the good feed. I don't know why, bro. It always cuts out. Damn, that always happens. It always do. Have you noticed that? I don't know, Chad. It's I don't know if it's me. I might be going insane, but I'm suspicious. Mm-hmm. Mm-hmm. Ooh, ooh. Let's see. Someone just sent me a long term for an opinion. Your long term isn't bad, but you got to start stacking up. I'd say, I don't know. You probably bought those other plays a while ago, but you have a lot of names, which isn't bad. I mean, you got places to like look and grow, but just start stacking up and then avoid some of the dog shit. You know what I'm saying? Some of those plays that you guys are picking up. Some of these feel like, this is what I'm saying. A lot of the trades I see in your long term are trades we talked about trading. Not all of these are going to be long-term plays. You know what I'm saying? Like, for some of you, I wouldn't put Fannie Mae in my long-term just yet. I think that's too risky. I think you're playing a different game with time. And then again, a lot of these are there, top ticking him, shit like that. It's not necessarily, while you're small, you could work around it. It doesn't really matter. But I don't know, you didn't top tick that one. You did good. But what I would do is stack up. So instead of having 40 names with a couple $100, I would start to like really like pick the couple of good ones and try to build more positions above $1,000. Because you have a big account. You got 30 grand, but you have, how many fucking stocks is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51. And I don't know where you got some of these too. Yeah, a couple of top ticks in there. But yeah, you have 50 names. So I think if you like some of the names too, like even the like top ticking ones, you would think you would have top ticked, but you actually did very good on them. So like in a better way, you could have, I think if you were like, start stacking like you've seen me do. You see what I'm saying? Pick a couple of them, get your deposit instead of buying like 5 plays for $100, put 1 play with 500. But then that way you're going to have to decide a little bit more. But you got a little, bro, you almost built the S&P 100 in here. So, yeah, it's not too bad. I think that's otherwise good portfolio. It just, some of the names I'd frown upon, but like I'm saying, I mean, they're all small. You've kept all of them small, and then you let a couple of the other ones start to grow there, but that's what I would start doing. Let it grow. Let it grow. No, don't sell. No, 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 no. That's what I'm saying. I wouldn't necessarily approve of those names. And like I'm saying, some of them you did good. But yeah, you can't sell them. That's not what we believe in. That's what I'm saying. Because in a weird way, if you really get one of these, good thing you went small. Because then you get one of these fucked up bubble names. You ride that shit out. You know, it's gonna grow for you. But yeah, what you do is plan ahead. Now you start thinking about, now that you have these little bubble plays, you let these start to work for you, if anything. But I would just start thinking about how to stack up now. That's why no more 5 plays for 100. Start picking a couple of the other ones. Yeah, not bad at all, though. That's going to be the exciting part for some of you guys. Because I'm saying, you grew it big already, little by little. And now you get a couple of good stacks in there. It's going to... Now we got to get to the damn 50K. Then get to the 100K. And that's all you got to do. To be fair, the house is already bought, so restacking, oh, even better. I love it. That's what I'm saying. Now we get the fucking long term, get it to 50K, get it to 100K, and I think it's gonna. You got a good plan already. I could see you stacking up stuff already. That's what I'm saying. Those other ones, some of them worked for you if they were bubbly, some were there, but it's a lot of names. That's it. But you know, you can over diversify like that, but then you've seen it. You have plays in there that have done very well. So you want to make sure next time you're actually getting a good amount to work. And then that's why too, if it ever turns a small amount into a large amount, even if it's dog shit, remember 10 years minimum. You could rebalance in 10 years, or if you really want to get rid of the bubble names, you're only selling if you're going to buy another house or buying something else, but that's not a stock. It has to be another higher quality investment. Okay, don't send me any more emails, you guys. I'm done. I think, no. I'm turning off my email now. Now I'm getting all sorts of stuff. And then homeboy sending me, that's not a long term. That's it. Don't send me no options and shit stocks. I'm banning you now, actually. Were you the guy, are you on the locked in? Were you the guy who just said, Josh, I'm making a long term? Yeah, that is you, bro. Fuck out of here. That's terrible. So yeah, bro. SoFi, I don't know, AMPX, Resolve, Path, and then having options in the same one, I don't think that's a long term. And I wouldn't do that. And at the same time, if that's what you're going to do for the long term, I would cancel your locked in. Because I don't think it's going to, what's the point? I think you want to trade a little bit and you're going for more gambles. We need to get real good quality. And that's not going to be it. Trump on Truth Social. Mexico must take care of its water and sewage immediately. It's a true threat to the people of Texas and California. The United States of America. No, I'm not going to. See? That's it. Once you guys... I just got like 50 fucking emails. So I didn't even tell you I was looking at the emails, but then once you guys picked up on I was looking on the emails, y'all just fucking spam the fuck out of me. So yeah, it just gets overwhelming. But ideally, though, I think we already learned a couple. Don't over-diversify. And then at the same time, that's something I've seen. I mean, I've seen people do it. That's where it's like, it's kind of disingenuous. You know, where that like, just I know some people like, oh, long-term. But then if your long-term is only like shit stocks, dude, that's where we saw people fail in 2021. That's why, and it was brutal. Because there was, you know, I had people watching for years. They were taking every trade, going for every option. They were not separating their accounts. And then they were buying all EV. Then they were buying every single hype play, GameStop. And they were like, yeah, this is it. Bro, why are people still obsessed with GameStop? That is, bro, I think that needs to be studied. You know that? And they get mad too, and they're like, no, financially, the cash and the balance and the Michael Burry. And then, but like, bro, it just, that's not, like I'm saying, S&P 500, you know? So that's why, like, if you're wondering why my reaction to that last one, where I'm like, bro, you were just telling me I inspired you to get a long term, and then you send me a damn portfolio with options and then low quality stocks. Not one of those is from the S&P 500. You know what I'm saying? And I've been spending 2 months. Even Wall Street took the idea. If you haven't noticed, Wall Street's been pumping the S&P 493 now. And that has already gone up 30-40% in terms of like sentiment and movement. It's like, and then you gonna send me that. I just, like I'm saying, you can't use my doctrine to say I inspired you when the results do not show any of that inspiration, right? If that was the case, you would have at minimum a Fiserv, a Tap, something like that. You could throw that on me and be like, look, he inspired me. But not if you send me 4 different long-term names that you say is your long-term, and none of them are on the S&P 500, right? That means you found a way to go out. You had 500 options to choose from. So yeah, it's not the business. I just spilled my Red Bull. Let it go, let it go. The long term needs to save and grow. Let it go. Your GameStop. There was a Netflix movie. No, dude, I don't know. Like, that's just, it blows my mind on the GameStop shit, bro. It really does. It really, really blows my mind. Like, the amount of people that I've seen, like, on it, bro, it's kind of crazy. Like, it's just something about it is, yeah, it's just weird, bro. It's really weird. They're, like, still obsessed with it. Bezos, Blue Origin has a team working on orbital data centers. SpaceX has pitched a data center plan, part of share sale. You got pulled into the hype. Like, right now, I don't care what you did 5 years ago. That's what I'm saying, bro. You guys realize that, right? I don't care. I don't care what you did 4 or 5 years ago. I mean, like, currently. That's the part that blows my mind. Because I'm like, how, bro? How are we still, like, bro, I still will see from time to time. Just like, and then if you go and search it on Twitter, bro, you will see people talking about it to this very day. And they're like, look. And then if you go and look at the picture and then Rory Kitty, you know what he meant, right? You know what he meant. And then look at the cash. This is the value, dog. People don't and then they start pulling out fucking mathematic charts. They start getting valuations. They're like, look, this is the future, the ecosystem. Then they start using all the buzzwords, and then you're like, what? Dog, this is... So yeah, just remember, there's 500 names on the S&P 500. 68% of them are in the red right now. It's a great way to start. But yeah, that's what I'm saying, though. You got to For real. If you're really listening here, whether you're starting a new long term or you need to like clean it up and make a good long term right now, you really should be looking at the S&P 500. And then too, that's the same time, like some of these, I got sent a fuck ton of emails. I'm seeing a lot of people that also putting in, and this is where I'm saying it's your responsibility, but this is where you guys got to see where I got kind of inspired. I see a lot of y'all I've traded some of these plays, and I'm looking at them and I'm like, yeah, these are trades, but I see some people have long-termed them. And I understand the appeal. I used to do that when I was younger, and I would be like, yeah, I like this. No, I'll hold it. Yeah, it's a swing trade, long term. I'll hold it. But no, you have to really, again, that's why we need a separate account, because the long term needs to be 10 years minimum, and whatever comes in is not coming out. But like, you need to know about these companies. So like, don't be putting in biotechs in your long term if you don't know about it. You get what I'm saying? Like energy plays that you don't really know about. You're like, yeah, the offshore drilling. Like, bitch, what the fuck? Unless you are working in offshore drilling, you know what I'm saying? The SPACs, certain things like that. Like, I really wouldn't be the biggest fan of that. Deposits versus moving profits inside the long term. Bear, I answered this for you yesterday. So we were in the middle of philo. You were like, fuck this philo, Josh. Should I break the rules and sell? And I answered it after. I don't know if you were here, but yeah, if you're not getting around this one, brother, you're not allowed to sell, okay? Even if you're up. It just, unfortunately, if it's long term and it's there for 10 years minimum, it's 10 years minimum. Because that's where it sucks, but that's going to maximize everything. If you really want to like move things around, you buy a house. If you want to rebalance, or you're going to deposit money and then just stop adding to that and add to whatever you want. But, think about it. I could have done that with a lot of plays in the long term, and it would have fucked up our results. Meta, Netflix, JP Morgan, Uber, Abivai, IRM, you name it. Some of these plays went several 100% in just a couple of years, but if we were moving them around because they had profits and we're like, yeah, take profit, move it here. Let's use this. Let's spread out the money. Let's spread out the drip. No, that's not the point of compounding, right? And that's why too, it's a blessing, because if you get a good play that hits and runs, that's going to allow you to really get a fat gain. That's why I even told other homie, he had plays I wouldn't have recommended people to get those, and they were bubbly plays, but then they go up. I'm still saying you can't sell that. 10 years minimum. Either you get a house or you hold it, because even if you got on the wrong side of the bubble, you could let that work for you in the long run. That's the general idea. And then very least, you'll have growth plays, and then you could go and build dividends while those do their thing. But yeah, there's no way you're getting around this rule. I know it's tempting, but this is a lesson. You're going to either, like, again, look at our performance. Look at what we have done with a lot of these plays. We would have cut all those down if we did that. So you're either going to learn this one the hard way, or you're going to understand this was the commitment when you did it. Otherwise, don't put those in the long term. If you're going to be tempted to move shit around, even if it goes up, that's just not going to be the long term. So again, if you guys really, that's the beauty too, because like if you really want to sell something, you got to go find something to invest in outside of the market. Again, that's part of that asset diversification we were talking about earlier. Let it go. I don't know why Frozen stuck in my head. EU fine will likely come, in the first quarter. 2026. Isn't that crazy? 3 weeks, it'll be 2026, Chad. Sad. CETX, what's this? It's down 3, but ripping. Besant retweeted, largest banks should not use their government charters or market power to set public policy. That's the purview of elected officials. Today's findings confirm that banks restricted access to financial services based on lawful business activities. The president's executive order was clear. This will not continue. Comptroller Jonathan Gold. Yeah, the Google shit is not hitting that. That's Reuters. Let it go. Hold it for 10 years. Yeah, I don't know. I don't think it. Be careful, brother. If I saw the one you sent me, I don't like it at all. And I think you, if you want to gamble and trade options, man, just approach at your own risk. But I would focus on the long term first. And you don't need to lock in for that one. But if even then, for you go S&P 500. Am I still going on vacation? Yeah, I'm leaving after the end of this week. So after December 14th, I will not be live till like January 7th, I think. Because I'm going to take the first week off too. Because nobody does shit from the first. I might even come back on the 10th. So yeah, we'll see. But that first week is bullshit too. That's why I'll leave a little later. But I might go live randomly. We'll see what happens. Am I single? I don't know. Do you not check in except for once every 3 months and you believe everything on Twitter? Are you cute or what? Wait, who's asking? Now that I think about it. Wait a minute. I will get relaxing time, bro. I get relaxing time every day. But then I get sore because of working out, bro. It's so terrible. It's so terrible. That's why. And then if I don't work out, I still get sore. You know that? But yeah, man, in my mind, oh, I'm blessed. I'm blessed. Because it doesn't matter. Because even if I'm not blessed, I command my mind and I make it blessed. Does that make sense? That's what the philo's about. Y'all don't feel me. I don't think they feel. Nah. What stocks have I held the longest? I think Abivai. Spotify, MO, those were some of our first plays. Snapchat. But Abivai has been probably the oldest, biggest one. Long term. So actually Spotify was our first purchase for the long term. Then AT&T. Then IRM. Then Altria, and then Snapchat. So actually, you had 4 fucking bangers. Actually, 3 bangers ahead of that, and then Abivai, and then beyond only 1 share, and then more IRM, then Disney, then more Spotify, more Abivai, more MO. I left around the 20th last year. So maybe. We'll see. I got to see depending on what my girl's going to be doing. But because I know next week you have data. So maybe I'll stay till next week. We'll see though. Unless I got a dip. What if you do weekly deposits? What do you mean? The first week. It's crazy. I realized that when I came back last year. Last year... Dude, the volume on coming back, everybody was still gone. It was still so slow. Even though it was like post-election, everything, bro. Oh my gosh. It was terrible. It was slow. It was just the holiday week still. And why do you guys, there's no such thing as a long-term trading account. Why do you guys keep saying that? You guys, it's a gambling account, okay? I don't know who needs to hear this. There's no such thing as a long-term trading account. Okay, you either have a long-term or you don't. It's very simple. Okay, y'all, I know, listen, I know they got hella genders and shit nowadays. I get it, but there is only a long-term. There is no long-term trading account. This is gonna fuck you up. You are confusing yourself. You are trying to justify it. That's like, I don't even, man, do you guys cheat on your significant others? Because I don't know. You guys, if the wording, you like, no, it's not. It's not a girlfriend. It's a female friend. It's a short-term marriage. Oh, okay, wait a minute. You motherfuckers. No. Okay, it's not, there's just no, it's a trading account and then there's a long-term account. Okay, trading is tantamount to gambling. That's okay. Nothing wrong with that. That should make you more defensive, worrisome in a good way. And then there's a long-term, separate. It does its thing, but there's no long-term trading. I don't know, where did you guys get this idea? They're like, nah, it's a short-term marriage. What? That doesn't make sense. Man. It's a long-term plus. It's a day trading plus account. I hope I read it wrong, but then I look at it and then just please, man, please. I don't know why I keep hearing this. I've a lot this year, actually. It's a trial marriage. No, that's not. Lord. Just have your trading account. That's fine. Have your long-term separate. That's it. That's that, man. That's that. I know, man. We live in a world of branding, right? Again, prediction markets. It's gambling. Dog. Oh, I saw the crate. I think we got like 2 more years. I think 2 years tops, maybe, on the prediction markets. Because do you know what they're starting to say? This is the propaganda. Are you ready? It gets so funny. It gets good. Are you ready for this one? Are you ready for this one? I heard somebody say the risk-free prediction rate. Do you understand? So they're like, yeah, if you put your money into bonds or a money market, right now the risk-free rate is about 4%. But if you go and take the risk-free predictions on any of your parked cash, you are getting 10%. Yeah. Do you get it? So that's where they're gonna be and then if that takes off, or if like people start doing it, that'll be the trigger event when it like gets clapped eventually. Because then people are like, yeah, all you got to do is just buy the 99%. Oh, you get that back at 10%. And then, yeah, no, be careful. Because that's how it happened with staking. Staking didn't get clapped until motherfuckers were like, it's like a dividend. Until they're like, wait, why would it's risk-free? And then they were like, you could get 10, 20%. I'm like, oh, no. Oh, no. Yes, they said risk-free to a gamble. I didn't think. That's what I'm saying. That's risk-free gamble. It's the wording. I love it. You could do weekly deposits into the long term, yeah. But just remember, if it comes in, it's not coming out. Magan, isn't that the gene editing one? I think we have this one. Long term. Yeah, we hit Magan. Which one was that? Which one was the gene editing one? It is. It's when they start saying they're fucking crazy as shit. They're like, risk-free. Like, no, bro. No. Long-term stocks and long-term. Finn, and then Warby all day, bro. All day. 9 o'clock. So we got what? 2 more hours till the Fed? Are you ready? Long-term stocks are always here. Dude, that song's a banger. You know that? Shout out to Elsa. I don't know, man. I hope Elsa don't get, man. What if Elsa turn into Miley Cyrus? We fucked though. You know, that'd be terrible. Terrible. Risk-free gambling in Canada is real estate? Nah, bro. It only goes up there, but I remember there was a period, like was it beginning of this year, end of last year? There were some people selling houses cheaper in Canada. That was the first time I've ever seen it. MGI or MIGI? What the fuck is this? It's literally branding, dude. We live in the branding era, but then they got people branding to themselves. That's it, man. I don't even know. They literally branded fat as beautiful. We live in the branding generation, bro. I grew up in the generation where we used to like criticize ads and we'd be like, that's fake, that's unrealistic. That's it. They're like, you know, you're getting sold. And then the next generation was like, nah, this is it's branding, marketing. Polyalti in Google. No, there will not be a philo today. No. I could have a mini one for you, actually. I could give you a mini philo right before our preview, you know. What's wrong with Miley? That's what got you in that whole conversation? So out of everything I just said, from the fat people to branding to gambling to risk-free rate, Miley Cyrus is what stuck out to you? No, nothing's wrong with Miley, man. Nothing. You're fine. I didn't think that was going to be the... Yeah, I didn't think that was going to be it. Don't worry. We're making progress as a generation. The problem is when we degress. You know, like I said, I think a lot of Did I get me? No, hello? Hello? I'm seeing this. Did you guys know this? The state of California, if you don't log into your your crypto accounts, it's considered abandoned property. And the state of California takes your assets. I just got an email. I'm reading. I'm like, what? I already cleaned that account out. Remember I logged into those accounts last time I logged in was 2022, the beginning of the year. To remember when I was like, wait a minute, I have all these old crypto accounts with money in it. Yeah, literally. Our records indicate you have not logged in or contacted us since February 18th, 2022. Under the unclaimed property laws of your state or jurisdiction, your account is now presumed to be inactive or abandoned. Consequently, if you do not promptly take action to indicate that your account is active, they are obligated to report your account and transfer custody of your assets to the state. Depending on where you live, you may be required to liquidate any digital assets in your account in US dollars before transferring them. To avoid turnover of your assets to the state, please log in within the next 30 days. Yes. That's crazy. Dude, what? Dude, what? Dude, that's kind of crazy. What's crazy is people are like, yeah, I fucking love Gavin. Fuck yeah, let's keep doing this. Dog, what? What do you mean? I have nothing in it. It says $0 USD. I have like fractions of a fraction in there. But then last time I did that, those fractions fucking ballooned. But I had more than fractions. But then, yeah, what the fuck, bro? Brussels raids Temu in forged study investigation. I remember this report. I heard about this. I don't know why I never took it seriously. But yeah. I just got notified. So damn, you better log into your long term. That's crazy. That Migi is going up still. If you don't log into your... Is it for 30 days? If you don't log into your crypto account... Wait, hold on. Let me read that again. If you do not contact us within 30 days of receiving the email. So I think it's if you don't check it for 2 years. 2 or 3 years, it's considered abandoned property. Dog, it's harder to abandon a property. Like, if it takes 7 years. Just, why are you doing it so quick on fucking digital assets? Yo, that's crazy. Dude, that's a trip. Like, literally, because, like, if you abandon a property, it takes, like, 7 years to go to auction. And, like, you have to not pay taxes for 7 years. Yeah, bro, what the fuck? Yeah, if you go to jail. Apple CEO discussed smartphone age rules. Uh-oh. Well, isn't it going live in Australia? That's for Google. I think December 26th in Australia, to use a search engine, you're going to have to verify your ID. Yeah, that's why. I remember they said they saw him. And Uber's still dumping again. You kind of had negative autopilot news. That's great, dude. Fucking Gavin. You just paid property taxes for the first time? Wait, it wasn't, you weren't paying it like, it wasn't like tied into your mortgage payment? Did you like defer it and pay it all at the end of the year? Well, welcome. California property taxes aren't that bad. But yeah, taxes, you're moving up in life, baby. That's you're like, yeah, the taxes are bullshit. But yeah, it's part of the game, man. A good thing you paid it. Otherwise, Gavin will take your house. He will take your houses. That's crazy. Yeah, all of mine, I bundled them in there. I mean, but if you do have a house paid off with no mortgage, you'll have to pay it on your own. But then you could do it like quarterly or semi-annually. I'm a sovereign citizen. I'm not paying. It's my land. How can it's not ownership if okay, calm down. I only answer to God. Oh my god, how are we? No, just pay the fucking tax, dude. That's not gonna work. I don't answer questions. My religious beliefs. Your neighbor is like that. He's probably he's either really fun to be around or very obnoxious. It's one or the other. Some of them are a good time, bro. Some sovereign citizens, they go hard. So then he's really gonna find me then if they're really putting in an act the fucking abandoned property rule, they're definitely gonna start fining people $1 million for fucking talking on the internet. Oh, California. Well, I don't know. My girlfriend said we should just move to Switzerland. You know that? I still think she's a spy, but she's super like Switzerland. You know that? Every time, anything, she says, why don't we move to Switzerland? She says I'd love it. And I'm like, fucking, I don't like anything about Europe. But, you know, but then again, they don't even vibe with the EU. So that's the only advantage. Mortgage rates hold steady. EMVB. Oh yeah, is that so that they could find Satoshi? Caesars, CPS, and another one. Couple poppers. Damn it, I can't type. Yeah, Caesars, CPS, and what was the other one? GEN? Yo, Gen Digital. Just popped up 2720. They're just not loading. They're gonna move to Florida. Switzerland? I think Zurich is like the main place. I think Ozermatt is where they have like cool skiing, and then what's the other one? There's a place where all the Russian people go. There's like a nice, super bougie ski town. I don't know. I have to ask my girl. CRD All, Steve Grosso. It's not gambling. Yeah, I think those are all separate. They all just three-letter tickers all in a row. The news today is getting ready for Powell. There was Meta news and Baba news in the morning, but they don't really have too much of an effect. Gold and silver are still being looked at after the last couple days. And now we wait till Pow in the fun bunch begin their anti-Trump campaign. But then again, we'll see the dissents. Depending on the level of dissents we get, it's going to start turning into a very interesting time. That's the crazy part, because I think 3 dissents is like the most since like 2000 something. 4 dissents would be the most since 1992. And then 5 dissents would be the most since 1983. So we'll see. Yeah, one of the yeah, bro. That's good. I swore off skiing too and snowboarding. I'm too old for that shit. If I fucking crack my knee, bro, I'm out for like 18 months. I'm not doing it. I'll do a sled, 100%. Have I heard of photonics in place of copper for GPU clusters? I want to say vaguely, but is that one of the ways to save energy? I've heard a lot, and then we've talked about the fission stuff. That's the next level of all of it. Dog, no snowmobiles? I know a guy who died in a snowmobile accident. I knew him, and I found out how this motherfucker died, and it was a snowmobile accident. I was like, how? And then I have another friend, their dad died in a fucking skiing accident. It doesn't make any, I hate it, bro. Did Ken Block die in a snowmobile? I thought he died driving. But he was like flipping a snowmobile. No, they would only be able to take your Bitcoin if it's on exchange. So yeah, they couldn't take any Bitcoin that hasn't hit an exchange. So yeah, they still couldn't find Satoshi. You didn't know Ken Block? Yeah, Ken Block died a couple years ago, bro. Yeah, but like I tell my girl, I'm like, you could die skiing. She's just like, no, you can't. I'm like, what? It's insane though, bro. These Swiss people are like, they've done it since the day of birth. Like, it's actually nuts, bro. Like, I don't even think my girlfriend knows how to jump. Like, you know what I'm saying? Like, I don't think, like, if I told her, I said jump right now, I don't think she could jump. I don't think she knows how to jump. She's not athletic like that. Like, she don't know how to do that. But then she goes on the fucking skis and just, it's insane, bro. So, nah, I don't, yeah, man, it's fucking wild. So I'm not even like, I just don't, I said, we don't do that. She said, get an instructor. I'm like, no, I need the turtle. I need fucking football gear. It's not a good idea. It's experimental, conduces less heat. I mean, dude, that's whatever, like, whoever could come up with a way to save the energy. I mean, that is the barrier we talked about recently, is that, and then that's the part I don't, speaking of all this crypto, that's the thing I don't think people really get now, is that you need a lot of power. If you want to train any model, don't matter what type of chip. That's why the TPUs were kind of a crazy update with Google. But everything, you try to train anything from scratch, it costs so much money in electricity costs. Hey, yo, we should do a push-up, you guys. I'm sorry, I got excited with the Fed, so we forgot 8:30. I think we were all too excited. But it's 9:30. You guys should stand around. At least relax your eyeballs. Stare away from your computer screen. 10, 20, 30 feet away and just blink a couple times. Go blink, 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 blink. Blink, 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 blink. Oh, wow, I needed that. Oh. Woo! That's what's up, baby. Oh, my goodness. Wow. Don't underestimate it. You know, that's optometrist approved. You know that? That's what the optometrist told me. There's an optometrist recommendation. And please, I have a feeling right now. I have a strange feeling. One of you are sitting with your legs wrapped behind your chair. I don't know why. I feel it. It's odd. You look like a ghetto cowboy. You look like you ride in a weird ass fucking dolphin chair. It's odd. It's giving me bad vibes. So please correct that and put your legs in front of you. Okay? I sense another person. You are kicking your nuts right now with one of your legs as you lean towards your mouse. It's very odd. What shape is that? I can't even forecast the shape. You look like a twisted S kicking yourself in the scrotum. It doesn't make any sense. It's terrible for you. So please adjust your posture right now. Okay? Just adjust. I know, just a reminder. That's not going to get you anything in life except pain. I don't know if you know this. You look like the number 4. Yeah, so please fix that, okay? Just fix that and you'll be good to go. All right, man. Move around a little bit. I'm doing some hip twists. Oh, I gotta get my foam roller. I gotta do some psoas. Yeah, there are many types of the Swiss people. They speak Swiss German, and then they have another dialect. But yeah, they all speak German. That's why my girl speaks German, French, and some other shit, and then Swiss German. That's why I think she's a spy. She's like, that's how the country is. I'm like, that's CIA training, motherfucker. Not fooling me. That's what I'm trying to break her spirit down with McDonald's. I'm trying to get her addicted to McDonald's so she defects from whatever European MI6 organization. You can't resist the 10-piece McNuggets and a Big Mac. Eventually, you see what I'm saying? It's a smart strategy. And then I bought her a puppy. How you gonna what? What are you gonna do? I bought you a puppy. How are you gonna get mad when you got a puppy? Can't get mad with a puppy. See, I've thought this through. The Grinch meal? No, bro. I tried that one. I tried something that was like a limited edition, like with a milkshake. Was it the fucking purple one? And that shit tasted terrible. I had one. No, is it the peppermint one? There was one that was just disgusting, dude. Honestly, just fucking give me a McRib and call it a day. The McRib ain't even that good, too. It's not, if we're being honest. The McRib is terrible. And then any of that chicken shit that's not a chicken McNugget is terrible. You know that? I had one of them McDonald's, like, chicken wraps. That shit was plastic. It was disgusting. Dog, it was disgusting. It felt like, like on the basketball shorts, how you have that, like, elastic waistband? That's exactly what the chicken felt like. It was disgusting. But yeah, let's be real. But the McNuggets and the Big Mac, you can't go wrong. The McChicken is fine. But yeah, other than that, nah, bro. I don't even think it is chicken, dude. It was terrible. I swear it was some 3D printed bullshit. Oh yeah, I'm a big fan of McDonald's breakfast. A McGriddle, go hard. It goes super hard. Yeah, the Grimace shake is terrible. I remember when everybody was getting hyped up on it, and they're like, yeah, the Grimace shake. Yeah, it's so good. It tasted terrible, dude. Oh, man. It was not a good time. That's when I slowly started to realize, I said, everybody's just a liar, huh? Everybody just lie for social media, huh? They don't even care. They don't even care how obvious the lie is. They're like, I'm a woman. Okay. All right. I gotta go to the bathroom. I do, but please finish your stretches. That's what I'm doing now. I just got done.
Check out,
I got the blood flowing. You can tell by my jokes.
All
right. So why is it down 68% year to date?
Oh, they had like this huge issue with like their sales to Argentina and going back, and they brought in a new management team a few months ago who came in, or maybe it was about a year ago actually, who came in and said like, hey, the Argentina business really has been the primary driver of growth. Everyone just kind of freaked out. So now there's a credibility problem. So you need to get credibility back. You need to get it back to this double-digit earnings growth, which I had for years. But that growth needs to be seen as more broad and not focused because of currency issues, what should I say, like drivers coming from Argentina for years. So there was like a real issue there.
Okay,
yeah, but they still
the
make
market likes to call.
Yeah.
You're looking at me like you want to say something.
No, I'm not being critical of your position. I'm actually questioning you as a shareholder. Do you feel as though management has done a good job in navigating the challenges? Because it's not just been one earnings report; it's been several earnings reports.
Well, obviously not. She's already said that it's a credibility problem.
Well, it's tough, and so this is the thing. So you have a relatively new management team, and they came in and were kind of like, whoa. Right, so it's a couple quarters where they're trying to figure it out. I think they kitchen sinked it this time to really say, let's clear the decks. So you definitely need one or two more to see what this team's doing and how they're going to get it back, and will they really be able to. We're in a weird spot with it where we've owned it for so long that we actually still have a slight gain on it, but we think it's really undervalued. That $110 price target, I'm not so sure. So we may take some off the table next year. I said when it traded down the first time and I was on, I said, look, we will use it as a tax loss, right? We might buy it back after the tax loss.
$110 would have looked good at the beginning of the year.
Oh yeah,
not
it
now.
did.
66 or whatever it was.
So it's a tricky one. So we have like some people with gains, some people with big losses. We have a tax loss that we could use. Do we need to use that this year? It's tricky.
It's a pretty bad streak, though, of 4 consecutive quarters where you see significant declines post-earnings.
That's why.
Correct.
Somebody says that it's a credibility issue.
Yeah, but it's not the same old management, right? It's a new one. So you got to give them a chance to get it back.
All right, let's get the headlines with Contessa Brewer. Hi, Contessa.
Hi there, Scott. Homeland Security has reportedly signed a deal to create a fleet of 6 Boeing 737s to use for deportation. The agency will spend nearly $140 million to fund that effort, according to the Washington Post. Now, that money reportedly comes from the massive budget increase in the One Big Beautiful Bill passed earlier this year by Congress, which added $170 billion for immigration enforcement. 12 Senate Democrats wrote a letter to the Secretary of the Navy expressing concerns about a review he's conducting into Senator Mark
You guys
Kelly.
want me to fuck something
they
up
call
for
the
you?
probe baseless and political.
I could
Defense
give you a really
Secretary
bad
Pete
food
Hegseth
recommendation.
ordered
It's
the
bad
review
because
last
it's
month
good,
after Senator Kelly
and it's
participated
unhealthy.
in a video
Even my
urging
mom acknowledged
military
it. My
and
mom bought it
police
for me.
officers to refuse
And she said she waited to
illegal
give them to me because she knew
And
I
an
would eat them all.
inquiry into the
I don't know
French
if you could handle
government
this.
finds thieves that got away with $100 million in crown jewels at the Louvre escaped with 30 seconds to spare. The probe in the French Senate also detailed.
I hate it. I don't know. No, I'm not going to tell you. It's not worth it. I don't want to hurt you. I'll hurt myself. Can you hear it? I don't even know if you guys know about these yet. That's why I don't want to tell you. They're insane. Okay, I'll tell you. It's at Costco. What is it called? Oh, yeah, here it is. Oh, they have them on Amazon? Fuck. Yeah, bro, you don't want these. You could hear it, bro. It's so bad. They're like 60 calories a cookie, but then you're going to eat like 10 of them. I use them to take vitamins. So then that way I don't eat my vitamins on an empty stomach. I just eat down like 2 of these cookies. So yeah. Dog. David's butter pecan meltaways. They're fucked up, dude. They have them every year at Costco. My mom got them last year. She already gave me a box now. They're terrible, dude. They're terribly good. I hate them. I hate how good they are. Because I don't even like these like dry ass cookies. Like these are old people cookies. You know what I'm saying? These are like old people, like you would think it's that old like weird dry cookie. No, bro, it's terrible. It's a sin. You ate half a box, dude. Yeah. Nah, bro. They're bad. They're very bad. Has pecan. It sucks. If you're allergic to nuts, you can't have them. Unless you're really willing to die for it. But that's a personal decision. I did ball yesterday. I didn't end up getting in a fight. That was good. That's it. I had to take it easy though. So I said Powell days tomorrow. I can't get too sore. I lifted though too. I got a good lift in. That was nice. And then good stretches. I've discovered some new stretch. I might need to hit that though, low key. I've been doing lunges, but I need to see if I could find that stretch for you. Let me see if it loads. Because I can't show you like Instagram shit without like fucking logging in. And I'm not logged in. Because I found this stretch on Instagram and it's fucking dope. Long term. You said skill issue? It is. Honestly, most things I got pretty good discipline, but that cookie, bro, it's not. Nah, bro. It's different. Come on, please load. I hope this loads. Oh, okay, ready? So here, would you guys like to see the stretches? I'll show you. These are the ones I've been doing the last couple days. That's why I remember when I've been playing the audio and I have to take like a minute at a time because I do all of these for like a minute. Holy shit, it loaded. All right, you ready? Here they are. No, refresh the shit. So you do the first one. You go like that. Then this one's hard. If you have really tight hips, you're going to realize how fucked you are. Yeah, these three right there. That's it. So one, you go left leg, one leg out, and then just push up and hold it for a minute. No, you don't need beauty moves for women. That's it. Then the second one, right leg under, left leg over, and then you push them both down, and then this one will hurt. Yeah, bro, do all those a minute at a time. Oh man. Oh, dude, these are fire, bro. Fire. I'm telling you, they've been opening up the hips a little bit. Yeah, so there it is. Good luck. Yeah, no, do them right now. Honestly, fuck it, I'm gonna do it right now. You know that but this is why I would have to play the shit because I'm like, I can't look at the screen the same way. I'm doing that one right now. See, you push up. Oh. Woo! I'll show it. Nah, do the first set first, and then I'll redo it. I just got into this, bro. Honestly, that first one, you gotta kick the straight leg like really back, and then you'll be good. Oh man, happy Fed Day. This will get you locked in for Powell, bro. It will. You're gonna be free in the lower back. Oh, all right, that wasn't a minute, but okay, here's the second one. It goes quick. You gotta watch out. Wait, can I pause it? Yeah. So go like this. So lay down, put your left leg under, and then your right leg over. So just like that. And then you hold it down. So you take one leg, one hand pushes your knee down, and then the other hand holds your leg down. This one's hard. I could do it on one side really easily, but then the other side is fucking... Oh, it's painful. It's painful. Go, you gotta do this one. I don't have the wall heel one. That one I learned a while ago. But then when I tighten up, it's simple. Just put your heel against the wall and then just drive your heel into the wall and lunge forward. The other leg isn't gonna be on the wall. You put that one in front of you and do a lunge and then drive your heel into the wall. You'll feel it through your glute and then the front of it. This one, bro. That's the one right there. This one's a little harder. See, I can do it on one side easy. Oh, I'll do this one here. I gotta play you propaganda. That's it.
But said there could be an upside case next year. And I think the reason is that the banks are seeing a pickup in loan growth, especially on the commercial side. So they are seeing a pickup in terms of corporate loan demand. And I think the second thing is, look, increased consumer spend is leading to increased consumer lend. The other thing I think that's driving it is the banks are going to benefit from deregulation from a capital standpoint. There's a lot of excess capital in the banking industry today. That is probably going to grow next year as a result of deregulation. And I do think the banks are now at the margin looking at areas where perhaps they've been a little bit more risk averse from a lending standpoint and looking at whether or not there's an opportunity. I mean, one of the areas that has come up is commercial real estate lending, with a lot of banks saying, look, this has been shrinking for the last 2 or 3 years. We are now starting to see it plateau, but we are expecting that commercial real estate loan growth could actually grow next year. So I think the loan growth picture, I think, is actually pretty good. And also keep in mind, look, lower short-term interest rates does. Okay,
here's the last one. See this one? So go, put one leg straight.
Yeah.
Put your left leg 90, and then you lean and you just kick it back. This one is gonna hurt you, bro. This one's gonna hurt you.
I think are feeling better about that metric.
Yeah,
this one, you're not. I'm telling you, this one, it looks harder to do, but it's simple.
all of your
You put one leg on the
like
back of the knee and then just lean over to that way with the leg kick back. That one will hurt. And then put your arms in front of you.
What a great time.
Put your arms in front of you and your head straight. You're gonna you'll even feel it in your chest if you got a tight chest.
Without question, one of the most popular bank stocks
crazy.
has one of its worst days in 8 months.
Damn, Warby's still going.
Even the man who did the interview on the stage, the conversation that generated that comment, said just now he's surprised. What do you do with that as a shareholder?
Surprised as well. And I think it now comes down to JP Morgan's ability to increase revenue growth consistent with the expense growth, because otherwise you have negative operating leverage. If you don't, in 2026, deliver a 9% revenue growth, and by the way, the street doesn't expect they're going to deliver 9% revenue growth in 2026. They had a very good year, 12%. The year prior was 22%, so they've been delivering on that revenue growth. Expenses in the first 9 months of this year only grew 4%. So it is surprising, and I will be proven wrong in buying JP Morgan last week, where I did, up around this price level, if in fact they don't deliver on revenue growth. The other element of it is that what does it do for the industry itself? Does it now create an environment where it's almost like an arms race where everyone's spending? And again, that's a challenge for certainly the money center banks.
You know what it means is that pay attention in January when you get earnings.
Now,
all right. There's going to be even more anticipation for the other names in the group, not to mention JPM, to hear from Jamie directly, obviously, in the analyst community on what they deliver and what this issue.
That one's this one's the best one for you, even though it's the easiest. The other two, though, they'll just determine if your shit's like super tight. I'll do it. They say do it before you like wake up and go to bed and shit, but I think if you I do it all the time now. No, because I did them the other day. My shit was like really like sore, and then I got freed, bro. Long term. Dragon breath. Apple Cook discussed smartphones, age rules. They're reiterating that. Are we still on a delay? I don't know. Ask the news. You left for 2 weeks. What did you think was gonna happen though? You like me when I go to a restaurant. I try to go to the bathroom before my food gets out there, because then I'm like, I'm gonna leave, and then when I come back, the food will be there. You thought that was gonna happen with the stream? Well, I hate to inform you, that did not happen. But we talked about it earlier today. We were talking about whether or not we were going to change anything. We're either going to operate the stream exactly how we did this year, or if you guys want to go back. But if you want to go gambling mode, we're going to go full gambling mode. So there's no in between. Whatever you do, you must do it hard. You must go all the way. But then again, do you want to destroy society, or do you want to plant seeds for the next generation? That's the real question. So, Brian Kahn pleads guilty to defrauding hedge fund investors. Happy Powell Day. The dragon breath is so it relaxes your jaw and like your face muscles. And then you get a good deep breath in there. I know, 1 hour and 15 minutes. So I got a little mini philo, and then I think we could, what's it called? I think we can begin our preview, because I got a couple of things to go over. It took me about I think it took me like 15 or 25 minutes last night to go over. But then I didn't go over the statement as well as some of the other stuff. So we have a few other things that will be fresh. But yeah, it's going to be both. At least we'll be prepared. I mean, last time we still were prepared, but we didn't really expect much. And then Powell came in. He said, "You gonna disrespect me?" You know, he had something to prove. But yeah, I am going to. I'd rather be more prepared than not for Powell. So we will see, man. We will see. Oh, you got your first crib? Let's go, baby. Dude, thank you for actually doing it. Thank you for becoming another home-owning Chad. Thank you for putting yourself on the path to long-lasting assets. Amen. Amen. Long-term discussion. I think we could do it every day. I mean, I still had a goal this year. We were talking about the diamond. We ended up getting Intel, but yeah, I mean, I usually do have the same goal, but it does get a little different because now, you know, like my goals for like there's thousands of people who have been following along for several years. So, and they've followed and grown at a different rate. So like, even in a weird way for newcomers, the goal is going to be different. I mean, you should be a little bit more aggressive, and you got to also figure out what's best for you. That's why the original video still applies, but people don't like hearing that one. But yeah, so I'm always going to have a goal, but then at the same time too, we're not going to be like restricted to it, more or less. And then for some people, that's what I'm trying to really guide people on this year, is that you gotta use the framework, stick to the rules, but my goal isn't necessarily going to be your goal. All right, depending on what you're trying to achieve and where you're starting at, you're gonna have to, and again, that's why it's more motivation to just put in the time now and get this thing going so that you could get a better foundation, because you're going to have to do it regardless. So that is, but yeah, I don't think that really changed this year. I mean, you should have been aware of my goals this year. I don't think we left that out. Where you been, dog? Yeah, the dragon breath, it hits. That hits. You should move your face around too. But be careful, don't crush your bones. This isn't this isn't looks maxing. Just get some good relaxation. You know, move around a little bit. I don't think people realize how like still they sit at a computer. It's very easy to get like still. DRS had a similar laser to Boeing. It's called Dragonfire. That talk inspired that, huh? That's cool. I didn't know people were working on that. Oh shit, this thing's up a lot. I was gonna say, I thought if that was down on the year, I would have been like, wait a minute. You get some laser stocks on the low? Oh, I love pacing. That's how I do my phone calls. I just pace around. Amen. God is good. I agree. I see. Just shoot me a prayer, dog. Give me a good prayer. Live in wisdom and get me a prayer. Okay? But if you live foolishly, you could keep the prayer. I'm good. That's why. There's some quality in there. It's gonna be quality. TSM. What was the other one? That Migi. Whatever that is keeps going. I think it's good time. I think we could knock it out. Merry Christmas, Chad. Merry Christmas. Long term. How did that get stuck in my head today, bro? Affect companies like Baba? Yeah, everybody's going to get affected. Generally, some more than others. But, yeah. They had their own things going on today, too. And then, look at what's happening, too. We're also starting to move. So, we're going to do a mini philo. And then, we're going to do a Fed preview. So if you would like a mini philo, stick around. Honestly, you all have to stick around if you want it. We're not going to be switching the video today. But yeah, it should be fun for the whole family. I think it'll be a good time. And then we'll get into the Fed preview right after. So in the meantime, here's your boy. You get Uncle's Merry Christmas song. It's the best time of year, Chad. Best time. God bless you. Merry Chrism, Chrysler, Christmas. From my family and missus. I hope you get the things that's not even on your wish list. I hope you find money doing laundry or the dishes. You a real one. The season will be great. I pray you never see traffic and you never run in late. When you ask your crush out, she'll say yes to the date. And nobody getting mad if you leave food up on your plate. Merry Christmas. It got meaning if you give it some. I'm always praying for you and I'm praying for your little ones. Every time you look them in the face, no, you never done. Nah. Let that be motivating. I hope every drink you get comes pre-shaken. I hope your Uber don't cancel and is really patient. If you lose your wallet, nobody'll take it. They'll return it. Yup. See, I'm just happy if you happy, G. Every sweet you'll eat this year be made from 0 calories. These are all the blessings that I wish for both you and me. So, welcome to the family. But I got a gift for the haters too. I hope everywhere you go runs out of room. I hope every song you sing is sung out of tune. Everyone is happy and you're the one that's in the mood. I hope the dinner great, you get there, they run out of food. I hope you step on Legos every time you enter rooms. I hope you meet a pretty girl, but it's just a dude. And he doesn't even tell you by date 2. Hope you can't find your keys cause someone probably stole your car. I hope your Christmas tree falls and then cause a fireball. Hope you find easy parking and then they tow your car. For no reason at all. I hope everywhere you go has construction. Everything you have to build will come with no instructions. I hope it doesn't function. I hope you miss the pothole, avoid it safely. then drive into the Hudson. I hope your family likes you less than all your cousins. I hope you're stressed, cause you're bad at trading options. Actually, I hope it hits, and then you get a gift. Then, you feel like you can't miss, then triple up your shit. Get in the money quick. Then Robinhood goes down and your orders don't submit. Then the problem still persists. By the time it gets refreshed, I hope all of it'll dip. Bye. Okay, hold on. You get one more. I still gotta load up some shit. I was enjoying that too much. Jesus. Praise God. Amen, amen. It's a call, baby. Hey. Yeah. If we talking plays, yeah, I'm in there like swimwear. I've been there. I've done this shit for 10 years. You could have it all, but you've been scared. Big scare. Funny part, there wasn't even risk there. My thoughts been my own, yeah, I've been clear. No fear. Oh dear, who you trying to control here? My God is the weapon, I ain't boasting. Nah. It's done. Daddy said it's finished. Made me in his image, but that always made me timid. Wonder why we different, don't you ever get it twisted. It's the only way we get it. Set apart from the start, and the heart isn't ours. It's a hippie with the love, but it's David with the sword. I want peace, so that means you gon' kill me if it's war. Nietzsche, Trotsky, can't beach on the ark. Want it easy or hard, want a genie or a god. Then believe me, lil' bro, you a child, you a son of the highest in the bud. Don't deny it, we don't like it when they tell us who we are. I can tell you who I was, I can tell you who he is. I can make another song that's telling y'all about the crib. But for a second, keep it real, it's not the reason they will kill. It's the freedom in believing they want that to bring the will. But I'd rather have it now, and I ain't never backing down. Lion gonna eat me or turn his ass around. Either way, I will remain up in his name and say it proud. Here, let's say it now. Jesus. I put Jesus on the beat so I can listen to it. I got reason to believe that we living in it. You could say it's one hell of a decision in it. Ay, if we talking plays, yeah, I'm in there like swimwear. I've been there, I've done this shit for 10 years. You could have it all, but you've been scared, big scare. Funny part, there wasn't even risk there. My thoughts been my own, yeah, I've been clear. No fear, oh dear, who you try to control here? My God is the weapon, I ain't boasting. Amen. Amen. Oh, ladies and gentlemen, boys and girls, how you doing? Are you ready? Are you feeling good? Are you ready for Jerome Powell and the Fed? I'm excited. I got a good preview, but before we get into the preview, I just want to talk to you a little bit about life. You know, I'll give you a nice little pre-philo, or pre-Fed philo, and I got some things for you. You know that? I really hope this helps. I really hope it gives you something. You know, it's already been a fun day. It's only gonna get more fun. We got the holidays. Oh, so many things. But Chad, get a long term. Save 10%. And you know what? Just, you could cook however you want to cook, okay? You want to cook with a hat. You want to cook with a little bit of style. You could cook it up however you want, brother. You could cook however you want. Just don't add any ingredients and don't take any away. Meta's dumping. Don't know why. You understand? You could cook however you want, but don't add any ingredients and don't take any away. It's gonna get hot while you cooking, and you know what's gonna happen? Some things aren't gonna work. You'll find a way. Then everybody's going to be waiting for a plate. You're going to have to feed some people. And guess what, brother? When it's time for you to go, you're like, I'm hungry. And you're going to sit down to get your own plate. Nobody's going to cook for you. But you the chef, baby. Okay. I'm not talking about cooking. I think that's a little one you might enjoy. But follow along, brothers, and be wise. This is your life. This is your future. Make the most of it. You got the recipe, you got the recipe. That's it. It gets hot in there. Things aren't going to work all the time. You will provide a lot. And at the same time, it all does, boy. Listen, man, somebody got to do it. I think that's going to be a lot of you. I've already seen it with my own eyes. So, amen. That's just the first part. The second part is society. Don't gamble your future away. And I think what a lot of people are going to notice, give it a couple more years. You know, things happen slowly. I've said this with a lot of things over the years. I don't know if you've noticed. There's been a lot of stuff that little by little, it takes time. Good and bad all take time. Seeds go in the ground and then seeds develop. Nothing happens overnight. With success, failure, all of it. We're going to find out why a lot of gambling was looked down upon. You guys ever wondered that? Why there's so many laws against gambling? Why it became such a taboo? You don't know why? We forgot. It's been 40, 50 years. But let me make this one simple for you. And I don't mean to punch some of y'all in the face, but this is true. You've either been on one side or the other. Gamblers do not take only themselves down. You all think it's about destroying your life. No. You haven't noticed? Gamblers take other people down with them. Have you ever had that? You ever try to help somebody? I have. And you believe in them. You're like, no, just a blip. You don't think it? You know how many people get into a gambling problem? And then they go to their parents. They'll blow all these opportunities. They'll blow all the money they work for and save. And then they will have somebody in their life willing to help them. And they're like, yeah, I'm going to change. I'm going to do this. And nothing happens. And then all they do is they take someone else with them. You think it's just about your life. It's everybody. Gamblers do not take just themselves down. They take other people down with them. That's what we're going to understand in the future. That's what people are going to start to realize. That's why you're going to understand where the taboo came from. Just look, you have a generation of kids who don't even drink. You know why? Because the other generation was a bunch of alcoholics. So what do you think is going to happen with the gambling? So be wise. Again, that's the reality. You could speculate. There is opportunities out there. This is why mastering yourself in discipline is so important. Because before you know it, if you don't, yes, you're going to take yourself down, but you're going to take a lot of people with you. Because what do you think is going to happen? You wind up into trouble, someone's going to try to help you. And if you don't have the discipline, you don't correct it, you are going to take them down with you. Or it gets really dark and then you start doing much more shady shit. Once again, taking other people down with you. Then you'll understand where this taboo came from. Then you'll understand where the laws came from. They didn't come from no reason. It's not like they disappeared either. We just haven't seen it till now. So that's the second one. The third one, and then I'll end it with one more thing. Very, very simple. If you give into the easy stuff, everything is going to get boring. My guy, if you don't discipline yourself now, you don't discipline what you entertain within life, everything. You keep frying your brain with dopamine without any control over it. Do you not understand what's going to happen? Everything is going to get boring. So every time you should be doing discipline, working on yourself, making the right decision. You go for the easy, cheap fixes. That's why people don't talk about this. That's why lust. It don't even matter if you think lust is spiritually right or wrong. You always give into that. You always give into addiction and certain things. You're triggering and dumping shit in your brain. So then when it's time to do the right work and the work that's actually going to advance you, what do you think's going to happen? That shit's going to feel boring. I think that's what happened to a lot of people. You had so much stimulus and dopamine, crazy markets here and there, and then what happened? If there wasn't any discipline and that's all you were craving, why do you think people like gambling? Dopamine. Then the real shit, the real boring of mastery, the real opportunity, that is going to be boring to you. I would tell any of you right now, you want to build something great. You want to build yourself great. You want to build a business, especially those of you working on business. I don't think you realize you need to control what you're taking in. You need to have this discipline, because when it's time to work, if all you're doing is chasing the cheap thrills of money, cheap thrills of entertainment, the cheap thrills of lust, of drugs, you name it, alcohol, all of it, every single thing you will need to advance your business is going to feel boring. You understand? Because think about it. Nothing compares to the dopamine dumps we could get ourselves nowadays. You could go turn on the TV, the phone. Oh, man, you could get it anywhere. Everything will become boring. You want to get excited? Seriously, you know how exciting it is to grow your future? I love it. I think it's one of the most exciting things. Why do you think I get so excited for some of you? I said, wow, you grew up just how I did. Man, some of y'all grew up way worse than I did. And watching y'all make movements, that's a good thing. You should realize how exciting it is. All of these exciting things, bro. But then guess what? If all you keep doing is chasing these cheap thrills, bro, the thing that are really valuable, it's going to feel boring naturally. It makes a lot of sense. That's what I'm saying. This ain't about spiritual. You know that, right? This has nothing to do with spiritual. None of this has anything to do with what you believe is right or wrong, moral this, moral that. Nah, screw all that. I'm just talking about your brain. You keep going for the cheap, quick dopamine dumps, bro. The things that are going to advance you, the things that are really worthwhile, the things that are actually valuable are going to feel boring. You're not going to get excited. It's going to feel like a chore to advance yourself, to protect your future, to do all these. It's going to feel like a bore. Your mind ain't going to get excited. You're not going to get motivated. You're not going to be able to sustain it because it's boring. I mean, if you're comparing it to a dopamine dump every 30 minutes, every hour, every time you get stressed out, think about it. That's what you got to watch out for, bro. So I hope you get excited. And guess what? Discipline brings that excitement. That's what I've been trying to tell you. That's what I've been trying to show you. You'll get excited by it. You're going to have to put the other stuff down. You're going to have to decide what's more valuable. Hopefully you've got to experience both sides. Hopefully you've got to do it all and say, hey, that didn't serve me. That did not help me. All right, word. Make your choice. So the final thing I'll share with you before we get into our Fed preview. It doesn't matter how many books you own, my brother. You only know the ones you read. Buying information does not give you revelation. I don't know if some of y'all were here for that. I told you, I wanted revelation. That's something I prayed for coming into this year. I prayed for it months in advance. That's why I tell y'all, pray for me, bro. That's worth a lot. I got what I prayed for. Thank you, Jesus. For real. I prayed for revelation. Things got revealed. Amen. I sought it out. I was seeking something. I got it. You seek, you shall find. Does not matter how many books you own, brother. You are only going to know the ones you actually read. Buying info does not give you revelation. Being involved, taking it in, soaking in the right things, that's what's going to reveal to you. Discipline is going to reveal to you. You think you're going to buy enlightenment? You think you're going to buy knowledge? No, man. That's up to you. Knowledge is not power. You know that? Everyone say knowledge is power. Knowledge is power. Knowledge is power. No, it's not. Knowledge of the truth is power. There's nothing more dangerous than learning the wrong thing well. You understand? That's why knowledge ain't power. What if you learn the wrong thing? Are you kidding me? I learned how to cook up crack. What? How is that power? I learned how to gamble. How is that power? I learned how to destroy my life very well, but I didn't learn the things that were going to progress me. I hope you feel me. It is dangerous to learn the wrong thing well. You want your knowledge to be power, you must immerse yourself in it. You must unlock it. But it's not just any knowledge being power. Knowledge of the truth is power. Why do you think I've been obsessing over it? Accurate thought, clear thought, clarity, accuracy and truth. You know what I'm saying, bro? None of this have to do with spirituality. I've learned it's a dangerous thing to have a bunch of knowledge that doesn't serve you. Because it doesn't serve you. Knowledge of the truth, that is what is going to give you power. You could be able to judge and know what is true, and that's the truth, and that's the fact. My brother, you're going to get a lot of things. Anything else, I don't know if we could say the same. So I hope you feel me. But take that to the bank. That is your philosophy, ladies and gentlemen. So God bless every single one of you. And now, are you ready to talk about the Fed? Are you ready to talk about the Fed? Oh, did I close it? All right, I got one for you. Ba-da-ba-ba-bop. I'm in the coat. Mm-hmm. Ooh, ooh. Well, that was just a quick one, man. I hope it resonated. I hope it resonated. All right. So I got a couple of screenshots we'll go over. Let me see if this actually goes through. I'm making sure it's the right size. Oh, this might work better. I could either do it like this, or I could do it like this. And then you won't get the high-low ticker. But then I don't know if you could read it as well. So maybe we'll go back and forth between them so that you could read it a little bit. But essentially, right here, right now, you are going to get an SEP. So you should know this by many years of this. But essentially, right when the release comes out at 11, you are actually going to get a big reaction. It's going to have the summary of economic projections. It's going to tell you the inflation expectations, the rates, all of that. But now here's the real key part to everything going on right now. This is the exact same setup as last time. There's somewhat limited data. The employment, other information, it hasn't really changed that much. The only thing that's different this time around is that Jerome Powell, everybody is kind of expecting him to be hawkish. If you guys don't know, last time, people were not really expecting a hawkish Powell. The market was killing it. Everyone was talking about a bubble, and then before you know it, it kind of left us in this weird spot. So look, you could even see it. Earnings was bottoming out before the Fed, and then the market was going up. Everybody was beating their earnings. If you don't notice, the market topped out on the last Powell, and then you started to bounce up a little bit after Williams. Remember when he pulled the parachute? There's even another one. Oh, I guess I could use this one. So yeah, literally, earnings estimates were running up. The thing that topped everything out in October, it was literally Powell, October 29th. So that's why we had a big reaction. It wasn't anything underneath the surface. It was more so everything going on with Powell and the rate cut odds. And that's why I'm saying it's a very similar setup to today. But this time, people are actually expecting it and pricing it in. So this is what you got to watch out for. Essentially, we're going to see what he says. We're going to see the SEP. It's a hawkish cut. And by hawkish cut, if you don't understand what that means, people are pretty much saying that Powell's going to cut rates. And what's hawkish is he is going to give you pretty much no clarity on the next cut. Or he's going to insinuate that they are going to wait until they cut. That's what's hawkish about it. So you're going to get your rate cut, but you're not going to know when there's going to be another rate cut. So here's one of your easy factors to look for today. As simple as this, if they start saying they're going to wait till March or June to cut, if that is expressed through the summary of economic projections, if that is expressed through the Powell press conference, that is going to be hawkish. That will be bearish. That is the hawkish element of it. However, if for some reason, statement, SEP, or even the press conference, if he implies that a January cut is on the table, that's actually going to be dovish. That would be unexpected because people are not really expecting that right now. So coming into today, the next 40 minutes or so, people are expecting Powell to give you a rate cut, but then not give you a rate cut at the next meeting, possibly up to the next 2 meetings. So if he comes in and somehow implies him, the Fed, the other board members, if they could somehow imply that you're going to get a rate cut in January, that's unexpectedly bullish and people will react. But then there is a scenario too where too bullish might also be bad, but we'll talk about that in a little bit. So that's your first key. And like I'm saying now, the other thing you got to watch out for is the rate cuts for next year. So if you're not aware, pretty much including tomorrow or today now, you are pricing in about 3 cuts between now and the end of 2026. The odds of a January cut are about 30. So that's what I'm saying. It's unexpected. And if that moves around, that could be more bullish or bearish. But really what we're looking for is the summary or the terminal rate on the PCE or the terminal Fed's rate. AKA PCE doesn't go high, it's going to be about 3 cuts and a terminal rate of around 3.0 to 3.25. That prices in the 3 cuts. Essentially, it's a cut today and then either a cut in January, March, or June, then a cut in August, and then a cut at the end of the year next year. That gets you to about 3 cuts, or it could be less or more. And now, depending on what we get here in the next 20 minutes, if we start to price in more than 2 or 3 cuts, more or less, that is also going to start changing things. And then look at the dot plot, because if that PCE jumps and they start pricing in a higher terminal, then, or a higher, excuse me, not a higher terminal, a higher PCE, then they are going to price in a higher terminal, which would mean less rate cuts, more hawkish. But once again, as it comes out, that's what we're going to start getting, is that essentially if there is a, if they're all expecting inflation to go up, growth or unemployment to go up, and then they're not pricing in that many rate cuts, people are going to take that negatively. And if it prices in anything more than 3, that'll be more hawkish. But again, that is what the market's ready for. But if they start saying, no, inflation's going to go lower, if they're saying unemployment will be up to justify more rate cuts, and it's a high unemployment with low inflation, that's going to be more bullish, as that means you got way more than 3 rate cuts coming in. So keep your eyes out for that. And now, this is the best part about today. This is your secret sauce. I was talking about this in the morning and with some of the other guys last night. Very simple. The dot plot is much more important than any other meeting. Why? Because Powell is essentially becoming a lame duck. You've heard of a lame duck presidency. It's pretty much where they're president and Congress is in the way, or they're about to leave and they can't really do much. The same thing with Powell. This is one of 4 final meetings. Really, after the March meeting, it starts to turn into the transition period. Powell may remain on the board, but essentially his power is dwindling. Now, that's funny because I said this to you guys last Fed meeting, and then he ended up coming out swinging, and he said, put some respect on my name. And you saw the market reaction. I mean, he single-handedly stopped some of that bubble and rally that we saw last year. So this is where it gets interesting now, because you have the dot plot. So if Powell is going in the next couple of months, yeah, he has weight, but what's the topic everybody keeps bringing up? They keep bringing up all the Fed chairs. They keep talking about all these other Fed governors and where they stand and how the new chair will have to do this. Whether or not it's true or not, everybody's bringing this up a lot, and that's why the dot plot's going to have much more importance, because you're going to be able to see where the other Fed biases are at. I hope you are getting that. That's actually very, very important. So think about it. If that starts to occur, then what does this start to imply? That it doesn't matter what Powell says or does. If you get a bunch of other guys that lean heavily in one direction, you're going to know what the next Fed chair is up against, and you're going to know whether or not there's a hawkish or a more dovish bar, or how stable that is. Because again, if the dot plot is really spread out and it's showing the Fed members are all over the place, that means everybody's prone to changing. But if it's really skewed and a bunch of them are dovish, a bunch of them, or more of them are hawkish, it's going to be more of an uphill battle. So that's why people keep bringing up the dissents to highlight it. But now with a new Fed chair and with this Fed chair leaving, it's going to be actually crucial, because more dissents, it's going to let you kind of know where the board stands and what you're going to be getting into. Ideally, why I'm calling this the secret sauce, because the dot plot and the SCP, it will actually be more indicative of future Fed policy in the bar than almost anything Powell does. Now, everybody is going to listen to Powell and listen to the press conference, but yeah, this is saying a lot if you really want to put it into perspective. So keep that in mind. And then the other part is the dissents. Again, I said this earlier, 4 dissents would be the most since 1992, and then 5 would be the most since 1983. So we might get 5. Remember, it was just the other day we had the 3, and everybody was freaking out. But then again, people dissenting means they disagree. So if Powell and the Fed come to the conclusion that they're going to cut rates and that they believe certain things about the bar, and that's something you got to realize. I think I have it on the next one. Yeah. The bar, that's going to, people could dissent against that. And that's where I'm saying that's going to paint the composition of the Fed board. That's what is so important today, because depending on how many people are pulling apart, pulling for, pulling against, that is going to be the environment and the context that the next guy is going to be inheriting. And that's going to let you know where things will be, especially if you care about short-term rates, especially if you care about how many more rate cuts into 2026. How these guys are spread up is going to be crucial. So keep your eyes out for it. But there is that. And now finally, SPY's coming down a little bit. Again, I said we'll go back and forth between these, but the final part, and I got a couple more, but the statement changes. So I have a couple of them. I have a couple to show you here. I have both a Morgan Stanley and a Goldman Sachs sample, and then I have my own as well. But the statement changes are more likely this is what's going to be hawkish. So remember, SEP comes out with the statement here in the next like 30 or so minutes, but this is how they're going to communicate the hawkishness by making this statement pretty much explain. It's going to explain what the bar is for future cuts, or it'll explain some of the economic situation and how the Fed is viewing it, right? If they're saying it's still uncertain, if unemployment is high but hasn't changed much, all that is insinuating the exact same circumstances last time, and that doesn't necessarily, again, that means the whole cut and have doubt, hawkish cut. But this is also going to be where we'll get clues of any sort of like bar. If the Fed wants to start, and of all these Fed board members, if they want to kind of make it clear that they need employment or need the economy or need inflation to do certain things, or a terminal rate, a neutral rate, this is where we might start to see it in the statement. And literally, whether there is lack of data or not, this is how we're going to know through partially. Again, I think the SEP is going to show more, but the statement itself, there's some opportunities for some key changes. That's what's going to give you the opportunity to get an idea of how hawkish or dovish we're dealing with. So if the bar isn't set high in the statement, the only thing we're going to have to interpret will be the dot plot. But then if there's a really hawkish statement and then a hawkish dot plot, maybe it comes in more hawkish, or maybe it'll, what's been happening lately. And I wouldn't doubt Powell to do this, because I'm telling you, dot plot's way more important this time. But what's Powell's role? They go and create one picture. They give you one hawkish, one dovish, and then Powell is the guy that comes in and pretty much smooths it around the edges on the press conference. So keep that in mind. But here's one statement projection. I believe this is from Morgan Stanley. So August and September, and they don't think something's going to change here, but this is where I'm saying, I should have edited this one. But they say inflation has moved up and remains somewhat elevated. If they want, this will change if they want to go either hawkish or more dovish. They're going to change that, or they're going to explain if employment has either moderated, remained low, so on and so forth. These are the potential changes. So watch for paragraph 1 if they really want to knock home a pretty big change. That's what they're going to start showing. But other than that, Morgan Stanley only expects the first paragraph to change, and then they're going to change the numbers. And then in considering the extent and timing of additional adjustments, this is the sentence you are going to want to look for, because this is going to let you know if they are setting a bar for the next cut. I hope you guys all understand about what I'm saying with this one, because it is very important, because essentially, what do you care about? How many more rate cuts? Are they going to be cutting? How much are they cutting next year? What if you get a new Fed chair? Like we said, we want to know what they're all thinking. If they give you a bar and a target, that's going to play this game. Again, that's kind of, and then again, last time they put in considering the extent of timing. Do you guys remember what happened last time? When was the last time they used the extent and timing of? They said this before. Do you remember? Do you remember? The long term is high. So while you answer that question, the other thing they continue to decide, conclude the aggregate. This just has to do with QT, and then everything is just going to be about the what's it called? The descents. So that's from Morgan Stanley. So the extent and timing of additional cuts. When was the last time they said that? So here's another one. Is this one from Goldman? I believe so. They think it'll get the red, and then they also believe the extent and timing of. This is what is going to make it a hawkish cut. When was the last time you heard hawkish cut? You didn't hear it last time. That's why everybody got surprised. See, and they think the economy continue to expand. So that's going to be a little bit more hawkish because, again, if the economy is doing good and expanding, well, that's going to support the next line. So, yeah, the extent and timing of the cut, what does that relate to? Very important. When was the last time you saw that? Little pop quiz, mother... Do you remember? Do 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 do. Yep. Before the election. AKA, that's what they do. That's what they say when they want to pause. So the whole determining the extent and timing, that's the pause line. So that's why, think about it, they cut, then they cut again recently, and now if they're going to cut today and want to stop, call timeout, once again we get that line about pausing. Because remember, they cut right before the election, and then they paused for a couple months. You guys remember that? Or did we memory hole that? So yeah, ta-da! So yeah, that's the whole line right there. And that's what made it, that was the last time you even heard about hawkish cut. So that's where we're at now. So other than that, like we said, the last time the market really rallied, the market rally was halted, was due to Powell. Earnings bottomed out, nothing changed, and really that'll be the risk again if Powell really comes swinging, if the Fed composition is really hawkish and they are going to make it clear there's no chance of a cut in January and this cutting cycle is coming to a stop today until either the next guy or whatever bar they want to give us, then that's going to set the groundwork, and we'll see. And then end of the year is usually a little bit more bullish. So we will find out, my friends. We will find out. But other than that, it'll be more hawkish again. If they start talking about labor market weakening, that would actually, or the labor market not weakening, that's going to be more hawkish. Or if they're going to say that they need the labor market to weaken substantially, if they put that in the statement, that will be hawkish. Again, 3.5 to 3.7, if they start to say that's not really restrictive, that's also going to be hawkish as well. That's how Powell might say this during the press conference, and you might watch the algos tank it. Every time he talks about restrictive, they freak out. But if he starts to say, well, we're cutting, but we don't really see this as really restrictive, that means he's pretty much saying he doesn't think the rates are really that high, and that's why they're pausing, because, yeah, it's not that restrictive. That would be hawkish. However, if he comes in today and then he starts saying how January is more than just data dependent, and they start hinting at that, or if he just brings it up somehow, the market's going to love it. And then if they start talking, he's not supposed to. There is, I think, like a 5% probability that they actually talk about the balance sheet and that growing. Remember, we had the QT stuff. But if he starts talking about growing the balance sheet, somebody might ask him. And if he does and that leads to something good, then, well, there you go, my friends. You might actually get a little bit more of a dovish impact. So other than that, that is all that I have for you. I think I might have one more thing, actually. But yeah, welcome to the hawkish cut, and hopefully you're understanding why it's hawkish. They're going to cut, introduce doubt for the next cut, and then after they stop cutting, you don't know when the next time they're going to cut's going to be. It could be either January, March, or June. So if we don't get that, then there you go. But a lot will be dependent on the dot plot. Like I'm saying, I think the dot plot is really going to explain a lot. And that is going to have slightly some more importance than everything else. So good luck. And God bless America, Chad. God bless America. So thank you for your time, and get ready. It starts in, 23 minutes? And then we're going to get our boy Pow Pow. 30 minutes after that, we'll start getting some of the feeds up. Where is my pretty pictures? Oh, I have a couple more projections for you. So here was the last time that the FOMC saw dissents. Again, I think even Bloomberg, one of you guys just said that. Bloomberg is talking about the most dissents too since 1983. That is what happened last time. Or last time it was what? Since 1992? But you would need 5 dissents. That's pretty wild. So take a look. I mean, last time we were at like 2 dissents and people were freaking out. 3 would be the highest since like 2010 or the 90s, or 4 would be. And then 5, again, this is 5. So if we get 5, this is where you would be at in terms of governors dissenting. So, but then again, whether they're dissents for more or less cuts, that's going to determine, like I'm saying, are people going to be more supportive of the next guy, or are they going to fight? That's why today is kind of a little bit more important for that dot plot. So that's the first one. The second one, this is what every single person has said from November. So remember, we topped out on October 29th, and then what started to happen? You started to get all of these Fed guys. They started coming in, and one after the next. This was the parachute. Do you guys remember that? Remember we were talking about the parachute. Where's the other chart? So again, this was Powell, and then all of a sudden we start dumping, and then the vice chair comes in, and he's like, yeah, well, I see balance of risk in the economy have shifted with increased downside risk to employment compared to upside, which have declined recently. Does that sound familiar? And then what did Williams say? I view monetary policy as modestly restrictive and somewhat less than before our recent actions. Therefore, I still see room for a further adjustment in the near-term target. So that was really the parachute, but the vice chair did come in, start warming it up, and then Fed Williams of New York, that's what saved everything. Does that sound familiar? And why? Because he said he's down to cut rates again. And remember, after Powell came on, they were like, nah, we're not cutting rates. The odds went from 80 to like 30. And then after that comment right here, it started running up. But then you had Fed barking, layoff announcement, large companies, they give additional cause for caution on the labor market. It believes inflation is elevated, but it isn't likely to increase. That's dovish, more cuts. Fed hammock, lowering interest rates to support labor market, risk prolonging the period of elevated inflation, and could also encourage risk-taking in financial markets. So where do you think hammock is going to stand today? So Jefferson says he sees a balanced risk. Barkin said he's worried about layoffs. And then Fed hammock says lowering rates to support labor market. He acknowledges the labor, she acknowledges the labor market, but then is worried about inflation. Where do you think she stands on that? Do you know? Do you remember? Oil is popping up. I have my gold chart up still. They're probably not down. Yeah, Fed hammock doesn't want to cut. No, so that could be a potential dissenter. Fed bar, I'm concerned we're seeing inflation around 3%. Where do you think he stands? I don't even have to read the rest of it. Anybody worried about inflation doesn't want to cut. Anybody worried about labor, they're going to want to cut. Ta-da! So that way, too, you could pretty much forecast who is going to be what dot, or you could forecast if there's more dots for lower labor, they're more likely to cut. And vice versa. If you have more dots towards higher PCE, they're more likely to not want to cut. That has been the whole tariff issue that we have really been dealing with all year. So here's a projection of the SEP. So again, this is a forecast. This is from Bank of America, Morgan Stanley. So they're pretty much expecting that the GDP will go a little higher for end of the year. GDP will increase in 2026. Unemployment will slightly increase. They think PCE will stay the same. And then core PCE will also stay the same. And then the terminal 3.1. Right now, after the last meeting, it was at 3.37, 3.4. So if that comes in 3.1, that's 3 cuts by the end of the year, or end of 2026. You get a cut today, that lowers you to 3.5, and then another 3 to get you to the lower end of that range. And then here is a forecasted projection. This is where it gets crazy. Oh, I don't know. I think it highlights it right here. But pretty much on a lot of these charts, like we're telling you, if just 1 or 2 Fed members changes, that could adjust. That could get you either you're getting 4 cuts in 2026 or you're getting 3. And then again, you get a couple of these top outliers to really change. Then we're in business. But really what I would look for today is big dispersion. AKA, if you really want to get uncertainty and if it's really going to be hawkish or we're really going to get an idea of where the Fed is at, these dots are going to be all over the place. That means it's a fucking mutiny. That's the whole point. Remember, people were talking about that last time on whether or not it was going to be a mutiny. But think about it. If you get 5 dissents and then the dots are scattered, I don't think the market's going to like that. I think that's going to give you a lot more doubt, even if the SEP and a lot of other things read the exact same way. So that's what we're really going to be looking for. But other than that, it only takes a couple. But then again, look at end of 2025. Most of them are uniform. Well, again, this is the last meeting, so it's easy to be uniform. But take a look at 2026. Here's September. This is the forecast for today. So pretty much somebody who thinks that we should have, which one is this? Is that? Oh, yeah. Oh, this is all for the terminal rate. Damn. I thought they were going to have one for inflation too. So that means one of the people who wanted to cut is going to back out. The same people who think we should be at the 3 cuts are going to stay the same. You're going to get one more person moving here towards like just above the 3 cut range. And then you're going to have a little bit more. Everyone's just going to pretty much align there. And then these guys who are a little bit more hawkish last time, they're pretty much going to disperse. And there, it kind of looks like a downside arrow. But like I'm saying, if you get something outside of this realm, and we got pretty much if any of these guys move higher, and then any of these guys move lower, it's going to be a damn mutiny. But then again, we'll see. And if the market really wants to, or if the Fed wants to preserve some credibility, they may fight against that. But then again, we don't know what's going on in the meeting and what's going through Powell's head, as he's on the precipice of either closing out his legacy or becoming the lame duck. We will find out on the next episode of the Fed. And then, yeah, this is our last Fed meeting of the year. So that is all that I have. If you have any questions, feel free to let me know now. Otherwise, we will begin in 15 minutes. Oh, my goodness, brothers. Oh, my goodness. Are you ready? It's game time, baby. It's game time. I'm excited. I'm excited. Do you remember? The long term is high. Alright, I might need to go get me a carbo. It all depends on how long we do this. Do you remember a potential mutiny? Well, yeah, it might not be that bad, though. I mean, it's just going to let you know what... mutiny is fun to say, but it's just going to let you know that we're going to... just next year is just going to kind of have the same doubt we had this year. That's it. Like, remember, market was doing good. We were killing it all the way until August. Everybody was like, yeah, this is going to happen. This is going to happen. It's just going to be uncertainty. And remember, the market doesn't like uncertainty. So it just, if they want to play this game where, they want you to not know what's going to happen next and kind of debate whether or not we should be getting cuts or to justify and defend their position. Remember, half of these guys, they think that you're going to be getting inflation next year because of tariffs. The other half are saying they're worried about whatever is going to happen with your boy unemployment. And then, but remember, that was their primary goal, and then everybody ignored unemployment. Remember, just up until the election, it was all about unemployment, and then all of a sudden, it now became about inflation again. And then you've done that for a year, even though they didn't have any data for inflation. It's not as if inflation went up. But then what happened last time? You had the data being hidden because of the government shutdown, and they used that to justify. Even though they gave the cut, they still were. That's where the Fed and the dissension started to get crazy, because they're saying, well, we don't know the data. How can we act if we're going to be data dependent? And that's why today depending on the standard they set for data dependent, that's pretty much going to be the next tip in all of this. So it will be a mutiny more or less if they're all over the place, but it's not. I mean, they're all still working together. We all still have to deal with it, but mutiny is just going to be uncertainty. And then it's going to really set the stage for what people will expect in policy, and then what we have to expect with the next Fed chair and what they're going to be up against. But pretty much, let me put it this way, if there's a lot of dissensions, there's a lot of things going crazy with the dot plot and they're all over the place, the problem is just going to mean that whoever the next Fed chair is going to come in, it's going to be a lot more difficult for them to follow a plan. Or again, for some of you guys, you know, think about it. If I told you Donald Trump is going to get his choice of a Fed chair, what are 60% of people going to assume? He's just going to do what Donald Trump wants, right? That makes sense. But then if the whole entire Fed is already fucking going on strike against that, how easy is that going to be if you have 18, 19 Fed members all fucking pulling apart the most dissent since the 80s, and one half is saying inflation, the other half is saying unemployment, and then or maybe another third, and one third is saying we do nothing, we have no idea. So that just means it's going to be a lot more of an uphill battle, and you can't even be certain in the idea that whoever, even if Trump gets his pick, it's not going to be as strong, because now you're going to have to go against, again, 19 people to play this game. Even though the Fed chair ultimately gets to make the decision, has a little bit more power there, remember, these guys set the fucking dot plot, the median. So these dots matter, and now that the Fed chair, who is, you know, brought everybody together, call it whatever you want, he's leaving. So that's why I'm saying he's going to start becoming a lame duck, but now at the same time, these dots, the dots are going to give us more of a forecast. And that's why today is kind of unique, more so than any other Fed meeting. Not only is it the last one for this year to wrap up the year, but then it's really going to be about these dots are really going to give you the forecasting power. So, because again, until you're going to have 2-3 more meetings with the same Fed members, and that's going to last you into the next quarter, if not 2 quarters into next year, before the new guy even gets a hold, or maybe then we might even get some new Fed members as well. So hopefully you understand. This is what makes it so important today. But Godspeed and good luck, my friends. We got 10 minutes. So remember, we're going to be getting, what's it called? We're going to be getting the statement out in 10 minutes. We gave you the things to look for in terms of the broader SEP as well as the statement, and then 30 minutes after that, you're going to get Jerome Powell. Long term every day. I think the probability is high for Kevin Hassett to be the member, but even then, the rate cut odds right now, 3 cuts. So keep that in mind. That's why it could change drastically. If the dots are spread out, that 3 might become 4, or that 3 might become 2 or 1. And then that's what we're saying. If that statement comes in with certain changes, or a higher bar, more emphasis on unemployment, or more emphasis on inflation, more emphasis on one or the other, that'll probably count for another cut or 2. So we don't really even know. But the odds of him being the chair, I think, are pretty high right now. I would like to say 80, 90%, but it's just how everyone's been talking about it, even the president himself. Long term every day. Alrighty. Do they have the little Fed video up or no? Yeah, the Fed is already live, dude. Isn't that crazy, bro? Dude, what the fuck's happening? Oh, shit. Dude. Alright, yeah, I was tweaking out. Alright, so I'll have all of them up. The Fed one's pretty quick usually. But my Fed one's lagging for some reason. It's lagging hardcore. But yeah, I'll have both of these. We'll get the fastest feed. A find and no 1 minute delay. Are you seriously asking that question, or are you just talking shit? Because there's no way you've done years of this and you don't know where to find the Fed. So in a weird way, you just kind of, in the effort to talk shit, you kind of look dumb. I mean that in love. But you could go to the Fed website to get it. But I do believe, even with a delay on any stream, we should still have the fastest one. So, yeah, good luck, brother. Good luck. Good luck. Long term every day. All right. Well, get ready, and I will BRB. Woo! Fed decision minutes away. Here's my uncle's Christmas song. Merry Christmas. It's the best time of year, Chad. God bless you. Merry Christmas, Chrysler, Christmas. From my family and missus. I hope you get the things that's not even on your wish list. I hope you find money doing laundry or the dishes. You a real one. The season will be great. I pray you never see traffic and you never run in late. When you ask your crush out, she'll say yes to the date. And nobody getting mad if you leave food up on your plate. Merry Christmas. It got meaning if you give it some. I'm always praying for you and I'm praying for your little ones. Every time you look them in the face, no, you never done. Nah, let that be motivating. I hope every drink you get comes pre-shaken. I hope your Uber don't cancel and is really patient. If you lose your wallet, nobody'll take it. They'll return it. Yup. See? I'm just happy if you happy, G. Every sweet you'll eat this year be made from 0 calories. These are all the blessings that I wish for both you and me. So, welcome to the family. But I got a gift for the haters too. I hope everywhere you go runs out of room. I hope every song you sing is sung out of tune. Everyone is happy and you're the one that's in the mood. I hope the dinner great, you get there, they run out of food. I hope you step on Legos every time you enter rooms. I hope you meet a pretty girl, but it's just a dude. And he doesn't even tell you by date 2. Hope you can't find your keys cause someone probably stole your car. I hope your Christmas tree falls and then cause a fireball. Hope you find easy parking and then they tow your car. For no reason at all. I hope everywhere you go has construction. Everything you have to build will come with no instructions. I hope it doesn't function. I hope you miss the pothole, avoid it safely, then drive into the Hudson. I hope your family likes you less than all your cousins. I hope you're stressed, cause you're bad at trading options. Actually, I hope it hits, and then you get a gift. Then, you feel like you can't miss, and triple up your shit. Get in the money quick. Then Robinhood goes down and your orders don't submit. Then the problem still persists. By the time it gets refreshed, I hope all of it'll dip. Bye. Bye. So yeah, get ready. You could also join the locked in too for real time. That's for the gamblers, because I don't want you to gamble on there. I don't know. I mean, I am going to be looking at bonds. I would watch gold and silver too. But anything in real time, we're going to save that for the locked in guys. Otherwise, I think many, many years of your Fed training here at the Colt should help you out. And then as we are about to begin here in a couple minutes, again, you could get the live video on the Fed website. But let's get that out the way. What you want to look for, go to meeting calendars and information. And then right away, I would go for the projection materials. Again, it's going to take a little bit to analyze because we could go through the damn. Oh shit! Who's fucking playing that? Oh, where did that come from? Was that here? Oh, was that not muted? That was another. Oh man, they delay it too on the other one. Oh, my shit's already lagging. But yeah, go to the Fed website and then it'll literally be on what's it called? It'll be on meeting calendar and information. Yeah, there you go. I think I accidentally clicked it. So yeah, under projection materials, that's what we're going to be really looking for. So it's going to be a mix of both. You pretty much have to go through the projection materials, and then we're going to go through the statement. And depending on how that plays out, you will be good to go. And then I will throw up a wire for you if you want the easy ones. So yeah, you're going to get the quick headlines over here, and that will give you, it'll be up in red. Pretty much the simple one. Well, get ready, man. You got about a minute and a half, maybe less, maybe more, depending on your lag. So get ready, baby. Hey, man. Merry Chrism. Merry Chrism, baby. Oh, welcome. Welcome. There you go. They say, I want some real time. So be careful, Gamble. Remember, last time it was a shit show. So last time Powell, we'll know too. So again, there is going to be a big difference as well between, what's it called? There's going to be a big difference between how he sounds and what is read. So he might do that again. He might literally, it's going to read one way. We're going to see the dot plot. And then after that, yeah, it's just going to be about what Powell wants to do. Because remember, people were feeling good last time and it seemed pretty okay. But then Powell did come in with the not a foregone conclusion. So watch out for that. Watch out for January hints. Watch out for June hints. And then if he does start to play the pause game, you are going to get another reaction there as well. So get ready. Yeah, crypto too. I mean, considering how it moved. All right, less than 30 seconds. Good luck, baby. Shout out Chatadonia. It's here. I'm excited, bro. The last Fed meeting of the year. There will only be 3 more Powells after this. Maybe arguably 2. So get ready. Get ready. 4, 2, 1. Burp! And we're off. 3.1 on the Fed funds rate. So yeah, 3 cuts priced in. Decision 375. They cut. Unemployment rate of 4.4. Let's just go take a look at the PDF. I'm going to go to the projection before the statement. So September. Ooh, yeah, they think the economy is going to do good. They're not worried about inflation lower. Oh, shit. What the fuck? These guys. Wait, no, that has to be is that the other one? Oh, yeah, I was going to say, no fucking way. Hold up. Yeah, no, it's still a GDP up. Wait a minute. Federal funds rate, 3.4. It's a little bit higher. What is... Could you give me the wrong one? Is that 2024? No. Yeah, that was the right one. No fucking way. Yeah, 3.1. Inflation's lower, dude. So yeah, this is perfect. What the fuck? They now see GDP at 2.3. Yeah, that's odd. So they're not worried about unemployment. This is where it's going to get weird. Let's go see the dots right now. But for now, oh, you have a bigger outlier. That's fucking Moran. But yeah, that's different than that projection. So a couple of the guys went down, but then you had a couple more people go a little bit lower. So that is pretty dovish for right now. You got to wait till Powell bats it down. They removed description of unemployment rate is low. Bond buying to be limited to shorter-term treasuries. Goolsbee and Schmidt dissented in no cut. Moran dissented in favor of half a point cut. 9-3. So you only had, 3 dissents? That wasn't as bad. All right, let me go to this statement. That's surprising. I think it wasn't as hawkish, bro. That was not as hawkish, surprisingly. So available indicators suggest economy has been expanding at moderate pace. Job gains have slowed. Unemployment rate has edged up through September. So yeah, they didn't say anything about it being low or not. So that's a little bit more supportive of the cuts. And then they did start saying about purchases. They're going to start buying treasury bills on December 12th. Okay, that was the unexpected part. Remember I was telling you there was a low chance that they were going to bring that up? They actually brought it up. So yeah, they're going to be buying bonds now. It was a dovish cut. I would argue it really had, this does not read hawkish yet. Inflation has moved up and remains somewhat elevated. We're reading for a bar. Seeks to achieve uncertainty about the economic outlook remains elevated. The committee is attentive to risk on both sides of the dual mandate in support of its goal in light of the shift of balance of risk in considering the extent and timing. So look, this is the OG phrase though. That's your hawkishness. It could have been more hawkishness, but they still have it in there. So that's what you got to watch out for. Yeah. So it's still somewhat in there, but again, the dot plot, the terminal, the unemployment, and PCE, none of that indicates that we're scared of your boy. It honestly, it doesn't even seem like, it doesn't seem that bad for Hassett if he is going to come in. If risk emerge and the economy, we'll take into account. Moran, Goolsby, and Schmid. So 3 dissents. Again, people were thinking you were going to get 5. So that wasn't that bad. The Fed's, again, it's literally 3 cuts though. So that didn't change, and then everything else is good. It's weird that they said that the unemployment rate either remained low or high. Which one was it? But yeah, watch gold and silver off of this, and then the dollar, but you got to wait to see Powell's attitude. That's weird. That wasn't as hawkish, though. I mean, you got everything you expected. I would argue that you just didn't get as many hawkish views that you could have had. I remember, I don't know if you guys saw it. I had to click back and make sure I was on the right one. That's what I'm saying, bro. They're saying the economy's going to go up. Unemployment range is going to chill. Unemployment will get better in 2027. And then they didn't think it's going to move from last time. But then again, they have the same exact setup. So you got to think about it. They could argue if he wants to, he could still bat this down, because then he could just play the game and they could say, well, yeah, we didn't have the data. We still took it as risk management. You got in light of what's it called, or in the timing of future adjustments. They hit you with that line. That's the hawkish part. But the statement, it could have read more hawkish. The dot plot could have been more hawkish. But they think inflation is going down. But that had to be one dot. Let me see if I can find that one. Very interesting. Let's see. I don't know. You could see, this is where, look at the central tendency, get rid of the high and low. If you got rid of the outliers, this still reads pretty fucking dovish. So yeah, I think he might add a little bit more doubt, but I'm leaning towards, this was a dovish cut. Where's the bonds? The bonds should catch a bid if that was the case. But then again, if the bonds catch too much of a bid, that was one of those scenarios where it gets a little too hawkish. Let's compare it to the last one. Yeah, so you see what I'm saying here? Let's pull them up side by side. So you had one person, this was the last one. Or no, this is the new one. You had one more person. One person said we should be higher. One more person went lower. And then everything pretty much was the same. And then one of these guys dropped off. One of these guys got converted. So that's it. One went higher, one went lower, and then one went really low. That's it. So that's what it kind of makes sense. That's why I'm saying look at the central tendency. You could get rid of the outliers, the high and low, and it still reads generally the same. Not to mention they didn't change anything else. So I view this as honestly, I view this as positivity for the for Hassett. I think that's the real story until Powell fucks this up. because essentially that looks a lot better. Like if I was Kevin Hassett, and think about it, we were just talking mutiny. This is nothing close to a mutiny. If anything, now you got one person, the highest they think you're gonna go is 4, but then somebody flipped lower. That could have John Williams. Duh. Yeah, that was your parachute, to be honest. But this is dovish, dude. But again, I think that might backfire if the bonds get fucked up a little bit. But for now, everybody was prepared for a more hawkish outcome. I would argue that this is dovish. And you're getting the fucking buying of treasuries. Hold on. We haven't even talked about that. That wasn't supposed to come up. Yeah, bro. That's the other part about it. They just said, let me see. Where is it at? Yeah, that reserve balance have declined and will initiate purchases of shorter-term treasury securities as needed. That wasn't there. That wasn't supposed to come up. They're only going to do it on the short end, but yeah, that wasn't supposed to be in there. So it's way more dovish, dude. Habibi, easy. So yeah, the risk now is Powell and what he says about like January, and then if we get any, even gold's ripping off of that. Where's silver? I think that might be one. Here. Because literally the Fed will be buying the short end. These motherfuckers. But then again, Shy might be limited a little bit. And then watch Bitcoin too. Because Bitcoin, it is reading the end of liquidity, but yeah, I don't know. Bitcoin is going to depend on how dovish Powell is. But that could be coiling up there. You might have a different opportunity. All you got to do is be on the lookout that Powell doesn't fuck this up. Does anybody see January rate cut odds? I don't think they moved it. I hate to be this guy, but I don't want to say Goldilocks, but in a weird way, they just came in, they just gave you a pause without it fucking sounding bad. Does that make sense? Because I don't think January rate cut odds moved off of this. So they found a way to pause it, tell you in the timing and the extent. That's the hawkish part. But then they found a way to fucking, the fear is dissipating, but it's only off of 2 people. That's the crazy part. And the Fed's not it's 2 people. The Fed is not in a mutiny. That's very positive for the next Fed chair. I think that gives the Fed more credibility. Everybody wants to say that Kevin Hassett, the president, no credibility. No, I honestly, this gives me credibility in the Fed's eyes. I think they're all behaving. Does that make sense? Like, they're behaving a little better. I don't think they're misbehaving. We don't want any plays in there. Like you're saying, I'll give you guys some ideas. I already gave you one, but please don't post any strike prices. You don't need to influence your brother. But like I'm saying, I think it's dovish, you guys. This is for all of you. I don't think you need to to really fight it that hard. And again, Powell will be there'll be a put. Remember, 15 minutes at a time. You're about 4 minutes shy, but yeah, just watch out if Powell starts to kind of hit with anything. That's all you really got to watch out for. Powell could break this down in 1 second if again, this is what happened last time. He started saying everybody was feeling dovish. That's exactly what happened last time. I remember it read very well. It read dovish. And then motherfucker came in and then he said it's not a foregone conclusion. So if he says the same thing about inflation, he might say it's not a foregone conclusion about rates or whatever. But the real bullish part is the treasury buying and then the dot plot. Like I was telling you, this isn't a big disbursement. This isn't that crazy. Even if you took out the outliers, everything is in check right now. Like I'm saying, the Fed members seem a little bit more well behaved. I was expecting to see a lot more TDS on the Fed members. And like, yeah, it's not. This isn't. I'm actually surprised. Again, in the statement, they had a couple of opportunities, but the only changes they made were a little bit more dovish than not. Yeah, but then you do have a pause on the table, but we just don't know. Which, again, I would say leans a little bit more dovish. Maybe it was the data. I think John Williams, he has to be the other guy. Like, this has to be John Williams, and that's Moran. But previously, he was one of these. Because nobody went higher. Nobody wanted to act out of pocket. One person went higher, but then one person went lower, and then one person went really low. So that's 4 people. It's 3 dots that gave this, and then everything else didn't change as much either. And then again, they're buying, which that you could view as bad. Remember, if central banks panic, usually the market stops panicking, but they're going to start buying treasuries. I'd look at the banks. I think that's a good play, depending on how it plays. That's it. All you got to, the risk right now is, and then watch IWM too. Remember, that's at the breakout zone. But all you got to watch out for is that Powell doesn't fuck it up. So I'll be here. I'll be listening. If I start screaming randomly, you'll know Powell fucked something up. But that's it. As long as Powell does not beat you down like last time, I think it's a green light. Again, the move, we just got to get out of Chop City and hit the new high. But yeah, I don't know. I'm kind of suspicious. I'm surprised. That was nowhere near the fucking hawkishness. The only hawkishness is that you're not going to get a cut in January. And I think the market could deal with that. I'm actually impressed that the Fed didn't fucking decide to act like a bunch of children. So, it is what it is. Yeah, bro. One guy went higher. Or gal. How many was that? 1, 2, 3, 4, 5, 6. No, you had 2. So 2 more people went lower. Or they could have went higher. How many we have? 3, 1, 2, 3, 4, 5. 4, but then one person went a little higher. No, it's legit, dude. Very weird. It's just we got talked into more hawkishness. That wasn't that hawkish. Where's TLT? Yeah, uh-oh. See, that's what you don't want. You don't want the bond. So think about it. What are the bond vigilantes going to do? If now it doesn't come in that hawkish, this is where it could get bad. And people have talked about this theory. Because essentially, if the bond vigilantes are saying this is a mistake, they're going to fucking wreck the bonds. And then you're going to get a fat curve steepener because now the Fed is literally buying the short end as they're announcing. And that's starting in 2 days, 3 days. So, very fascinating in that sense. But it is, no, it's not. I'm still kind of shocked by this. It wasn't that bad at all. So yeah, other than that though, if TLT flushes too hard, that's gonna be people kind of, instead of a Fed mutiny, it's gonna try to be a bond mutiny. Which again, I'd take a bond mutiny over a Fed mutiny any day. Because again, we were expecting 5 dissents at some point. People would have probably expected 4. Do you guys not get that? So think about it. We thought we were gonna be having a bunch of disagreement coming into this, and meanwhile, all of them, that's it. The same people. Moran was a given for a dissent. I think Goolsby dissented last time, or was it? And then Bowman. Oh, Bowman's probably your X factor, to be honest. Because remember, Bowen dissented as well too. Goolsby and Schmid. So remember, wasn't Schmid or no? That was Hammock. Let's see what Schmid said last time. I'm gonna get you his recent comments. Yeah, your risk is the yen carry trade now for December 19th. But if nothing gets in the way of that, Fed's gonna be buying short term, then yeah, you might be able to dodge the bullet. Of course, the guy who didn't have any comments in November. So yeah, Schmid had 0 comment. Who the fuck is Schmid? All right. So it's a small reaction. I think everybody is still aware of Pow Pow. Again, motherfucker could bat it down at any given moment. That's from last time. Watching both sides of the mountain, it says downside employment risks have increased. Initial T-buying to stay elevated for a few months. Future reserve management will be significantly reduced. Was he missing because of family death? That sounds familiar. I'm going to see if you could find a Fed Schmid comment. Because that's the guy. That kind of came out of nowhere. But like the Bowman, Waller. Again, we could assume a lot from some of the other comments. Again, we knew Hammock would have been a little bit more bearish. But think about it. You know, they pulled that parachute. Oh, Dolly, too. I forgot. Remember, Dolly kind of pivoted as well. But yeah, there's no... Again, we were... 10, 20 minutes ago, we were talking about potentially having 5 descents, but you got nowhere. This is too clean. It's actually very orderly considering how they all freaked out not too long ago. All right. Well, we got 12 more minutes till Pow Pow. Crazy, dude. The lowest dot is Moran, but these other people, this is where the action really happened, though. Because like I'm telling you, compared to the last time, I took that one off, but nobody went higher, and then it was all these guys at like 3.7, pretty much where we should have ended up. Those are the ones that all changed, but only one of them went higher. AKA, what you could assume is that more people on the Fed were swayed to lowering rates in the last month or so than they were to getting worried about inflation. Does that make sense? Because again, right before Powell and during Powell, people were freaking out. You didn't have the data. There was the government shutdown. They were all getting worried about it. Inflation. In a weird way, this is the Fed kind of acknowledging, or at least giving the correct nod that, you haven't seen inflationary pressures come up. So, but there's still, again, they still gave an option. There's still optionality. They said the timing of future events, that's how they're going to be able to combat against this. So they're ready for it. That means January, this is where it's going to get hawkish right now, I'll tell you, is if he starts talking about fucking June. Again, think about it. If we're now like, okay, it's dovish. Yeah, they're leaning more towards cuts. The employment, obviously they're responding to that. Yeah. But then Powell starts hinting at like June for it to restart. That's where it's going to get a little bit, that's where I think people might get disappointed. So if they go, because now it seems like we got good things, or dovish, but then if they start hinting at a longer pause that with less guidance on there, that's going to be tricky. But like I'm saying, Powell's going to be gone soon. I think the real W in all of this is the Fed is not as dispersed as you thought, which again, a lot of people were getting worried about it. Someone's going to ask about it too. They got a pre-written drama question already. But yeah, that's not, you got things kind of falling in line with that. So we'll see where it leads us, my friends. We will see where it leads us. Do I stream crypto trades? No, I stream long-term. But if I ever played like an ETF on the locked in, but I don't have any Bitcoin place for now. I would look at it though right now, but I do think there's another play related to dollar and rates that could be a little bit better. And then, hold on, let me see if I can find this one. The spreads are still wide, these motherfuckers. His ass is gone in May. Why bond market would sell off in protest? It's what's been happening all year. Really, we talked about this prior too. It's just the idea that if the bond market thinks the Fed is being irresponsible, if they're like, oh, you shouldn't be cutting right now, and then, because what's going to happen if you cut too much, too early, it's not necessary, they're going to be worried about inflation. So that's the whole idea here, where now it came in so dovish, and if it stays dovish after the press conference, they're going to try to price in a policy error. And they're going to say, no, you should have held it. That's going to be too loose, yibbity bobbity boo. Even if you're worried about unemployment, they're going to start, saying it's sparking the inflation rise again. I know, they've been getting clapped. So I got one gift for you. So I gave you one of those last time right ahead of Powell. It was on the whole long duration idea. And for everybody else, if you have been paying attention, long duration, I took a small long duration play for now. But again, we need Powell to confirm or deny what's going on here. Because again, all it takes is, if it's a long wait, if he adds more confusion to it, then you just as quickly, this is what happened last time, it could easily, quickly chill out and do its thing. All right, man. 5 minutes. 5 minutes and it begins. I have a couple of feeds. So we'll get the fastest one. Even with a delay, you guys should be good. And then again, I mean, all that matters is the damn commentary right now. You just need to know. I'll start yelling and shit if Powell does kind of flip the script. That's going to be the key. That's it. If Powell confirms it, I think you're going to have an opportunity. You could throw anything at the fucking wall. But then again, if it same thing to the downside too, though. If Powell comes in swinging, if he drops stuff that we're not really ready for, this, all this dovishness is going to go out the window, and then you're going to remember Wall Street's going to chew on this and then digest it. So you got to watch out for that. Is it crashing the web? You guys said it's fucking with Twitter? No way. Again, I think it's surprising people. We were all just ready for I thought it was going to be more hawkish. I thought they were very childlike last time. Remember, Powell, I feel like Powell got disrespected. He was all of a sudden, he destroyed the rally for no reason. Everybody started interpreting it. You had the Fed chair, all the Fed governors all over the damn place. Like, it didn't fucking make any sense. So, yeah, it's kind of nuts. But we'll find out. But that's what I'm saying. If he does it again, that's just the risk of it all. But then the longer Wall Street sits on this, I mean, you should know how most people are going to spin it. But yeah, they didn't change inflation. They did not change the cuts, or it's all favorable. It's still 3, but that was, we were ready for a lot worse. Everybody was. That's what I'm saying, though. Last time, we were not ready for it. Last time, everybody was ready for the opposite. Everybody was ready to rally. They thought, oh, Powell, done deal. But yeah, that's it. U.S. judge dismisses admin bid to dismiss the challenge over $4 billion high-speed rail funding withdrawal. Nice. Hilton and travel. What is this, Habibi? All right, well, you're getting back, literally, as Powell's about to come on here, you are getting right back to the level. So nothing is, essentially, you're about to be unchanged since the release came out. Ooh, ooh. Let me see. There's a couple that have it, but they look delayed. We got one. All right. So get ready. I think this one's gonna lag. So again, usually the Fed one is the fastest. Problems at X. Yeah, I think Twitter's freaking out. But yeah, just get ready for it. Bonds are dying, so think about it with what we're saying there. If they want to throw a little tantrum, it's because they, again, I think the bond market had more dissents than the whole fucking Fed. Ha 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 ha. Let's see, does he believe in Christmas or not? All right. 20 seconds. The Fed's not live yet. They might begin it, but like I'm saying, I got one live feed and then we're going to see. The Fed usually puts on their own delay as of late. That's been a new feature, if you didn't know. All right, I got every feed's up now. Which one? Yep, the Fed is live. Okay. This is the fastest one. So look, even with your delay, the other feeds don't have this yet.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October.
Changed as much.
Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace.
So he's moving on from the whole cloudy situation.
Has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September.
Yeah, so I think the economy is going to do better.
In the labor market, although official employment data for October and November are delayed,
if he says it's weaker, that's dovish.
Suggests that both layoffs and hiring remain low.
If he focuses on it.
Households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5%.
Again, this is he's just explaining the dot plot now. Thereafter. We got to wait till the questions, but his attitude is not
eased significantly from
yet.
its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
This is all from the dot plot.
The committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals.
Okay, this is going to be the bar.
A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived.
There it is.
Effectively a one-time shift in the price level.
Again, if he waters that down, that's bullish.
A one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last three meetings.
Broadcom into it.
This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring
having to wait till the
plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments.
So I mean, they might have to wait for the inflation to hit
the evolving outlook,
the spike before they move again.
In our summary of economic
Take
projections,
that how you please.
FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
That gives life for January.
Related to the implementation.
But it sounds like he wants to wait to see inflation.
That these issues are separate from.
But that last comment was good.
Implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our
the bond program
and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All the hands.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from
get ready. This is either January, March, or whatever.
Jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional
so watch the January odds, but you just said yes. So they're pausing after this.
That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
So he's in neutral.
On the outlook there,
it would have been more hawkish if he said it's not.
Growth,
but you're paused now.
Easing inflation and
so no cut in January for sure, probably.
This seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Steve.
So yeah, just pause. That's why you sold off right there. Pause, no clear guidance on the future one. But
cuts in terms of
then again, he just acknowledged that was dovish.
Following up on what Howard was asking, is the risk management phase of rate cuts over here? And have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment?
Yeah, Steve, he just said it.
So it is, the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity.
Yeah, that's what I was saying. The weird
incomes to rise over
productivity,
so
but then the jobs just stay.
That's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against the cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term.
Oh, she wants
a
hawkish.
What exactly does the committee need to see?
If he shoots this down, that's bullish.
Right now, to support a January reduction.
Sure. So. Let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So, interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately
what it's going to
having
take
cut 75, and
so is it on the table?
Effects of the 75 basis points will only begin to be coming in. As I've said before a couple of times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that
it's a soft dove on that one.
We need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way
he's
data
not
are
taking January off the
collected
table
in some of these measures,
but he's not
both in
confirming it either.
inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, today. Respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick. He hasn't popped off yet. Like I said,
Nick Timmeros of the Wall Street
January's kind of live.
Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down?
Nick?
Or should we think of policy risks as genuinely two-sided from here?
So I don't think that
you just asked if you're going to raise rates.
A rate hike is anybody's base as the next.
Okay,
is
thank you,
anybody's
pal.
base case at this point, and I'm not hearing that.
Okay,
what you see is
Nick just
some
tried to.
people
What the
feel
fuck?
We should stop here, and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy,
he's saying worst case you get 2 cuts.
Is either holding here
not
or
a rate
cutting
hike.
a little or cutting more.
He literally tried to get him
the
fucking.
I don't see the base case as involving that. So of course, a data
there,
set
bro.
of
Powell's
2,
nice
now
today.
3
He's a dove.
Is not a big data set, but you are right about those 2 3-cut times in the 90s.
He says you're correct on history, but we're not doing that shit.
For the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now, and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Yeah, this is Powell's nice today, bro. The dovish everything is confirming now.
A
Just
lot
through the
of
speech.
people interpreted your comments at the October meeting that, you know, when there's a foggy situation, we slow down, to mean that, you know, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way.
I just wanted
but
you
I
to
was
slow
careful
down.
to say other people could look at it differently. So why did we move today? You know, I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought.
Okay, yeah.
You know, in terms
Between
of
that,
inflation,
he just said the labor market. They're all giving into it.
It's going to come in a touch lower.
But he's not
and I
panicking.
think the evidence
He doesn't want you to panic.
is,
Again,
kind
he's
of
bullish.
growing that
Everything's confirmed
what's
from it.
happening here
This
is
motherfucker.
services inflation coming down.
All nice and shit
and
randomly.
That's offset by increases in goods. And that goods inflation is entirely in sectors where there are tariffs. So that does build on the story. And so far, it's only a story that this is that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. You know, do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously
the right
wasn't
decision. I mean, honestly,
unanimous,
they're going back to
overall,
reality.
That was the judgment that we made, and that's the action we took.
So
just on the ample reserves point, how concerned
he's not
were
talking
people
about
around the
January
table
as
about
much,
some of the
but
tensions
he
we've
just
seen
told
in
you
money
that
markets?
they're not really seeing
I
real
wouldn't say
inflation.
concerned. So what really happened is
So
this,
again, they were more worried about unemployment. That's the
balance
bullish
sheet
part, because then
shrinkage,
that
sometimes
supports
called
the cuts.
QT, went on. We had
You just got to
framework
slow
in
down
place
on
for
what to
monitoring
expect
it,
moving forward.
And nothing
But at least
happened.
it seems like
The
they're
overnight
getting rid of
reverse repo
this
facility
be scared
went
of
down
inflation
pretty much close
bullshit
to
because
zero.
of tariffs. He just gave you a pretty
And
good
then
explanation of it.
In September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we
Wait,
knew
they
this was
haven't
going to
done
come.
the NVIDIA investment yet?
It did come. It came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months
we didn't
is
have
gonna
enough
happen
liquidity
anyway.
for tax day.
It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators.
Good answer.
Before
Good
the courts,
answer.
And we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's
again the other what's it
called?
That Intel headline is coming up again too.
We haven't had that.
So I'm assuming Intel hasn't done the NVIDIA deal. It's kind of
says that when that's the case, that we try to take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them each of them back to the goal. And that's a very subjective analysis, really. But it just tells you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to.
Yeah, he's not shooting January down, this motherfucker. Last time you knew he was going to cut in December, he's like, it's not a foregone conclusion. And he's like, January might happen.
With Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this, and after that, again,
so their forecast on the tariff inflation is getting lower.
Take 9
He's saying
months
it's
to get
small,
fully
but
in.
they don't know.
9
He's
months
giving
is also
himself the
an
back
estimate.
out, but still.
Then you should start to see that coming down in the back half of next
Again,
year.
that's more in line with reality. And now, again, end of first quarter. That's already been a time frame we've been looking at.
A new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Yeah, because he's acting normal now. This is so odd.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got to, when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, they're at very comfortable levels. They're at levels consistent. Once you get out past the very short term now, break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that.
I don't know. I think the yields will come down if you start telling the truth about tariffs.
2%, and Americans
Mr. Powell.
overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria. Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year, and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really
I developed my own newswire
that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember when inflation was very high. There was a labor shortage, so we could focus entirely on.
Listen to this
inflation.
guy, bro.
Now it's different. We actually have risks to both.
These guys sound like he voted for Trump all of a sudden.
For people, they also care about their jobs. They do care about affordability.
Look at him caring about the American people all of a sudden.
Is both to support economic
not the
activity,
boogeyman of
also,
inflation.
Make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job
gold and
growth,
silver
so
taken off a little bit differently, and a couple of other names too.
Oh, well, we know.
But yeah, Dovish everything, and Dovish Powell. He's being nice all of a sudden.
Controversial. That
still remains.
To estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just,
there's going to be a correction and not as many people employed?
And we think it's about 60,000 a month, so 40,000 jobs could be negative 20. And, that could be wrong by 10 or 20 in either direction.
Oh,
but
yeah.
In any case.
So that's what's supporting their whole idea of a weaker labor market. That's why he's more worried about it.
In a way, that's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position.
Yeah, Trump is having comments right now.
Pushing down on job
creation.
Said
Apple CEO said it's hard to find employees to hire people.
Major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time.
Yeah, if you come here every day, you'll hear the call-outs faster than anywhere in the world.
At the same time, people are not filing for unemployment insurance. And since
I got some old videos
creation,
on it. If you want to go back on the trading fraternity.
Extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much. So it's a little bit curious. But longer term, the question is, what are we going to see here? And
Bitcoin's starting to move now. Finally.
It may be that
equal weight's leading the way, and the Russell.
Technology really
significant. Dude, he's a fucking dove all of a sudden. Again, we'll go over it, but you should get the vibe by now.
Eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different.
Yeah, Trump is live. There's Qualcomm there. Qualcomm CEO Dell, and then he's talking about what happened with Apple.
People out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
the policy what?
On the committee.
I can't understand your accent.
Why is there such a division of views between the presidents and the board members?
What is he saying?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and
well, he just told you why he's dovish. This overcount in jobs, essentially.
On both sides in both groups. I wouldn't put too much in that.
Labor market, that's
and
it.
Just to follow up, please, given your growth upgrade,
literally what what Williams said.
What would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market
Again,
wealth.
silver, gold, Bitcoin, they're in their
really
own little
struggling
world,
with the
leading this
accumulation
by
of
now.
5 years
Same
now
to Russell.
of rising prices. It's
But like
price levels,
non-index
not really
related to
inflation
dollar
rate
are moving more.
holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and
everything. High ticker's almost maxed out now. Again, some more. Dollar's hitting a low. Those ones are moving the hardest right now.
So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made it expensive for them to move. And we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? That's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you'll see, you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think again all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this
How
has
come
come
no
up
one
a couple
called on
times
him?
today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that
I think he's doing it now.
I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control.
Now you do. No, not last month, motherfucker.
That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world, sort of every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so we're all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
Thank you very much. Hey, yo. All right, well, I have one for you. But yeah, not a recommendation. We got a couple of good plays during that. Now you're going to get some tech earnings after the bell today and then tomorrow. But yeah, you guys see it, right? I don't know. You guys, you see it, right? You just see what the F happened, bro? Are you kidding me? Did you guys just understand what happened? That was the first time he told the truth on tariffs. He said, yeah, it's not that bad. One time, he said, we're going to make sure. Bro, that was crazy. That was actually crazy. He was much, much different. We were all expecting the hawkishness. He came in as a dove. He had every opportunity. You even still have January on the table, but I don't know if you guys get it. Remember, I was telling you all this deflation shit, but he seemed more worried about the jobs market. He explained it. He explained why they're worried about the jobs market. He was saying that there was a strategic overcount, and then he was saying how that's all going to play out. So yeah, bro, again, people are going crazy. I'm telling you, if you have any dead contracts, you could try to ghetto spread them before. I just sold premium $40, $50 out the money, and they paid me a fucking arm and a leg. It's actually insane. So, yeah, I'd wrap any of those up. Again, if you took advantage of the plays with a little bit more time, they moved a little slower, but they got you there. The ones that I guided you to should have been good. You could have took more risk on the short term, but like I'm saying, if he just opened up the door, January's not off the table, bro. Everybody was expecting him to be very hawkish. The most hawkish thing out of all of this was Homeboy pretty much saying that he's going to that they might pause. Pretty much, this could be the pausing, but he didn't shut down January. Motherfucking Nick Timmerhouse tried to get him to say if he was going to raise rates. So, yeah, bro, all around, left and right. That was, that was crazy. That was very crazy. I think he definitely switched gears on a lot of it. And, yeah, I don't think people were really expecting that. So we'll see how it all plays out, but at this point, remember, Thursdays are bad, but then again, the media has been talking about Thursdays being bad, so maybe that ends, but yeah, bro, I'm telling you, that was way too dovish. That was so dovish, you should probably be worried about the labor market slipping, because I'm telling you, that was nothing like Powell. I think he did want to leave on a good note, because again, everybody on the Fed was well behaved. Powell did not shoot down anything. He did not go out of bounds. I mean, I'm telling you, this was all, I think we picked up on it pretty early, but then all throughout the meeting, it all held. Every single aspect of that, none of that really pointed towards this idea that he was going to, not a foregone conclusion. He acted reasonable. That's what I'm saying. That was before we even heard Powell. I was telling you, it seemed like everybody on the Fed was well behaved, but the reality is he sounds like a person who observed tariffs properly for the first fucking time. I'm telling you, he's just saying, yeah, it's a one-time thing. It's already been a year. We'll find out by early next quarter, but even then, at this point, it hasn't gone that insane. They could manage it, but then he's saying, from AI to everything going on, the jobs overcount, it really is about the labor market. And, I think he did a good job today. That's what I'm saying. I was kind of disappointed with him last time, but seems like he brought it back in. That way, too, the market wasn't too bubbly, but Yeah, that was. Oh, dude, didn't I tell you Nick Timiraos fell off? Y'all thought I was playing, bro. First, Nick Timiraos trying to make it seem this guy knows more history. He wrote a damn book on it. He know more history of the Fed than all of y'all. And he's like, well, what if the Fed board members have a mutiny? What if they all go against it? And I'm like, come on. Now he's like, what if you raise rates? Even Powell shut that down. So Powell didn't really even. He said, yeah, you said you're correct on your history, but he's saying it's not. He said, if anything, you'll get 2 rate cuts. Worst case scenario, it sounded like maybe even 1, but this idea of rate cuts, rate hikes in general, he shot that down. And again, he seems like as he rightfully should be, he is more worried about the labor market. Again, you've been watching a lot of data, even the quits yesterday. So, and then I don't know, man, you should really be asking yourself what the F is going to happen between now and January. That is what I think is even more fascinating, because whatever it is, and he was talking about the jobs over count, that's what kind of put everything in the game, bro. So I think that was absolutely fascinating. I think what your boy just did, bro, that again, very different. The whole expectation was hawkish cut. That was a dovish cut. That wasn't a hawkish cut. Powell, the Fed, they did not display any, like, it just wasn't as partisan. You get what I'm saying? Think about it. He paused. He gave you the cut as expected, but it just didn't feel like that was filled with politics. You notice nobody asked any dumb political questions. Everybody on the Fed, all the dot plot, everybody was reasonable. You could argue after that meeting, Fed Moran was unreasonable. You see what I'm saying? Go look at the dot plot. Fed Moran, that 50 basis points, that's probably the most extreme action. This was too fucking chill after all of these guys were tweaking out. I don't think it seems too dovish because, again, he even highlighted it. He corrected the bond market. Go look at TLT right now. We'll see where TLT ends up, but that's the question that Michael McKee asked him, and he's saying, well, everybody's worried about bonds. He's saying, so everyone's worried about bonds because of inflation, and he's saying, yeah, well, it doesn't matter. He said, and then he explained it how the contacts all said inflation, but he's saying it's jobs. He's saying we're not worried about inflation. Again, he made sure today to finally, this was the first time Powell actually supported and aligned with this idea that tariffs don't cause inflation. And if they were, it was going to be something that they could handle, and that there's other, orders of magnitude you should be following, which would be protecting the job market and some other things. So, and then again, he did acknowledge all of the fucking spend is coming from AI. He was very realistic, bro. I'm shocked all around. Again, you guys saw when we first saw the SEP. I had to make sure I was looking at the right one, but all these guys just started behaving very, very normal after kind of being politically extreme just over the last couple months. So good for you, Powell. I think you did very, very good. And I think Powell is definitely going to go out on a good note rather than, I don't think he's going to walk out leaving looking like he had TDS, because that was a good one. Unless something's about to get clapped by here in January. Because that's what I'm saying. If you're going to say it's too dovish, maybe you should be worried about the labor market, because it seems like he knows something, but then again, he did explain it. He said that there was a 40,000 overcount in jobs, and that's going to, when you factor that into even the data that they have, even if it's limited, he's saying how that's going to, the way that's going to reflect, that's a lot of demand going down. So even though there's a lot of AI spend, yeah, you'll get the tariff inflation, but it's small, and again, it's already by March, by April, it's done. You're going to know what's going on with it. I do think it is the jobs. I think something is up with the jobs. And now January's on the table. So now if motherfuckers want to go, and he said you're going to see the data, don't put too much weight on the data, but between now and January, any bad news will be good news. Any bad labor news will be good news. The market even has a little bit of cover to ignore inflation as long as it doesn't fucking skyrocket. But yeah, that was a very, very different Powell than what you just witnessed on October 29th. So again, that was a Powell that brought the market down. And then again, it seems like John Williams was talking about the labor market. A lot of people have been, but yeah, all of that tracks, dude. That was very weird, man. I don't think anybody was expecting that. Everybody thought we were going to get 5 dissents. They thought it was going to be a hawkish cut. There was, again, the only thing hawkish was him pausing. and he didn't even shut it down. He did not shut down January. He explained it in a way that most people could probably understand it. Just like I'm saying, that was the least politically biased he's been all fucking year. So good for him, man. And good for everybody else on the Fed, at least. Because, again, jobs affects American people. You know what I'm saying? Imagine for the last 12 months, not being clear and having a policy that was making things more expensive for credit, for homes, all of these, and then people are getting fucking fired and losing their job left and right. And then this guy's like, inflation! The tariff! The Donald Trump inflation! So good for him. It does seem like he is, going to set the sails towards the American people here towards the final end of his term. But yeah, man, that's kind of nuts. That came out of left field comparatively because he had room to be a little bit more hawkish. And then again, this time we were all ready for it. But yeah, all around it was, again, you guys even heard the reporters. They read it dovish. He answered it dovish. That he had they gave him every opportunity to shit on every single idea, and he did not take it. So yeah, man, we'll see. Merry Christmas. Jerome Powell's coming to town. He knows if there is job loss. He knows if tariffs raise prices. He knows if you bought puts or calls. So just hold for goodness sake. Hey, you better not cut. You better not hold. You better raise because they hate Donald Trump. Jerome Powell's coming to town. Well, look at that. On that note, I'm going to go pee. I didn't get to go pee during all of that. So, how do you feel, man? How do you guys feel? Is anybody disappointed? I'm surprised. I am shocked. Oh, shit, I forgot. We got Donald Trump now. He's with the Apple. He's chilling with Apple, and he's chilling with Dell and Qualcomm.
When that happens, oil and gas and energy is so big.
That's why Donald Trump ain't going to talk shit.
You don't even know what number two is.
There's no way.
Number two.
I can't believe Powell is just caving left and right. I think Powell got mad that we called it. This time he knows. We saw it through the bullshit.
I inherited very simply.
I'm very surprised.
Highest prices in history, and I'm bringing them down really fast.
They have the option to cut in January,
led by energy.
Even though they shouldn't.
And when energy
we
comes
weren't,
down,
we didn't really need that today.
I've only been here a short while. We gave them a beautiful, beautiful thing.
Oh, you're about to hit a new high.
They would have destroyed our country.
That's what I'm saying. We're getting back to 6,900. I think you're out of Chop City, bro. And the Fed's going to be buying short-term bonds. You're 20 points away. I would argue. Maybe I'm early. Maybe we front-run it, but I think Chop City's done, bro. That's it. You're going to have to get through tomorrow and Friday, and then depending on Oracle earnings and Broadcom, but this motherfucker.
In a state like nobody's ever seen.
Yeah, bro, he flipped.
Worse than anything you've ever imagined. Worse than 1929, in my opinion. Instead, we have the hottest country in the world, and we're going to keep it that way. But just to finish, we inherited high prices. We're bringing them down very rapidly, and we're bringing them down to very, very good levels. They'll soon be down at very good levels. Michael, please go ahead.
Absolutely. As everyone in this room probably knows very well, leadership in science and technology has been foundational to our economic and national security for decades. And because of the policies that you have championed and the private sector partnerships that you have made, America currently is leading the world in S&T, and it's benefiting all Americans every day. The one thing that I want to remind this group of, that many of you know, the president has been arguing for American leadership in AI well before ChatGPT was even invented. The president signed an executive order on artificial intelligence leadership in 2019, which set the stage for the revolution that we're seeing today. In the past year, we've built on that. We signed out the AI Action Plan in July of this year, which the president launched here in Washington, along with 3 EOs. And I know a lot of that effort is around creating a regulatory environment to allow for companies like yours to thrive and for the applications that you build to have the biggest impact on Americans every day. So thank you for everything that you do, and I know we're going to keep working together to make sure that America is the home for the next great technological discoveries.
All right, thank you, Michael. And Michael?
Thank you, sir. Well, look, we greatly appreciate the focus the administration has on lowering energy costs. And energy is the substrate of manufacturing at the industrial level, and really an incredibly important input to the economy. We can't be competitive without a super low-cost energy industry. And had a great meeting earlier today with Secretary Wright, and really appreciate all the work that he's been doing. This is, of course, incredibly important when it comes to AI, because it does consume a great deal of power. All the semiconductor manufacturing consumes a great deal of power. Another big area of focus for us is how we can take all this great AI technology, the AI stack of the innovative companies here in the United States, and sell that around the world. And I'd like to ask Arvind to speak a little bit more about this. Arvind?
Thank you. So, Mr. President, first, we really would like to thank you for everything you're doing for economic growth, as you said. I completely agree with you. Economic growth then drives a lot of other benefits to everything else. We also want to thank you for all the work you're doing on deregulation and making things easier for business to participate in that growth. Michael spoke of the AI stack. It's incredibly important that under the action plans that you have laid out and Michael Kratzer just spoke of, we really help promote the AI stack, which is not semiconductors only. Those are incredibly important, but it's semiconductors, it's software, it's the systems which many of us here build, and it is the software applications on top. The ability to take those to all our friends in countries, so all the friendly countries, is going to be very, very important. And we wish to work with your government to make sure that we can do that, because otherwise we're afraid that competing countries are going to be able to get that stack. So we would say that.
Anything that you're looking at that we can help you with so that you create a bigger and better IBM and hire a lot more people? Anything you need?
A few countries. We'll speak to members of your administration to make sure that those can go and that barriers get lowered for being able to do it quickly. We agree guardrails are necessary, but lower barriers would be very, very helpful.
You mean tariffs?
No.
Because are these countries are they tariffing you, making your life difficult? Are they doing anything else to make your life difficult?
It's the ability to take certain systems which have semiconductors inside them into these countries. So right now, because we have controls on where all the semiconductors can go, then the entire system is restricted. That's what we want to do. The same as
how many countries do that?
Probably a half dozen. So
I can tell you the countries already. I know.
Yes.
I know every country very well.
And
we have ways of combating that quickly. So you'll let me know.
And the last part I'd like to say is I'd also like to thank you for all that you're doing to help modernize government itself, because we think that that's incredibly important. You made a number of announcements, but a couple that I'd just like to point out. We worked with Commissioner Frank Bisignano to help make Social Security better. So I would like to thank you for your help on that. And we'll work with him on making IRS.
He's done a fantastic job.
He is. Frank's great.
He's done a great job, Frank. He's had a great career, actually left
Good luck.
a tremendous career, where his salary, I think, was 100 times greater than it is now.
Yeah, there's Louboutin headlines.
Yeah,
He said he had to step back from deals because he kept trying to buy companies he already owned.
We hope to help him replicate that now at the IRS also.
Very good. Thank you very much. Good job. Cristiano, please.
Yes, just a few points. I think, first of all, Mr. President, thank you for your vision. Thank you for understanding the importance of the American private sector in industry, I think, in the growth of the economy. I want to just build on some of the things that were said by my colleagues. I think we have built probably one of the most advanced technologies in the world, and part of it is because I think the commitment to innovation that we have in the country, but also the fact that it has been American technology for the world. So I think we have an incredible opportunity. When I think about what Michael said about exporting AI, I had a conversation with Secretary Howard. Now that the trade deal's been made, is an opportunity to really build on those trade deals and export, I think, American technology. And also, as we think about the technology, it's an important vector to drive the reindustrialization, I think, of the country with technology. So we're incredibly excited about that. I think there's a big opportunity. I think it's the next wave of growth that we can build on those trade agreements. And I think it resonates what also Arvind said about the importance of the American technology stack. And then we're just going to finish with 2 points. There are 2 exciting things happening in the world of technology coming right now. One is as AI become the new form of computing, AI is going not only to the data center, but to everything, to cars, to PCs. And
it looks like we're behind on that one.
To run models that you can only run AI in the data center. You can
AIG is massive.
Microcomputer on a computer for Enrique.
Literally, nobody's fucking even trading it.
With small server.
That might be your opportunity.
So I think we're going to see the proliferation.
There's only one, but the spreads are really, really wide. So be careful. The one that's showing is look at the last trade. Those are all jacked up.
6G. We're working.
But yeah, the option chain's tweaking like something's there.
In the LA Olympics. And I think that's another opportunity for America to lead in the next wireless evolution. So thank you. Thank you for the opportunity.
Yeah, be careful on that. But that's bro. That's 5%.
I think driving that agenda.
So we're into 6G now.
I
just finished 5G. I was a leader on 5G getting that done. And now they're up to 6.
Let's do it again.
What does that do? Give you
Let's do it again.
A little bit deeper view into somebody's skin? See how perfect it is? I like the cameras the old days. So they just had a nice feature. Now they cover every little. Let's see, Michael. Well, you're in good shape. You're not gonna. But I tell you, it's the 6 is coming, huh?
It's coming.
Does it ever end? And what happens? You'll be into 7, right? Before 6 gets old.
Yeah, bro. There's an AIG again.
Anybody have
I thought we were late on it, but it's just that no one's even fucking trading it. That's a massive name.
As well for the openness of your organization and your team. We always find people that wants to hear what we need and is willing to design programs that will support us. So thank you for.
Well, we're here to. We want you to just dominate the whole world in terms of what you do. It's a very important world, and you're doing that. And we're making it easy for you, and that means you're going to do it faster. It's more jobs, and a lot of good things happen. Right? Go ahead, please.
Mr. President, you may not recall, but in your first term, you actually sponsored the Department
of Energy. I found one.
The largest systems ever built. And thanks to your sponsorship, the Department of Energy owns the 3 top supercomputers in the world. Yep. And we build them with them. And these are systems that can do quintillion operations per second. And that means we can solve a lot of...
we made that possible. It's worked out very well. Good.
Solve problems. So now we're going to build the next generation again.
Good. Sounds good to me. Any questions, please?
Mr. President. Thank you. Can you explain a little more about this Venezuelan oil tanker and share a little more information?
Well, I'll let the people do it, but you see the result, and I guess they probably have released the pictures by now or pretty soon.
It's good. We're 20 points from the high. If we break the new high, we're at a chop city. There's a couple of opportunities for the crackheads to reemerge, and now we're even getting some M&A action still. That's kind of been the theme all month, low key.
A lot of countries have to hand over 5 years of social media history to get a tourist visa. Are you concerned at all that if that's implemented, there would be a decline in tourism next year? And what sort of material do you think is...
We're doing so well. We just want people to come over here and safe. We want safety. We want security. We want to make sure we're not letting...
Again, Broadcom and Oracle, you could take advantage of those premiums while the crackheads are going for the earnings. I can't believe those still filled. I'm talking shorting premium if you have any plays that were not as up from the run-up.
11,000.
You could literally get 90% back, and then they'll be $30 out the money.
Exactly half of them committed more than one.
Yeah, and then there was that one.
We're getting rid of them.
There was only the AIGs. You got to be a little careful on there.
We put them in jail because we're afraid.
Yeah, those already hit actually. Those are up 200%. Be careful.
We've taken a very tough stand, and you see where we've been. Like Washington, D.C. now, people walk down the streets, they go into restaurants.
Dude, that's crazy. That's what I'm saying. AIG is massive.
Beautiful thing to see.
So that's what kind of made me doubt it. But that's why it's hard to find a play on there. But yeah, you're getting the dynamic. And then there's a rackle.
A terrible thing happened 2 weeks ago with terrorism with regard to 2 National Guards people that are so phenomenal. One is no longer with us. And one, amazingly, we weren't looking with great hope on that, that Andrew. And today he got out of bed, actually, stood up, didn't say anything. It's a little early, but the chances of Andrew, other than his mother, who said, nope, he's going to be okay. His mother was the most positive person. And could be that she'll be right. It's pretty amazing. Made progress. It was, both of them were so badly hurt, we never thought that one could survive. So it looks like Andrew's doing pretty well.
The winner of the Nobel Prize dedicated the prize to you, the Nobel Peace Prize. And she left Venezuela at a great risk to make it to the ceremony. There is a risk she could be arrested, actually. What would happen if she's arrested? What message do you send, or would you send to Nicolas Maduro?
Well, arrested by who? The Nobel Prize Committee? That's probably the ones that would arrest. I don't know anything about it. She was very gracious. She said I should have gotten the Nobel Prize, and I don't, I'm doing this to save lives. I'm not doing it for any other reason. But no, I don't like if she would be arrested. No, I wouldn't be happy with that.
Mr. President, Senate Republicans currently have a healthcare proposal that would take away, let those ACA subsidies expire, and then put about $1,000 in people's HSAs. Do you think that is enough money, and how do you ensure that people who will see those tax subsidies expire won't see their healthcare costs skyrocket?
Well, the Unaffordable Care Act, which is Obamacare, they call it now the unaffordable because it's unaffordable. It used to be called the affordable, but it was never affordable. It was always bad. It was basically designed for the benefit of insurance companies. And what we're doing is we want all of the billions and billions of dollars that went to insurance companies to go directly to the people, and they can buy their own health care. And people love it. I don't know if the Democrats are going to
Chubb's still dying, AIG's still up.
How
much time you got? 12 minutes?
Obamacare was a
Finalize your plays, brother.
But we're going to see. I mean, the Republicans, I can tell you, want the money to go to the people. And we're winning that battle. The Democrats are having a hard time with it because they're in the pocket of the insurance companies. Yes, please.
Yes, we spoke to some European leaders today, I think, sir, about Ukraine.
I did.
Could you tell us about that? And is there a new revised peace plan that Ukraine has presented?
The leaders of France, we spoke to, and Germany, and UK. All very good leaders, very good friends of mine. And we discussed Ukraine in pretty strong words. And we'll see what happens. I mean, we're waiting to hear answers.
CB denies making an offer. Twitter
we're not spending any money in Ukraine.
It's up 6, so see if CB bounces.
Basically missiles and everything else to NATO. And NATO's paying us. And then they distribute it to who they want. I guess they're mostly distributing to Ukraine. But we're not spending money. But you know what we are? We're spending a lot of time and a lot of effort.
A lot of time.
Because last month, 27,000 soldiers were killed. Both, think of it, 27,000. That's if you take a football game and take half the stadium, that's 27,000. So 27,000 soldiers were killed. Russian and Ukrainian soldiers were killed. And I want to see that stop. We'll find out. Look, there are a lot of things happening right now. A lot of people say it's closer than it's ever been. It's a war that would have never started. If I were president, would have never started. It's a war that should never have started. But we'll have it figured out, I think, within a pretty short
time. You say very strong terms, sir. Could you explain that?
Well, I think we had some little disputes about people, and we're going to see how it turns out. And we said before we go to a meeting, we want to know some
chilling out, though,
things. They would
Next
like us to go to a
earnings,
meeting over
and
the
then
weekend
Friday.
in Europe.
If earnings are good, though, you might have a good Thursday.
we'll
But
make a
again,
determination
everybody
depending
has
on
picked up on the whole
what they come
Thursdays
back
are
with.
bad.
We don't want to be
Because, yeah, they
we don't
already
wanna be
affected the
wasting
dollar already, but
Sometimes you
given the
have to
way
let people
Powell
fight it
talked
out,
about it,
and
it might be a
sometimes
little
you don't.
limited
But the problem with
because,
letting
you know, if
people
they
fight
really
it
are
out
worried
is
about
you're
jobs loss
losing
and
thousands
that
of people
happens,
a
that
week.
would make the dollar kind of
It's ridiculous.
stabilize.
The whole thing is ridiculous.
So it'll be interesting, but for now, the immediate effect was a lower dollar.
That oil tanker.
You'll get that information later.
Okay, and have you spoken to Maduro since your last conversation?
No,
or
I
has it
haven't.
only been one conversation?
No.
And when you say that the European leaders want to have a meeting over the weekend, are you talking about with Zelensky? or
Okay,
with them?
10-minute read.
With Zelensky and us.
And you said in an interview yesterday that you think it's time for Zelensky to start accepting things. What things are you talking about?
I think he has to be realistic, and I do wonder about, how long is it going to be till they have an election? It's a democracy. It's a long time. They haven't had an election in a long time. It's losing a lot of people. And it's possible that the people, if you look at the polls, I will say 82%, there was a poll that came out, 82% of the people are demanding a settlement be made, Ukrainian people. They want to see a settlement be made. I understand that. They're losing thousands and thousands of people a week. They want to see it ended. And I do say, at what point, when do they have an election in Ukraine? That's not casting dispersions on anybody, but they do have a massive corruption situation going on there. And they do say, when are they, people are asking this question, when do they have an election? Are they going to have an election? Or are they going to just keep it going like this? So I think it's time to get that war settled. And I think it's a war that can be settled. But it takes two to tango.
Mr. President, Warner about the new owners of Warner Brothers Discovery to make changes at CNN, big changes, and have you spoken to Jared about it? What are you doing with him, or are you just sort of wall him off? Jared?
So what do you want to know?
What changes do you want to see at CNN?
What do you want to know? Well, I'm not involved in that. I will be probably involved, maybe involved in the decision. It depends. You have some good companies bidding on it. I think the people that have run CNN for the last long period of time are a disgrace. I think it's imperative that CNN be sold, because you certainly wouldn't want to put people, just leave those people with some money, good money, and CNN, so that they can spend even more money spreading poison.
I was on the
lies.
Law term only here, man. Come on.
I wouldn't want to see the same company.
That's what I'm saying. It's protecting you because they already moved. I thought we were late on it. I just somehow found one.
Now they don't have too much money.
So don't get clapped.
They have value, I guess, based on the bids. They've got value. But I think CNN should be sold, because I think
terrible
the
people.
CNN right now are either corrupt or incompetent.
And that'll be a factor in the decision making, because we've got some.
Well, in my mind, but I can be talked out of that by some very talented people that we have, antitrust people. But I just think that the people that have run CNN into the ground, by the way, nobody watches, very few people watch. I don't think they should be entrusted with running CNN any longer. So I think any deal should.
All right, get ready. Final 5 in 1 minute, and wrap it up. Again, if you're going to go for any of the earnings plays at this point, it's just about finalizing them and then set up for tomorrow. And let's see. Again, tomorrow's going to be 50-50. It's usually bad on Thursday.
Should be sold along with
but all of this played good. We'll see how people take it, what the bond effect is, and all of that. And then also the follow-up Fed speakers. They come in on Friday, I believe.
Are you worried at all about?
Well, 51 suspected cases of botulism from the FDA confirmed by exposure to ByHeart whole nutrition infant formula. Who makes that?
And even if you do a good job, and some people say we've done the best opening 10 months in history.
Who makes that? ByHeart infant formula?
Who's done better? We ended 8 wars. We have the strongest economy. We have $18 trillion coming.
Oh yeah, this had it in the beginning of the year. That was on the 3rd, but now it's raised to 51 people.
In your standard, right? Yes, sir. Even for that guy, 18.
I don't know if it's publicly traded.
But we have $18 trillion coming in. Pretty amazing, right?
Well, be careful. Botulism and infant formula.
Even a little piece of that. So we've done a great job. But for whatever reason, and nobody's been able to give me an answer. When you win the presidency, you seem to lose the midterms. Even if you win the presidency by a lot and you do a great job as president. Some presidents have done good, and they've lost, I think it's like 2 times.
ByHeart, ByHeart.
One.
It was announced on December 13th, but now the FDA is saying it raised to
I don't know why, but that seems
51 in 10 cases identified expanded from the definition.
We're doing great.
So there's something about an expanded definition of exposure. There's final 5.
Better with all this money pouring in. We have factories being built, and forget about AI. We have AI more than anybody. We're leading AI by a lot. But we have many car companies coming in from Canada, from Mexico. They're coming in from Mexico. They're coming in from Canada, from Japan, from Europe, all over Europe, Germany, all over Europe. We're doing great. But for whatever reason, It doesn't matter how well they're doing, you know, good and bad. The
private.
bad you understand, but even when a president is doing well, they seem to not do well in the midterms. So we're going to try and change it. There should be no reason for it. If anybody at the table can figure out, Bruce, a nice psychological reason, but so I want to win, and winning the midterms is important.
Give us a stimulus check.
People want us to win the midterms, and I think we have great spirit. We should win the midterms, yeah.
Under Joe Biden's administration, during COVID specifically, Biden removed the safety standards on abortion drugs. Now I'm hearing from a lot of pro-lifers that they're very anxious because yesterday Bloomberg reported that your FDA is slow walking a review of the abortion drugs that Secretary Kennedy promised.
Yeah,
How
I don't
soon
know.
do you want to see that?
I don't know.
I'll find out. I'll ask them.
Do you want to see it?
I don't think they're slow walking anything, but I'll find out. Yeah.
Mr. President,
Any update on the clashes between Thailand and Cambodia, sir?
Yeah, I think I'll have to make a phone call. I was going to say that the Thailand and Cambodia, one of the 8 that I settled, they've been fighting for a long time. They've been fighting for a very long time, many, many, many decades. But I got along great with both. I found they were 2 great leaders, 2 great people, and I settled it once. I think I can do it pretty quickly. I think we're scheduling a phone call tomorrow.
Mr. President.
With Thailand.
On the Fed chair.
With Thailand, if you know, just to answer, Steve, with Thailand and Cambodia, I think I can get them to stop fighting. Who else can do that? Think of it. Settled 8 wars. Every once in a while, one will flame up again, and I have to put out that little flame. I have to put it out, but we're going to put it out again. So I think I'm scheduled to speak to them tomorrow and see if I can. It was unfortunate what happened. I mean, I know exactly what happened. It got it started a little bit, but we'll see if we can put it out.
All right, Chad. Get ready. Not much time left. You should have finalized a good day of surprising Powell.
Well, you have to
couple
follow
more
the
earnings. I think the rest of this week got exciting. And
Follow-
then you're going to get
follow
some
it.
data
Get a
next
helicopter,
week too,
follow the
brother.
tanker.
Is it true?
So
But we're gonna-
Rapparoony,
I assume we're going to
Chad.
keep the.
Rapparoony.
On Fed Chair, Kevin Haskett said you're going to announce your decision within the next 2 weeks. Is that correct?
Maybe.
Are you doing your
Maybe.
interviews with finalists today?
Well, I'm meeting with Kevin Warsh today, so I'm meeting with him.
Oh, is that going to change the
I
odds?
sort of have a very good idea.
But
what-
you have
Again, I'm looking for somebody.
1 minute.
Just one, honestly, our rate should be much lower. Our rate should be the lowest rates in the world. Because all these countries that you see, low rates,
Wrap it up, Chad.
many of them are low because of us.
Let's go. It's got,
Because
just
they
got
suck so much money out of us. But that's not happening anymore. We should have the lowest rates in the world. And without us, none of them really exist as an economy. I mean, I can show you these really prime, really wonderful countries. They've had nothing but success. It's because they took so much out of the United States. I mean, it's one of those little problems. I want to see that when we do well, we're rewarded for doing well, not the way it's been for the last pretty long period of time.
Are you asking for finalists
Okay,
to
4,
pledge to lower rates?
3,
Are you asking these finalists
2,
to pledge to lower rates?
1.
I'll be asking questions.
Ding 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 ding.
Venezuela and Colombia. Can you talk to the president?
Let me get it, Gigi. If Oracle comes out soon, I'll stay, but I do got to get going.
A drug dealer?
No, I haven't really thought too much about him. He's been
Well, let me get a
fairly
good game,
hostile
bro. That was
to
a
the
good game, bro. I'm
United States.
surprised. And God bless you, baby. I hope y'all had a great year. Shout out to the long term. We'll see if the crackheads come back. Does the bubble reemerge? Does Powell remain in the truth?
They have cocaine factories that
Find out
they
on the
make
next
cocaine, as
episode.
you know,
But for
and they
real,
sell
God
it
bless
right
y'all,
into
man.
the
Members,
United States.
non-members,
He'll
every
wise
single
up.
one of y'all.
Or
I
he'll be
love you.
next. He'll be
Let's go,
next
baby.
soon.
Get ready for 2026.
And I hope he's
You got a
listening.
lot
He's
in
gonna be
store.
next.
Are you going to use the discipline or not?
Because we don't like people when they kill
Tell me.
people. And they sell drugs, they kill them in the United States. And Colombia is a major manufacturer of drugs, meaning cocaine in particular, as you know.
Thank you, Mr. President.
Thank you.
Multiple House Republicans in recent weeks, days, have been critical of Speaker Mike Johnson. I wanted to ask you if you're still confident in the Speaker to keep his conference together ahead of the midterms, and how often are you speaking about him?
I think Mike Johnson is great. You know, he's had a majority of 2, 3, 4. then back to 2. We actually
God
had
bless you,
1.
bro. Thank you for
So
not
we
getting
were
banned
one heart
today.
attack
You
away
guys know,
from
you
disaster.
see, there was thousands of
So
you, and
everybody
thank you. I hope
pray
you get a
for
long term
everybody's
if you're
health.
new.
I think Mike
But I hope you
Johnson's been a
realize, out of any
fantastic
stock
speaker.
chat
I
in
mean,
the
a very hard
world,
job because you
I've
don't
never
have a
seen.
small
Again, I banned
majority.
anybody that get in the
We
way.
got the biggest
Y'all
bill
were
in the
perfectly
history of
focused.
our country approved. The great big
Oh,
beautiful bill. I call it the
give
great
me
big beautiful
four,
bill.
give me
They're
4
different
lion,
names.
not 100 sheep.
To me, it's a great big
Give me
beautiful
people
bill 'cause it
focused
gives
on the goal,
the biggest
baby. Are you
tax
kidding
cuts
me?
in history, the biggest
Disgusting.
regulation cuts in history.
It was beautiful, Chad. Y'all
No
did great,
tax on
man.
tips,
So I
no
appreciate
tax
it.
on
I
Social
appreciate
Security,
it.
No tax on overtime.
That's what I'm
I
talking
think
about.
Mike Johnson's been a great speaker.
That's
I think
what
a
I'm
few
talking
people could have
about.
done that job.
Do you want to see another big package move through capital?
All right, when does Oracle come out?
Well, we don't need it because we got everything. You know, this was supposed to be 17 bills.
I gotta go, dude.
I think it was my idea, but you know, with the concurrence of people that have done this a long time, and I said, why don't we make it one bill because it's very hard to get things approved by the Democrats.
Oracle,
And
it just
worked out
comes out
because
at
there
2
was
p.m. for
something
the
good
call.
for everybody.
Oracle should
If
come
we
out any
would've done
minute now.
17 bills, we wouldn't have gotten a third of them approved. It was something great for everybody.
So they're
in the
estimating
one, you know, the great big
16.19.
beautiful bill.
Good to see you, Mr.
Plus or
President.
minus
I followed
14.
The event last night in Pennsylvania, huge crowd turned
Yeah,
out there.
big crowd.
It seemed like Rally Trump was in prime condition last night. You enjoyed it. Can you just give me your thoughts on that? Then I do have a question on the gold card.
Last night was amazing in Pennsylvania. We had a tremendous crowd. It was like freezing. And the
Cisco
people,
first
the
record high
thousands of
since
people on
March
the
of
sidewalk
2000.
trying to get in.
We're
the
back.
streets. It was an amazing
man, y'all did
evening,
great
actually,
today.
and I think people really enjoyed it. I enjoyed it. You could tell that.
I can tell that you enjoyed it.
I enjoyed it. I really did. Well, you know, it's easy to enjoy when you do a good job, and you know, when you can talk about things in a very positive way. It's hard not to say. We have potentially the greatest economic boom in the history of the world. It's being built right now. And when it opens, there will be nothing ever in history like what's happening in our country. And, you know, Washington, D.C. is safe, and Memphis is now. Look at Memphis. Crime is down 60% in Memphis. We just got there 3 weeks ago.
Nothing less. No, y'all did
And
good. I'm telling
we're
you.
going to have
I think I had to ban maybe
New
like
Orleans,
2 people.
New Orleans
It
was
was just the people trying to
was,
pump a play in
just
the middle of
sent a
power.
group of people there, and
That's it. Y'all did
crime is
great.
down 28,
I'm not saying I'm not gonna let
28%
some
in
people
about
hide
3
behind
days.
all the good people. Y'all lost them.
No, we do a
Stay
good job.
focused,
you
bro.
know,
You've already
and
been
these are
killer
central
all year.
casting people. These people are.
That's why I said if y'all want to
they're
go back,
very tough people. If they
you
have
want to go
be.
back,
They're
you
very
let me
good,
know.
They're great patriots,
But
but they are the
we
toughest.
either double down
and,
next year,
they
or
don't take any nonsense. And
we keep
every
going.
place we
Long-term
go,
prevails no matter
we
what.
knock down crime. Too bad that
All right, man,
we're not
Oracle was supposed to
invited
come
more
out.
into Chicago.
I'm not waiting
'cause
till 2. I gotta
we
go. I
could
gotta
save
take a dump.
Chicago very quickly.
Yeah, I
But
gotta
even that, we're
see, we got a
doing
little
it
bit of
on a
time.
minimal basis until, you know, at some point we'll just go in and do what we have to do if the governor doesn't wise up. They got a bad governor. They have
I
a
can't
bad
believe
mayor.
Powell today, bro.
I would say they're both incompetent.
He really did it like that.
It's hard to believe that people don't want to stop crime. We could stop the crime in Chicago in about 2 weeks. Go ahead.
My question is on the gold card. I apologize if I missed the answer to this. Is there a limit to how many gold cards these companies can buy?
Howard?
So the program is part of the already.
Oh, is Oracle out?
So we're just going to have
Yep.
great people
EPS
come into
226,
this
net
country.
6.1,
Average
revenue
green
was
card
16.1.
earn less
I think they missed a
than
little
average
bit.
American. So they were
Hold
more
on, software
likely to be on the
5.88.
dole
I don't
and
think
be
it was
on
that good. Why
our
did it make a pop? That could have
assistance
been a knee
programs
jerk.
than average Americans. And the idea is
Where'd it
President
go?
Trump, he wants to
Yeah,
raise
EPS was
bring in the
226.
best people into America. So
Oh, come on.
same visas.
Yeah, there it
now
is.
just full of the
Software was 6.0. They killed it on
Basically, it's a
software.
green card, but
And then
much
net
better.
was 6.1.
Much more
Cloud was
viable.
expected to be 792. They
stronger
came in at
path.
798.
And
Hardware
path
was
is a big deal.
776. Estimate was
Have to be good
722.
people, but much
Q2
stronger path. And it
5.88.
also, in addition to that, helps
On
companies.
software,
not
yeah, they
only for
beat on
companies,
everything, but it doesn't seem that
if,
big. I don't see the guidance yet.
IBM gets somebody #1 in his class at the Wharton School of Finance.
I'm gonna read
and
through
you're
it,
dying
but
to get
beat
the
on the
person,
numbers. But
you can't
remember, they
guarantee
need
the
a
person
fucking
stays in the
monster of a
country
beat.
because oftentimes they'll say, "I'm sorry, sir, you got to get out of here. You have 24 hours."
Performance
So
obligations are up
And he said, "Where's my
438 on the year, up to
Now,
523
IBM can buy a
billion.
card, and that
So they're
employee
still
can
guiding
be
the $500 billion, dog.
essentially, over a long period of time.
Mr. President, could you tell Bruce
gap?
it's so
Where's the
needed for the
margin?
companies. You know, it's needed for others, but really, it's basically
Operating
a
income was
much
6.6.
better form of a green card. And you can't get green cards; they are impossible to get.
Remaining
This is much
performance
better than a green
obligations
card.
increased 68 billion, up 15% sequentially, by new commitments
I
from
haven't
Nvidia and
spoken
Nvidia,
to-
Meta and
First of all,
Nvidia.
he's a friend. She's a friend. These are two
They
great
sold
people
Ampere
running.
because they no longer think it's strategic
The way
to
I
design
hate
and
to see them
manufacture our
running
own
against
chips
each
in
other.
our
I hope
cloud.
They're not going to be damaging each other. But Elisa's fantastic, and Bruce they're two fantastic people.
Multi-cloud database up
And,
817.
I always hate it when two very good friends of mine are running, and I hope there's not a lot
They
of
declared a
damage
quarterly
done.
dividend of
Sometimes it
0.5.
works
I'm
the
looking
other
for the
way.
guidance.
Victor ends up being much stronger because of it. A lot of times that happens in politics.
Everything was in line, and then again,
Well,
they're
I
still
think
guiding
in New York we have
the
a
half a
convention
trillion
toward the
shit.
end
I'm
of
looking for
February, and
next
I think
quarter.
You'll know pretty much at the end of February what's going to happen, and I'll probably have to, do what I want to do.
Interest expense was $1 billion.
I hope that he's running now.
So that's on that
She's
credit
running.
shit.
We have two very talented people. Either one should win against the Democrats.
Mr. President, the President legacy story lately focuses on one of your cabinet members predicting that you're going to fire this one or you're going to get rid of that one. Of all your cabinet members, who would you perceive as the most under attack?
Well, I think my cabinet's fantastic. I read these same stories that I'm unhappy with this one or that one, and I'm not. I think the cabinet's done a great job. I read
The Oracle's
a
committed to
story
a
that I was
policy of
unhappy
chip
with Pete because he
neutrality
was attacking
with
drug
all
dealers.
CPU and GPU
I
providers.
said, that's not exactly right. I would say very much the opposite. Pete Hegseth has been phenomenal. I read a story recently. I'm unhappy with Christie.
Yeah, Synopsys
I'm
will
so
move,
happy
but
with
again,
it.
Oracle's
We
the
have a
one with
closed
all the
border. We have a
private credit
border that's the
issues and
best
then
border in the history
the
of our
half a
country.
trillion
Why would I
craziness.
be unhappy? She's
Which again, that's
fantastic,
hitting the wire, and they're
No, we
still
have a
maintaining
fantastic
that. You're gonna have
cabinet.
to wait till the call. I don't see
Really
the
fantastic cabinet.
Q3 guide or
I
full year
mean,
guide
Lutnick
though.
I'll have to think about. No, can't have everything. Can't have everything. He's doing great. Well, Howard's done really well, and Scott's done really well. We have just a fantastic cabinet. I'll tell you who's doing a great job is Linda McMahon. We're bringing education back to the states where it belongs. Education is going. We can't do any worse than we're doing right now. Let the states run it. You know, if you go back to some of our states that have run so well, so good, I would say 40 of them. And then you'll have trouble with 5, and you'll have bigger
get on the
trouble
tax
with
shit, but-
another 5. But you have 35
Yeah, we
or
need to
40
see the
states
guidance
that will
yet.
run education.
So again,
as
they
good
talked
as
about the
Norway or
performance
Denmark.
obligations going even higher, but
Sweden.
we don't have a Q3 guide yet.
We have
So that's the only part that's missing.
Heads
Where's
of
the
the list
Dabe?
are Denmark, Norway.
I forgot about it,
Sweden,
Dabe.
A few others. I think if you go to Iowa and you go to Indiana and you go to, I can name a lot of states, I think it would be almost the equivalent or maybe better.
Adobe
But
guided
you
625
can't
to
run
638.
a school
Estimate was
system in Iowa from
623.
Washington, D.C.
Full year EPS 25.9 to 26.10. Estimate was 25.89. So I think they beat.
Well, we'll do it early
First
next
quarter
year.
455 to
And the board of
460.
peace are gonna. It'll be one of the most legendary boards.
Adjusted
ever.
was 550. Yeah, they
Everybody wants to be
beat.
on it. It's mostly going to be.
Oh
I
no,
guess,
no, no!
you know,
They
we
beat on
weren't
this
thinking
quarter. They
about
beat
it
on this
that way,
quarter
but
by
they
on
won
the
all
10
the-
cents above the high end. Full year
Basically,
1790 to
it'll be the heads
1810.
of the most important countries.
Mr. President.
They all want to be on. It wasn't really
Revenue
planned. We, you know, thought
6.91
we'd get very
or
distinguished
6.19.
people
They came in slightly
do
higher
that
above
kind
the
of
top
thing
end.
for a living.
But yeah, Adobe did good and guided
really,
up.
It looks like it's
Smaller
turning out to be-
margin, but
they want to
still
be
a
on the
beat.
heads, the kings and the presidents, prime ministers. They all want to be on the board of peace.
Mr. President, on the video follow-up to last night's rally, can you clarify, you have called the affordability crisis as a Democratic hoax, but you also want to make America affordable again?
No,
Can
the
you just
word
clarify?
that they use is a hoax, and because they're the ones that caused the problem. I'm talking about when you're trying to say it a different way. Now it's pretty simple.
It's
though,
pretty
because,
simple.
It's a hoax where they created the problem. They're the ones that gave the high prices. So when they use the word affordability, they shouldn't be using that word because they're the ones that created this problem. They created the highest inflation in history. and they created the highest prices in history. And now we have to get those things down. But when they go, they look and they say affordability. They never discuss it. They just say the election's about affordability.
We'll see. Oracle, you need the guide.
It may
so
very
far,
well
all
be. I
it
think
did
it's
was do
also
slightly
about
better,
still the
but
board.
the
You have
guide
to
is going to
remember the job.
determine
You
or
know,
not
the sad
whether
thing
they
is,
pump the future again.
for
The whole
7
chip
months,
neutrality
we had
thing is
no
interesting.
people come through our
And then
board.
Adobe
Nobody
did
could even
good,
believe it.
slight raise.
Zero.
Synopsis, I didn't
And
look
the
into
people
it
that
yet.
do that
Again,
are
I just
largely
care about the
Democrats,
broader
which
market now.
the people that
and
do
the rest of the
stats.
week. I'm
We've had
sure
no
we'll
people
find
come
out
other
by
than
the
coming in
morning.
Legally. But if you take a look, and nobody
So
wants to talk about it.
Chatadonia.
In fact, last night I said,
God bless you.
let me talk about the
God
border.
bless
My own
America.
people
Good
told me,
work
"Sir,
today.
nobody cares about the
If you
border
didn't get
anymore.
banned.
You've
And
fixed
thank
the
you for
problem."
your time.
I said, do I get a
Good
little
game to
credit
all of you.
for
Enjoy
fixing
your
a
night. I don't know if we're
disaster
going to have a
where
video
millions of
tonight. It'll all
people
depend. I'll let you know.
a
But
month would
I
flow
think our
into
work
our
is cut
country
out
and,
for us,
you know,
man.
from
I
prisons
think
and
very,
from
very
gangs
easy.
and from
We ride through.
drug
And then again,
dealers
next
and
week's
every
data,
mental
that's going to get a
institution.
little bit more interesting.
They
But
say, sir, you
I love
fixed
you,
the
Chad.
border.
God
Nobody
bless you.
cares.
Finger
I said,
to
"But I
the
can't."
sky.
It's sad when you fix
To
something.
God
and
be the
You can't
glory.
even use it. You can't talk
And
about
through
it.
the
My own
grace
people
of
don't want
God
to talk about
alone
it
every
anymore.
day.
But
Remember, you choose discipline.
very simply,
you choose direction. You
Democrats
choose your pain, brother.
created
Choose your
the worst
frustration.
crisis of inflation that this country's ever had. And with that came the highest prices that we've ever had.
All right, guys. You can
It's
go
the
see
best
Trump
time
if
of
you
year,
want.
Chad.
I gotta go.
God bless you.
Bye.
Hey, Merry Christmas from my family and missus. I hope you get the things that's not even on your wish list. I hope you find money doing laundry or the dishes. You a real one. The season will be great. I pray you never see traffic and you never run in late. When you ask your crush out, she'll say yes to the date. And nobody getting mad if you leave food up on your plate. Merry Christmas. It got meaning if you give it some. I'm always praying for you and I'm praying for your little ones. Every time you look them in the face, no, you never done. Nah. Let that be motivating. I hope every drink you get comes pre-shaken. I hope your Uber don't cancel and is really patient. If you lose your wallet, nobody'll take it. They'll return it. Yup. See, I'm just happy if you happy, G. Every sweet you'll eat this year be made from 0 calories. These are all the blessings that I wish for both you and me. So, welcome to the family. But I got a gift for the haters too. I hope everywhere you go runs out of room. I hope every song you sing is sung out of tune. Everyone is happy and you're the one that's in the mood. I hope the dinner great, you get there, they run out of food. I hope you step on Legos every time you enter rooms. I hope you meet a pretty girl, but it's just a dude. And he doesn't even tell you by date 2. Hope you can't find your keys cause someone probably stole your car. I hope your Christmas tree falls and then cause a fireball. Hope you find easy parking and then they tow your car. For no reason at all. I hope everywhere you go has construction. Everything you have to build will come with no instructions. I hope it doesn't function. I hope you miss the pothole, avoid it safely, then drive into the Hudson. I hope your family likes you less than all your cousins. I hope you're stressed, cause you're bad at trading options. Actually, I hope it hits, and then you get a gift. Then, you feel like you can't miss, then triple up your shit. Get in the money quick. Then Robinhood goes down and your orders don't submit. Then the problem still persists. By the time it gets refreshed, I hope all of it'll dip.